We will make a start. I declare open this hearing of the Economics Legislation Committee into the 2026-27 budget estimates. I begin by acknowledging the traditional custodians of the land on which we meet today and pay my respects to the elders past and present, and I extend that respect to any Aboriginal and Torres Strait Islander peoples here today. The committee is due to report to the Senate on Tuesday 23rd of June 2026. The committee has set 12th of June 26 as the date by which senators are to submit written questions on notice, and 24th of July 26 as the date for the return of answers to questions taken on notice. The committee's proceedings today will begin with Outcome 1, Program 1.3 of the Department of... no, this is not right. We will be starting with Treasury, and it is the Macroeconomic Group. The committee's proceedings today will be hearing in person and via video teleconference. Under Standing Order 26, the committee must take all evidence in public session. This includes answers to questions on notice. I remind all witnesses that in giving evidence to the committee that are protected by parliamentary privilege, it is unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence. The Senate has endorsed the following test of relevance of questions at estimates hearings. Any questions going to the operations or financial positions of the department and agencies which are seeking funds in estimates are relevant questions for the purposes of estimates hearings. I remind officers that the Senate has resolved that there are no areas in connection with the expenditure of public funds where any person has a discretion to withhold details or explanations from the Parliament or its committees unless the Parliament has expressly provided otherwise. The Senate has resolved also that an officer of the Department of the Commonwealth shall not be asked to give opinions on matter of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution does not preclude questions asking for explanations of policy or factual questions about when and how policies were adopted. Witnesses are reminded of the Senate order specifying the process by which a claim of public interest immunity should be raised, and I incorporate the public immunity statement into Hansard. I remind senators of their obligations under the Behaviour Code for Australian parliamentarians to treat witnesses with dignity, courtesy, fairness and respect. An officer called to answer a question for the first time should state their full name and the capacity in which they appear. And I remind committee members and witnesses who are appearing via video conference who are not speaking to mute their microphones. I now welcome Senator the Honourable Katie Gallagher, Minister for Finance, representing the Treasurer. Minister, do you wish to make an opening statement?
No, just my apologies for being held up a little bit.
Thank you. And I welcome the Secretary of the Australian Treasury, Jenny Wilkinson, and officers from the Department of Treasury, Macroeconomic Group and International Corporate and Investment Group. Secretary, do you wish to make an opening statement?
I do, Chair.
Please.
Thank you, Chair, and thank you to the committee for the opportunity to make this opening statement. I will focus my remarks on macroeconomic developments, particularly new information since the Treasurer delivered the federal budget on the 12th of May. As you're aware, I delivered an address to the Australian business economists last week that traversed a broader set of issues around the budget, and I'm happy to address any questions flowing from that address. The conflict in the Middle East continues to create a significant negative global supply shock. There are now clear signs that disruptions to production and trade of oil, liquefied natural gas and petrochemicals are pushing up global inflation and will challenge the outlook for global growth in 2026. Our assessment is that some of Australia's largest trading partners, such as China, Japan and Korea, possess large energy stockpiles and are relatively better positioned to navigate oil and fuel shortages. However, other Southeast Asian economies with lower energy reserves and slimmer fiscal buffers are vulnerable to shortfalls, with many already imposing measures to manage energy demand. Although central banks in many advanced economies have indicated that they will look through the direct inflationary impact of higher oil prices, recent communications confirm they will be concerned about persistent indirect price effects feeding through to core inflation measures. The impacts of the closure of the Strait of Hormuz has been cushioned to some extent by a drawdown of global inventories. But there are limits on the extent to which stocks can continue to be drawn down at current rates before operational stress levels increase. This also creates the risk of higher prices in the future if the current disruption continues, even if it doesn't escalate. Turning to the domestic economy, yesterday's release of the national accounts shows that the Australian economy grew by 0.3% in the March quarter and by 2.5% through the year. This solid result aligns broadly with our expectations at the time of finalising the budget, although the composition of growth varied a bit from our expectations. Growth in the quarter was driven almost entirely by new private demand, particularly new private business investment, which grew by 5.7% in the quarter, reflecting strong investment in data centres. Dwelling investment grew for the 9th consecutive quarter. Adverse weather across the quarter from cyclones Narelle, Koji and Mitchell impacted commodity exports, while government consumption and household discretionary consumption was subdued. The March quarter outcome captures only the effects of the first month of the Middle East conflict. The full impacts of the conflict will become clearer as we go forward. These will depend on a range of factors, including the duration and severity of the conflict and how businesses, households and governments respond. Treasury is monitoring the situation closely to assess the unfolding effects of the conflict on core measures of inflation and, of course, on domestic activity. There's increasing volatility emerging in some data, which in part reflects short-term behavioural changes over the first 2 months of the conflict, and it means it remains too early to tell the longer-term effects on outcomes. The ABS's monthly household spending indicator showed a 1.1% fall in nominal household spending in April. This was underpinned by a 4.7% fall in transport spending, particularly air transport, as travellers chose to refund or rebook trips in response to the Middle East conflict. Food spending was also down, but this reflected an unwinding of a spike in purchases in March. Spending on discretionary goods weakened in the month. On the business side, the ABS's latest capital expenditure release reported that businesses have upgraded their capital expenditure intentions for 25/6, suggesting a rise of 9.1% over the year, up from 3.8% in 24/25. This strong result is primarily driven by investment by large businesses in data centres and is consistent with the strength in business investment recorded in the March quarter. The ABS has recently reinstated its business conditions and sentiment release to gauge how businesses are managing the impacts of the Middle East conflict. The May survey reported that about 2/3 of businesses were making changes in response to fuel supply and prices. This included absorbing cost increases or delaying and cancelling investment. Smaller businesses appear to have been more heavily impacted. Small and medium businesses reported being more than twice as likely to face difficulties meeting upcoming financial commitments compared to larger businesses. To date, these impacts have not materialised through financial channels. Bank data suggests that business distress levels have remained broadly stable. Indicators such as overdraft utilisation and hardship applications have stabilised at levels similar to those recorded before the conflict. In light of the current challenges, the budget forecast that the growth of the Australian economy would ease to 1.75% in 26/27, and data received over the past month is consistent with that outcome. The effect of the Middle East conflict on both activity and business confidence is expected to weigh on employment growth over the period ahead. In April, employment fell and the unemployment rate increased to 4.5%. However, monthly labour force data can be noisy, and despite the fall in employment, total hours worked increased and underemployment fell. Timely indicators of labour demand, such as job advertisements, vacancies and survey measures of employment intentions, have softened through April, but do not point to a sharp deterioration in labour market conditions, and they remain consistent with the unemployment rate remaining below pre-pandemic levels. The budget forecasts the unemployment rate to stabilise around 4.5%, which remains low by historical standards. Wage growth has also remained broadly steady, consistent with unemployment near its sustainable rate. The wage price index increased by 0.8% in the March quarter to be 3.3% higher through the year. The budget forecasts a slight pickup in wage growth over the coming year due to increased employee wage claims stemming from the recent increases in inflation, and recent Fair Work Commission decisions, including the outcome of the annual wage review, the phasing out of junior pay rates for workers over the age of 18, and the gender undervaluation determination. The budget noted that the conflict in the Middle East caused a sharp increase in automotive fuel prices, driving a pickup in inflation in March. Inflation moderated to 4.2% through the year to April, largely due to some moderation in fuel prices. This reflected the combined impact of the temporary reduction in fuel excise and lower fuel import prices as regional refiners were able to adjust to disruption from the conflict. There was also some slight easing in some parts of the basket that had been experiencing elevated inflation prior to the conflict, including rents and some food items. Market services inflation, which has also been elevated, remained steady. However, the April inflation data did show some broadening in price pressures from the Middle East conflict. There were strong increases in the price of newly constructed dwellings and freight and logistics. The pass-through of price pressures to consumers is expected to continue in coming months, with food, air travel and construction prices likely to be affected. This is likely to impact both headline and underlying inflation. The budget forecasts headline inflation to peak at around 5% through the year to the June quarter. The budget does forecast inflation to moderate significantly in early 2027. However, the timing of the moderation will depend on the duration of the disruption to oil and broader petrochemical supply chains. So in closing, as highlighted in the budget documents, the Middle East conflict looms large over our outlook for the economy. There remains considerable uncertainty that is yet to resolve. On one other matter, since the last estimates meeting, Dr Guy Debelle has completed his independent review of the Australian Office of Financial Management's operations, and that's available on the Treasury website. It confirmed the AOFM is performing its functions effectively and is highly regarded by market participants. Treasury and the AOFM support the directions set out by the review and are working together to implement the review's recommendations, and a more detailed response will be made public in coming weeks. Thank you for the opportunity to give this opening statement, and I welcome your questions.
Thank you very much, Ms Wilkinson. We will throw to questions, but I will just, there's significant interest today, and I'm just going to say to senators at the outset, I'm going to move around in 10-minute blocks. I'll give everyone a warning at the 2-minute, at 8 minutes, so you've got 2 to go, and hopefully that means we'll run smoothly and everyone will get a chance to ask all the questions they need. So I'm going to start with Senator Walker.
Thank you. Thanks, Chair. Ms Wilkinson, the budget papers set out the need for tax reform as being driven by a number of factors across intergenerational equity, the differential tax treatment of assets, and Australia's long-running productivity challenge. Can you expand on your assessment of these challenges and why tax reform is an urgent priority for the government?
Thanks, Senator. So you're absolutely right that the budget papers set out the case for tax reform and explained in some detail the reforms that the government was announcing in the budget, both on tax but also on a range of broader issues. That was articulated in detail in Budget Statement 4, which goes through for both the changes to personal income taxes, the changes to business taxes, and then the changes which improve the simplification of the tax system. At the outset of Budget Statement 4, I guess there's a few issues that are raised, which are, if you like, the policy issues that I would suggest were front of mind for government in considering the sorts of reforms that they wanted to pursue in the budget. In relation to intergenerational equity, there are really 3 sets of issues which are raised and explained in Budget Statement 4. One of them is the long-standing decline in home ownership rates, which has been discussed in this committee over time and I think is widely understood across the committee. This has been a long-running trend. The second issue that's raised in terms of sort of a policy challenge is the pressure within the tax system on personal income tax rates. So personal income taxes going forward in terms of the pressure within the system to use personal income taxes to as part of revenue raising in order to fund government budgets. And then the third set of issues that's raised in Budget Statement 4 is it raises around a number of issues around what the concentration of the benefits of the current concessions are across different parts of the population. And in doing that work, Treasury has drawn upon what we now have available to us, which are longitudinal data sets that have enabled us to provide an assessment of what the total benefit of current concessions are by lifetime income percentiles. And that demonstrates that the most significant proportion of the concessions benefit those individuals in the top 1% of the lifetime income deciles. So if you like, those are the three policy issues which are presented in Budget Statement 4. The next, and they all go to the question of sort of different ways of thinking about questions of intergenerational equity. And in the address that I provided last week, I talked about the fact that when we think about equity, you can think about intergenerational equity, you can think about horizontal equity, you can think about vertical equity, and all of these are different ways that different people can come at this question. The second set of issues that are examined in Budget Statement 4 go to the question about whether the current capital gains tax arrangements, if you like, putting aside a view that one may have about their generosity or otherwise, but just whether they do a particularly effective job of adjusting for what's widely regarded as an important adjustment in terms of taxing capital gains on realisation, and that is how effectively they deal with inflation over time and across different assets. And there's quite a lot of analysis in there which just shows across different types of assets and across time that the 50% discount sometimes overcompensates for inflation and sometimes undercompensates for inflation. And by doing that, it raises the question about whether that's the most appropriate way of taxing capital gains and adjusting for inflation in order to have the tax system have as minimal impact as possible on decisions that individuals are taking on, say, investment decisions in the economy. So that's the second set of issues that are raised. The third set of issues which are raised in Budget Statement 4 just go to, again, a conversation that we've had at length in this committee around productivity and around what are the sorts of things that governments should be doing in order to try and support and encourage productivity growth. And there the government, first of all, is open, as it has been, about the productivity challenge, which has been with us for some time, and examining some of and it's led them to consider what are some of the perhaps more targeted ways in the tax system that innovative activities can be supported. And though I have to say, complemented by a range of other things which are announced in the budget to improve productivity growth.
Thank you. I'm sure, as you'd be aware, over the past 2 decades, house prices have risen about twice as fast as incomes. I know you already touched on this a little bit, but can you just talk us through how some of the budget measures, like changes to negative gearing and capital gains, is going to help level the playing field, especially for young people trying to get into the housing market?
So, Senator, again, these issues are covered in Budget Statement 4, and in particular Box 4.4 provides an overarching assessment of the housing measures in the budget. And I guess I would just draw out a couple of things. So first of all, and again, we've had this discussion at length in this committee, supply measures are really important in addressing housing issues in Australia. I think the government's been very clear about that. When we think about supply measures, the sorts of things that governments can do and have done include all of the investments that have been made in enabling infrastructure, but also the efforts to work with states and territories to improve timelines for things like approvals and to improve planning and zoning arrangements. And so supply, and the other thing is the work that we're doing on the National Construction Code. So there are lots of things that need to be done on the supply side. Tax measures can have an impact on supply. In particular, the tax measures which are announced in the budget will encourage investors who wish to invest in housing to invest in new housing as opposed to investing in, well, our assessment, I should say, is that it'll encourage them to invest in new housing as opposed to investing in existing dwellings. But I think also, as Box 4.4 outlines, our expectation is that probably one of the more significant impacts of the tax changes is really to actually shift the focus, shift the ownership structure of housing away from investors to some degree towards owner-occupiers. And we've done our best modelling in order to try and estimate what the sort of order of magnitude impacts of those shifts could be.
You're almost at time, so I'm going to rotate the call. Yep. Senator Chandler.
Thank you. Thank you, Chair, and thank you everyone for appearing today. First of all, I did want to flag Secretary out. Thanks for your response to the letter from myself and the Deputy Chair in relation to some information for the committee. Chair, if I may pass both my letter to the Secretary and the Secretary's letter to me for consideration for tabling, that would be appreciated. We'll ask some questions about that later on, but not first up. So
happy to table both of these along with your opening statement.
Wonderful. Sure. Thank you. Secretary, will the new capital gains tax system allow 5-year income averaging as the pre-1999 system did?
So, Senator, that has not been part of the announcements that the government's made in relation to the tax package.
So that's a no.
So that was not announced. That was not announced in the budget.
Did the pre-1999 system impose a minimum 30% tax rate as the new system will?
No, it didn't, Senator.
Thank you, Secretary. So, on the 19th of May, in relation to the CGT changes that he'd promised more than 50 times before the election not to introduce, the Prime Minister said, "Our policies are very clear. What we are simply doing is returning the CGT system to what was there before 1999. Is that an accurate statement, Secretary?
I think the PM was relating, comments there were relating to the indexation model of approach that was there in 1999.
There was no reference to the indexation model in the quote that I just read.
I mean, I don't know what comments, what you're drawing from there, but in all of my understanding of the comments that have been made about reverting back was around how you treat, essentially adjust for indexation, not have a flat 50% deduction.
What we are simply doing is returning the CGT system to what was there before 1999. That's not accurate, is it?
Well, again, I mean, my previous answer stands there. It relates to the reintroduction of the adjusting for indexation.
My understanding is that the Prime Minister repeated this reference in the Parliament last week. I think it was on the 26th of May. He restated this comment in the Parliament. Will he seek to correct the record in that regard? He said, "We are also changing the capital gains tax regime to go back to 1999. That seems pretty clear-cut.
Well, I've answered your question. I know what the Prime Minister's comments related to, and that was instead of having the changes that were introduced by Prime Minister Howard to have a 50% deduction for capital gains, that we are reverting to the model that existed before that, which is to essentially adjust for indexation and tax real gains.
There was no reference to any of that context, Minister, in the statement that the Prime Minister made in the House last week.
I don't have all the transcripts that you're reading from, but the government has been very clear when making statements like that it's relating to how you treat gains as opposed to the changes that were brought in by Prime Minister Howard and reverting back to the system that existed before that in the adjusting for indexation and then taxing real gains.
Well, Minister, you provided a lot of context around this statement, but do you think the Prime Minister understands what he's talking about?
Well, it's a bit early to start the patronising. I think we've got a long day ahead of us. The Prime Minister has been clear about the changes that we have brought in. He's been clear about why we're making those changes, and they've all been outlined in the budget papers.
Many young Australians won't remember the pre-1999 system, so I do want to ask some questions on their behalf. Under the tax changes that have been proposed, will young Australians have higher taxes imposed on them than previous generations, Secretary?
So, Senator, I went to this analysis in the speech that I presented last week. So I provided some analysis in that speech, so chart 11 in that speech, which shows what our best estimate is of the combined benefits of the tax reforms. So these are the changes to capital gains tax, negative gearing and trusts, and then the introduction of the Working Australia tax offset and the introduction of the instant deduction, and what impact they would have across different cohorts of young people. In order to do this analysis, you do have to look, if you like, over a period of time rather than just looking at a particular point in time to assess what the benefits are for young people. And that analysis shows that around 90% of young people will face lower taxes as a consequence of these changes, and that analysis is provided in that paper.
Will young Australians be paying more tax on investments they are making to save for their first home, Secretary?
Well, I think it's pretty hard to, to understand individual arrangements people might be making, but there's a range of programs and supports that the government offers to support people into home ownership, particularly young people into home ownership. There's the Super Saver scheme. There's also the 5% deposits, which have been very, very popular. And I saw the Minister for Housing give an update on those yesterday. But, it's a bit hard to sit here and respond to a vague kind of generalisation, that you've just put forward.
Well, Minister, this budget was, according to your government, about resetting intergenerational inequality. And so I'm just trying to seek an understanding, because it is difficult to understand based on some of the messaging about this budget, exactly how better off young people are going to be. Will there be 35,000 fewer homes for young Australians under these tax changes, Secretary?
So, Senator, perhaps if I just come back to your previous question, and we'll see if we can give you some data on this. So my understanding is that most young Australians earn most of their income through wages and salaries. And indeed, the analysis that I provided in the speech that I gave last week does indeed look at what the benefits are for young Australians in all of the different circumstances that we know that they are in, on the basis of the data that we have in the tax system. So that's one. So if you're trying to think about how most young Australians would save in order to place a deposit on a home, for example, most of that savings will come through wages and salaries. This is for most people. So that's the only thing I would say. Now, sorry, your other question was...
will there be 35,000 fewer homes for young Australians under these tax changes?
So, Senator, we've outlined in detail in box 4.4 what our best estimate is of the impact of all of the changes that the government announced in the budget would be on supply. We have done that modelling to the best of our abilities, and I think we've been kind of open and transparent in that box about what our assessment is. So what we have made clear in that box is that the direct impact of the tax changes might reduce supply by a bit, but that would be more than offset by what we estimate to be the impact on supply of the additional infrastructure measures, which were also announced in the budget. So looking at the budget overall, our assessment is that there would be an increase in net supply, which would be available to first-time buyers.
So if we 30,000 extra homes in the budget, when you read the budget in combination with the measures and some of the changes that we're bringing forward.
So does that mean then, Secretary, if you didn't make the CGT changes and the negative gearing changes, would there be 35,000 more houses for young Australians to potentially purchase?
So I think the strongest evidence that I would take from this box is that if those changes were not made, then there wouldn't be a switch of investors out of home ownership, which makes more houses available for people who wish to, for first-home buyers.
But you just said that the increase in supply is due to the infrastructure fund, not due to the tax changes.
So there's two things that are going on here. There's a question about supply and there's a question about the ownership mix, and those two things together will influence whether first-home buyers can get into the market.
Will rents be...
We're at 10 minutes, but I understand you're going to do another block for your team.
Oh,
and then we'll rotate.
Lovely. Thank you for my team for negotiating that. Will rents be higher for young Australians, Secretary?
So again, in box 4.4 in the budget, we outlined that our best estimate is that rents would be slightly lower, about $2 per week lower, as a consequence of just the tax changes. That doesn't take into account the broader impacts on supply.
Won't the minimum 30% tax element embedded in these measures particularly affect women, and especially younger women, who might be taking time out of the workforce in a given year for, say, maternity leave?
So, Senator, I don't have a breakdown of the impact of the minimum tax rate by those cohorts. The best evidence that we have, which is presented in the budget papers, again in BS4, is that most of the vast majority of capital gains flow to individuals with very high lifetime incomes. And in addition, that completely understandably, the existing arrangements provide a pretty significant incentive for individuals to defer the realisation of capital gains to periods when they have lower tax rates. And the 30% discount is really addressing both of those issues. Of course, the 30% minimum tax on real gains. Now, the 30% minimum tax on real gains also does not apply to individuals who are receiving benefits, including pensioners. So those individuals who, on account of the fact that they're receiving benefits, clearly have lower assets, would not have the minimum tax rate applied to them.
But am I correct in saying that it will increase taxes on those with the least income?
So as I've said, Senator, the way to think about this, I think that's not unreasonable, is to look at what the impact would be on individuals on the basis of their lifetime income, and that's what's highlighted in the budget papers.
Mm-hmm.
And there are exemptions for means-tested payments, and consulting on some of the final definitions of what payments are in and out. And I would also say in this budget, for women who are taking time out with caring roles, the paid parental leave scheme is expanded to 6 months fully under this arrangement, and also the tax cuts, the WATO and the instant deduction, in combination with the 3 previous tax cuts that have come, will proportionately support women to a greater degree than men, because women tend to earn their income through wages.
Minister, I recognise that you have somewhat shared portfolio responsibilities here because you are the Minister for Women, but can I just be very clear, has Treasury not undertaken analysis on these tax policies to see how they impact women specifically?
So, Senator, I think that there... can I take that on notice? That there is definitely some analysis in here about the potential impacts of things like, when you think about the tax package overall, we know that the distribution of labour income earners across the taxable income distribution is different for men and women. That is illustrated in chart 4.2. And so as a consequence of that, that means that certainly results in the reductions in personal tax rates on labour income being almost certainly more beneficial for women or secondary earners, and that certainly encourages labour force participation amongst secondary earners as well, we would think. So there is a range of analysis that we have done. I can take, if there's a specific question, I'm very happy to see what additional information could be provided potentially when Revenue Group comes back this evening.
And there's quite a lot of analysis in the Women's Budget Statement. I just don't have it with me, but obviously that's, we're able to have a further discussion. I'm just trying to get it brought up.
Thank you. Just before I move on to quickly cover off on a different topic, Secretary, I believe you just said that rents would be slightly lower, about $2 per week, lower as a consequence of just the tax changes. I think you meant to say $2 per week higher.
Oh, sorry, I did mean to say higher.
Thank
sorry,
you.
Senator. Yes.
Thank you. Correct. We can just have that correction. Thanks. Just moving on to another topic. The Treasurer on Monday released data that he claimed modelled the Coalition's alternative budget bottom line. I was wondering, Secretary, where the Treasury conducted that modelling.
No.
You did not?
No.
When did Treasury first learn of this government modelling of opposition policies?
Oh, well, the first I learned of it was when I read it when it was reported.
So it would be fair to say you don't have a copy of that modelling that you can table, Secretary, because it wasn't your department's modelling. Minister, do you have a copy of the modelling that you can table?
Thank you. Well, it wasn't hard to put together the commitments you've made around increasing funding to defence, your indexing of the income tax scales, the commitments around stealth bombers. I think your opposition to these reforms, unclear about your position on the NDIS, your changes to migration, your acceptance of building the inland rail to completion, which of course hits the budget to the order of $30 billion. I think it's quite legitimate for us to outline that publicly, that you've made a lot of commitments and you have no way of paying for them, and that when you put those two things together, you're going to have bigger deficits, bigger debt and larger interest payments on that debt. I think it's entirely reasonable in the public discourse that just as you make public statements about the decisions we take, that we are clear about the decisions that you've made and that you're accountable and responsible for them.
Minister, it sounds like you might have that modelling in front of you. You seem to know a lot about it. Are you in a position to table it?
Well,
Thank you, Chair.
I'm just reading out the commitments that you've made. So presumably you've got them as well, and that you've tallied them up, and that you would understand that the numbers that we are using are similar.
It's just be interested in your modelling, Minister.
Well, it's unclear whether you have PBO costings for them, but we have done. We have taken public commitments from your leader and other shadow ministers, and we have put that together and made public statements about what that means for the budget. And
but you're not going to table the modelling for the committee?
Well, it's not. It's, I would say that it would be more appropriate that you table the costings that you've done on the commitments you've made. We've simply made public statements about the commitments that you have already signed up to and the impact that will have on the budget. It's something that you make in relation to decisions we've made, and it's public statements that we've made in relation to decisions that you've made.
You're not going to provide this document to the committee, Minister?
I don't have a document.
Well, you were obviously just reading out a lot of detail about our policy commitments from Budget in Reply.
Well, it was more than your Budget in Reply.
That exists in the Treasurer's office because you sent it out to a journalist.
I don't know why you're so sensitive at being accountable for the commitments that you've made.
I'm asking you to be accountable for a
when you go out and say you're going to
office.
Construct inland rail to its completion, then you need to explain where you're finding the $30 billion from that's going to hit on the budget. The same with your opposition to these. The same with the opposition to the reforms that we've brought in, that we want to pass through the Parliament. If you're going to oppose them, which we understand you will, then be accountable for what that means. As you increase defence spending to 3%, you've got to explain. And so if you're not going to do it, it's no surprise that your political opponents will.
Secretary, can I ask you to confirm whether any Treasury officials provided input or advice to the Treasurer's office for this modelling that we've been discussing?
So, Senator, I am not aware of any Treasury officials providing input. I am happy to take that on notice to confirm that there was nothing was provided from the department.
Thank you.
I need to rotate the call.
It's a reasonable request of this committee to ask for the modelling that the government has done using taxpayer resources, apparently provided to the media. If it's good enough to provide to the media, it's good enough to provide to the Australian people. So just to be clear, Minister, we are asking, the committee is asking for you to table the modelling you have provided. The Treasury Secretary says, whether you have it now or not, that's not an excuse to not provide it to this committee. I note that the Treasury Secretary has provided the modelling that Treasury has done as a request from Senator Chandler. That is appreciated. I'm not exactly sure why the government can't hold itself to the same transparency requirements that the Treasury Department is.
I will provide all of the documents of the media statements that have been made by the opposition. That's what the committee is after.
No, we're going to rotate the call
I think
now.
we'll need to come back to this publicly. You need a
Senator McKim.
Thank Thanks. Morning, folks. We're moving to, as we've been discussing, a new capital gains tax treatment from 1 July next year. The legislation that the government's tabled carves out new residential dwellings from that and allows new residential dwellings to maintain access to the old arrangements. The legislation also allows the minister to determine other asset classes that will have access to, that could have access to the old arrangements, doesn't it?
I believe so.
Yeah. So, can I be clear? Does that power, or could that power be used by the minister to, for example, allow all shares held by donors to the Labor Party to have access to the extremely generous 50% concession?
So, Senator, I believe, so this may be a question that should be, in terms of the details of what the power allows, would be a question which I think would be most appropriate to be put to Revenue Group. The overarching point I would make, though, is that I believe these are disallowable instruments and they need to be consulted on. And so, therefore, there would be an opportunity for the Parliament to determine whether those instruments should be disallowed.
But there's no constraint on the kinds of assets that the Treasurer can determine should have access to the old, very generous 50% discount regime, is there?
So, as I say, I believe the constraint is that they would have to be listed in disallowable instruments, which could be disallowed by the Parliament.
But in terms of the minister's determination and the creation of these instruments and of this determination, the minister could, for example, decide to exempt all houses in Logan from the new arrangements and allow them to have access, owners of those houses, to have access to the old, very generous 50% discount. Could the minister not do that?
Senator, I don't have anything to add to what I've already said, which is that any arrangements like that would need to be made in a disallowable instrument, and it would be a matter for the Parliament to decide whether they were going to disallow such an instrument.
Well, my point, Ms Wilkinson, is there's no constraint in the legislation about what asset classes could be covered by those determinations, is there?
So I don't have the draft legislation in front of me, and I don't have the explanatory memorandum in front of me either, which usually goes to some of these sorts of questions. But can I suggest, Senator McKim, that you pursue this question with my colleagues from Revenue Group, including the people who've been involved in the drafting of the legislation, and they'll be available later tonight to answer these questions.
Well, I will do that, Ms Wilkinson, thank you. But I do note you've been very happy to field softball questions from Senator Walker, which is no criticism. That's her job as a Labor senator to ask those questions, but you fielded them at length. But you won't field questions from me.
I'm not saying that at all, Senator. I'm just saying I don't want to mislead the committee. I don't have the legislation in front of me. What I have provided you is the information that I'm aware of, which is that any of these arrangements would have to be in instruments. These instruments are disallowable, and therefore there is an opportunity for the Parliament to determine that whether they're appropriate or not.
Sure. Could I just ask one final question, then I've got a question for the Minister on this topic. But you've talked about Treasury modelling.
Yep.
Did you make any assumptions about the use of these discretionary powers by the Minister to underpin your modelling, or did you assume that no further assets would be carved out from the new provisions?
In relation to the modelling that we've done on the impact on the housing sector, no, we didn't assume that there were any further arrangements other than what was actually announced at budget. So the announced policy was to carve out new builds.
Yep. All right. So, Minister, is the government reforming capital gains tax treatment or not?
Are you kidding me?
Yeah.
What, is that a serious question?
No, it is a serious question because the obvious follow-up, Minister, is if you are, why have you created a power
commentary about our reforms to capital gains tax. You don't think that's real?
I'm asking you why you created a power to walk the entirety of your reforms back, and whether you would be worried, whether you are worried that a future Treasurer who might be from the Liberal Party or horrifically a One Nation Treasurer might use these powers to walk back some or all of your capital gains tax reforms.
Well, a couple of things there. You know, I understand there's going to be an inquiry on the ledge, and there's obviously officials who will be here later tonight that we can go through it in detail with. My experience being in the Senate is that the Senate has not been shy about disallowing things that it doesn't like, and you know, as we work through some of the detail of the legislation, the Parliament usually has a view about these things, Senator McKim, as you are explaining today. But the idea that we're not serious about reforming capital gains tax, negative gearing, and some of the other reforms to trusts, introducing a minimum 30% tax rate, I think, you know, it's laughable to sit here and suggest that we're not taking this seriously.
Minister, if you are serious about your reforms, why have you created a power in this legislation to allow your reforms to be walked back in the future? That is the question.
Well, that's, you know, that is not what it's about walking back. It is not unusual in complex legislation to have ministerial powers that usually have disallowance attached to them to deal with particular situations that might arise. It's not unusual for that, Senator McKim. You've heard from the Treasury Secretary, it hasn't, the impacts of these tax changes haven't been modified to take into account any large exemptions. That's not what this is about, but there, you know, is, and as we know from tax legislation coming through the Parliament, times when ministerial flexibility or capacity to make a decision is useful, and especially when it's got oversight by the Parliament, which it more often than usually does through disallowance.
2 minutes.
Minister, if you are serious about your reforms, why have you created powers that would allow a future Treasurer from whatever political party they belong to undermine the reforms? Why have you done that if you are serious about generational reform to the housing market?
Well, you know, again, I've answered the question. The Parliament, the control on the power in general in legislation exists in the Parliament. Are you going to, you know, the idea that the Greens political party
regrettably, we don't have the numbers in the Senate, Minister.
Would just sit there and kind of go, oh, well, whatever. I mean, it's laughable. The Senate, the chamber doesn't operate like that. We have disallowance motions on the notice paper virtually every week, every sitting week. It is not unusual to have ministerial powers in delegated legislation that are disallowable by the Senate. But, you know, obviously we've got a inquiry coming up. There's opportunity for further discussion. And, you know, the idea that we're not serious when, you know, we have a published budget that's raised quite a bit of interest, if you hadn't noticed, Senator McKim, over the last 3 weeks. The idea that we're not serious about this, you know, is just, I can't take it seriously.
Well, I don't mind whether you take it seriously or not, Minister. I'm simply asking the questions of why you've put provisions in this legislation to allow your reforms to be undermined.
Well, that's not what that power is about. I mean,
all right. Well, I'll just out of the interest of time, I'll move on. I wanted to ask the Secretary how long the Treasury expects that the grandfathering or the grandparenting of existing properties would take to wash out of the system. So we have a fairer housing market. Treasury told the previous CGT inquiry that the average time a property is held for is about 9 years. So will it take a decade to wash through? I mean, have you got modelling on what percentage of properties will wash out over what period of time?
So, Senator, as part of modelling these tax changes, I am sure that Revenue Group have taken into account their understanding of the average time it would take for these transitional arrangements, both in relation to the CGT, CGT provisions, and also the negative gearing transitional arrangements to flow through the system. My understanding is that most negatively geared properties become positively geared after, I think it's 6 to 7 years. And I thought that the average holding period was a bit less than 9 years, but I'm happy to stand corrected. So we have definitely taken those matters into account when we have done the costings on those two reforms. Again, I think Revenue Group would be in a position to provide you some more details about exactly what our assessment is as to how long it would take for most of these transitional arrangements to flow through the system, including taking into account behavioural change that we can reasonably expect might occur.
Thank you.
Thanks. Senator Hume?
Thank you, Chair. Secretary, I want to ask some questions about the speech that you gave to the Australian business economists defending the budget. There were some errors in that speech that I think you have already acknowledged. When did you first become aware of the error regarding the 5,700? Was it before you received a media inquiry about it, or were you aware of it after that? Was it the media inquiry that alerted you to that error?
Senator, I think I became aware of it. So after the speech was after I gave the speech was published, and as is usual Treasury practice, we published all of the graphs in the speech and the underlying data with those graphs. And there was an inquiry that then came in from someone in the media who asked about that particular figure in the speech.
Okay. How does an error like that occur?
Senator, all I can say is, I as Treasury Secretary, I acknowledge and I apologise for the error in the speech. My speech was fact-checked thoroughly, like all documents are. I corrected in the online version. As I said, I apologise for it. There were no errors in the modelling that we did. There were no errors in the graphs that were presented in that speech or in the budget documents. There were...
It was an error.
It was an error. I'm sorry, Senator. It was an error, and we decided we needed to correct it as quickly as possible.
So where did the 5,700 come from?
In the underlying spreadsheet that sat underneath that graph, there was one column which showed the impact of those three concessions: negative gearing, capital gains tax, and trust reforms before reform, and the other column which showed them after reforms. So the 5,700 figure was the figure after the reforms had been in place, and the 10,000, I think it's 10,200, was the figure before the reforms were in place.
Right. Okay. So this, the speech was also criticised for erroneously stating that the OECD had claimed that capital gains tax rates are irrelevant to investment decisions. And in fact, one of the authors of that OECD report said that that was highly misleading. Did you personally read that paper, the OECD paper, before citing it to make that claim?
Senator, I reject. I reject that was an error. That was raised with me again the day after the speech. I did not argue that they had no impact. The point I made, and I made it very clearly in the speech, is that OECD research suggests there is not clear evidence to support favourable treatment of capital gains to promote investment beyond compensating for inflation. I did not say that there was no case to provide concessional capital gains tax treatment. I was clear in the speech that there is a case to provide tax treatment that targets effectively innovative activity and a range of, and I highlighted in the speech, a range of the measures in the budget which are designed to do exactly that. I would also just, Senator, the criticism that has been raised was not by an author of this paper. He was somebody who was listed as a contributor to the paper. I understand he worked for a short time with the team in the OECD on this paper. We have had a discussion, we discussed before the speech, and we had a subsequent discussion after the speech with the authors of the OECD paper as to whether they considered that I misrepresented them at all in the speech, and they did not consider that I did.
Okay. So can I just be very clear, though? Did you read the paper?
Yes, I did.
You did? Okay, thank you.
Yes.
All right. And just let me also be clear, does any other country, major OECD country, have a capital gains tax regime like the one that's proposed for Australia?
So, Senator, one of the things that this paper does, which is useful, and it's one of the useful things that the OECD does, is that it can usefully provide information across a wide range of countries on all manner of things, but in this particular case, capital gains tax treatment. There are other countries in the OECD that tax real gains. Probably the most, the biggest country which continues to do that is Israel. So Israel taxes capital gains, taxes real capital gains. That's how their system works. There's a couple of other countries which are smaller countries that do it as well. But there are, if you look in this OECD report, you can see that there is a very wide variety of ways in which capital gains taxes are treated. There are some countries that tax full nominal gains at personal income tax rates. There are some countries that tax discounted gains, like Australia and Canada do currently. There are some countries that tax all capital gains at a flat rate. So there is no tax-free threshold in that case that applies to capital gains that are earned by individuals. So there is a very wide range of different capital gains tax treatments that are applied across OECD countries, would be the conclusion that I would draw from this analysis.
Okay, so on an effective capital gains tax rate, how does Australia's current regime compare to other countries? Is it substantially lower?
So the answer to that question, Senator, is that when you tax real gains as opposed to taxing nominal gains, it varies on your circumstances. So it varies on the rate of inflation in the economy, it varies on your rate of return, it varies on your tax rate and whether there is a flat tax rate or a tax rate which is progressive like we have in Australia's personal income tax system.
Yes, so effectively, the effective tax rate that we have at the moment on capital gains, is it lower, substantially lower than other countries, or is it comparable? Is it higher?
So it depends on the returns that you're talking about, and this is traversed in Budget Statement 4 and also in the document that Senator Chandler released. Unfortunately, Senator, I have to say that it depends. If one is going to accurately adjust real gains for inflation, then the effective tax rate will vary depending on the return that you have. So in the document that Senator Chandler tabled, you can see that if your rate of return... you've got to make a bunch of assumptions in order to draw any of these conclusions. And when you make those assumptions, that table shows that if you have a rate of return of around 3% in Australia, you would be taxed, and so in the background inflation rate is roughly 3%, then you would face no capital gains tax. If you were, and that is lower than every other country. If you have higher rates of return, then you face higher capital gains tax rates, and that varies across. Whether that is higher or lower than different countries, there's quite a wide variation, is the answer.
All right. My understanding is that that OECD paper suggests that Australia's current capital gains tax rate is higher in fact, than most comparable countries overall, our effective tax rate. And in fact, Israel, which I think was the one that you cited before, has a top tax rate of only 25%. So this will make us much less competitive internationally. And I think that that's probably what the question was going to, and something that we can come back to. But I wanted to specifically to ask you about the speech and the things that you said in that speech, and whether the Treasurer's Office have had input into that speech, whether they had input into your speech verbally or in writing or on any drafts.
As with any speech that's given by any senior official, it would be very unusual if you didn't have a discussion with the office around that speech. I drafted this speech with the assistance of a number of individuals who I've acknowledged. I drew upon Treasury analysis. This speech is my speech. They are my words. I was trying to use this speech as the Treasury Secretary usually does 3 weeks after the budget to provide for the Australian business economist audience an overarching sense of all of the different things that the government was grappling with in the budget.
So again, while I understand that you got input from various sources, and you would understand that within Treasury you have plenty of sources on which to draw, there are more than 1,600 people that work in Treasury. But did the Treasurer's Office have input into that speech?
Well, not in the sense that they did not tell me how to draft this speech. Did I have a discussion with the Treasurer's Office about the speech? Yes, as the Treasury Secretary always does.
Did they see a draft?
Yes.
Did they edit a draft?
No.
Did they make suggestions to you verbally?
Did we have a discussion about things that were in the... Yes, we had a discussion about the things I was covering in the speech, yes.
Did they suggest sources?
No.
Did they suggest changes?
Senator, I think it is completely usual, it is completely normal for a senior departmental official who's providing a public speech to have a discussion with their office about the information that's being contained in the speech. That does not mean that the speech... so the speech the objective of the speech was to try and explain, to the best of my abilities, what were the issues that the government was grappling with across the budget, and to explain some of the matters that have been raised, to respond to some of the matters that have been raised since the budget.
Okay. I've got some more questions, so please come back.
Okay. Senator McKim, I think you're going to share your block with Senator Pocock.
I am indeed. Secretary, after the budget was handed down, there was a surge in advertising encouraging people to set up self-managed super funds to invest in property. It was described as, a budget loophole. Are you aware of that?
Oh, in a very general sense, Senator, there were lots of media articles after the release of the budget. I think I recall an article along those lines.
So, there's an effective tax rate of 10% for self-managed super funds, and as you know, they have a unique ability to borrow to buy residential dwellings, which wasn't always the case, but is now. Removing limited recourse borrowing, which is the capacity for self-managed super funds to borrow to fund existing residential dwellings, has been a long-standing recommendation of financial regulators. Given the surge in advertising for this so-called budget loophole, do you think the government's tax changes strengthen the argument for that reform?
So I think you're asking me for an opinion, Senator.
Not allowed.
The one thing that I would say...
I'll ask you, Minister.
The one thing I would just say about any of these, any of these matters which are raised in relation to superannuation is just that, I think it's worth keeping in mind that there are a range of limits that are in place in relation to contributions to super, balances in super, and all of those have been tightened over the course of the past decade to put constraints on how easily people can access some of these sorts of opportunities. But that's just a general point about investing in superannuation.
Thank you. Does Treasury keep an eye on the amount of existing residential dwellings that are being purchased by SMSFs?
Senator, that again. Apologies, Senator. This is another question you're going to have to ask of Revenue Group. I don't recall the level of detail of information we have on SMSF asset holdings.
All right, thanks. Well, Minister, you've got a whole bunch of predatory spruikers advertising the dream of tax-advantaged home ownership of the existing residential dwellings by self-managed super funds. Would you agree that your government's changes to negative gearing and the capital gains tax have actually increased the need for reform in this area?
I acknowledge that this is something that you have raised a number of times, Senator McKim. That's not the advice that I have before me, but I understand it's something that a reform that you have been calling for. Obviously, we've got the legislation going through an inquiry before it reports back to the Senate, and I'm sure these matters can be explored thoroughly through that.
All right, thanks. I'm happy to see the rest of my speech.
Thank you. If I can go to the KPMG scandal that is unfolding as we're sitting here. Yesterday, the New South Wales Treasury Secretary called for a ban on all KPMG audit staff connected to the firm's audit scandal within the New South Wales public sector. Secretary, what steps have you taken in relation to KPMG?
So, Senator, I'll ask Ms DeMarco to speak to this. Can I just make... So, you and I have discussed at length the issues that Department of Finance managed in relation to PwC a couple of years ago. And so it is, of course, the responsibility of the Department of Finance rather than the Treasury to make decisions about the use of, how to respond to notifications of significant events like this one, which have come out of KPMG. I presume this was covered in the estimates that you had with Department of Finance, but Ms DeMarco can speak to Treasury in particular if
so
that
you
would
have
be a
not
benefit.
taken any steps yourself in relation to Treasury. You've made no contact with KPMG yourself. You haven't done anything on the of the kind that the New South Wales government have done.
So we have. So again, can I ask Ms DeMarco to answer the question?
Senator, for my Katrina DeMarco, Deputy Secretary, International Corporate and Investment Group. I might start by saying, Senator, in relation to KPMG and Treasury, we've only got 4 contracts with KPMG. Mm-hmm. All of them are up on AusTender, and none of these relate to audit, which is the quite specific remarks I think the New South Wales Treasury Secretary made. We have been in contact with KPMG. They advised us verbally last Friday. They then sent us an email yesterday which confirmed that none of the matters of the subject of the notice provided to Finance concern the performance of services to Treasury. They haven't advised of any inappropriate access to Treasury material, and none of the personnel subject of the concerns were engaged or in connection with services with the department. So we only received that letter yesterday. We'll be considering that letter. I think, as the Secretary said, that notice goes to Finance, who manage the Management Advisory Services panel through which we procured these services, or in some cases their financial tools, but none of the services they provide to us relate to audit.
The New South Wales Treasurer has asked KPMG to assure the New South Wales Treasury that there are no personnel involved in any of the matters underway in KPMG, which KPMG have themselves conceded were unethical practice, are engaged in any element or aspect of the work being done. Are you confident? Have you received that same assurance?
They have advised us, Senator, that none of the specified personnel or other personnel engaged in connection with the services to the department were involved.
And have you made a decision about whether you will sign any further contracts with KPMG?
Senator, we only received this advice last night. There's work being done through the Department of Finance. I think we've got to take this under advice and under consideration, but again, none of the services they provide to us relate to audit. Of the 4 contracts, 3 of them relate to financial tools, which we then use as part of preparing our statements, but no services are attached to those.
Ironically, KPMG offers a service for whistleblowers and the major banks are users, and the Reserve Bank has been a user of their Fair Call service. Extreme irony that there are public misdemeanours for internal inquiries and massive pursuit penalties paid by the whistleblower in this case. Have you had any engagement in relation to KPMG in relation to their whistleblowing provisions?
I'd have to take that on notice, Senator.
And if I can come back to you, Secretary, what is your feeling about the appetite for further contracts with KPMG within Treasury, given, as you said, we were here 2 years ago, Treasury prepared a paper which surfaced every one of the issues that has come to the surface in the last several weeks in relation to KPMG's misuse of information to win contracts, its mistreatment of whistleblowers, its extensive use, it's alleged, of AI to cheat on exams. What's your view about contracting with KPMG and their ethical standards?
2 minutes.
So, Senator, as Ms DeMarco has said, this is a rapidly, evolving set of circumstances. We will take advice. We will consider all of these matters. Treasury does not make extensive use of contracts anywhere in our business, and we don't have particularly extensive. Well, we don't have extensive contracts with KPMG, as Ms DeMarco has said. I do think I do take very seriously the importance of these businesses operating ethically. So these are absolutely considerations that we would take into account when deciding about contracting. But I'm afraid at this stage I just need a bit more time for us to consider what the most appropriate response is in these circumstances to this new information.
And what do you say to the Australian people who watched this unfold 2 years ago with PwC, now see a repeat performance on different issues but the same overall general problem? A set of practices and leaders who are ethically compromised as soon as they see a bucket of money on the opposite side of the room. They run towards it, and ethics are the casualty along the way. Your Treasury wrote a paper 2 years ago, and if I can come to you, Minister, May 2024, Regulation of Accounting, Auditing and Consulting Firms in Australia, which surfaced every one of the issues that are now selling newspapers around the country and fostering incredible outrage amongst Australians about and compromising essentially audit, a very important practice for the soundness of our financial system. 2 years and you re-elected as a government a paper that hasn't even been responded to by your government. We're waiting for action. What do you say to the Australians who are frustrated about your government's inaction landing us in yet another huge mess?
Well, I will rotate the call after
I don't
that
accept
question.
that we have landed anyone into a huge mess.
Your inaction has.
Well, I don't see how the issues relating to KPMG are not relating to any arrangement they have with the government. So we can't. I accept the committee report I think that you're referring to. I understood we had responded to that. If we haven't, I will try and get you a timetable for when that will occur, because we are working through as many as we can as fast as we can. And as I said last week in the committee, we keep this under advisement. That was the evidence from finance. They are engaging actively on this, looking at whether we do need to respond in specifics, but also how we respond more broadly.
Okay. I'm going to Senator
I'll come back. Thank you. I want to ask, I'm going to try and be quick here so that colleagues can ask questions as well. There were media reports citing ERC sources that the tax reform budget started in earnest this year. Is that correct, Secretary?
We don't usually go to, timing or decisions being made through budget processes, Senator Hume.
Well, I think some of them are quite important, Minister, because the media is also reporting that the tax package, which was clearly a broken promise, was done through hunting licences, so delegated to a minister or ministers. Is that correct, Secretary?
I don't think we go to how decisions are made through our budget process.
Well, this is very
Senator Hume.
important, Minister, because obviously this is a
It doesn't matter
centrepiece
whether
of a
you think
budget.
it's important. This is a position that governments of both persuasions, a position that we have taken.
I don't think that is entirely true, Minister. Secretary, you've been a public servant with a very long and esteemed career and you are very well respected. Can you tell me in earnest that a decision of this consequence, a tax change that is, in the government's own words, generational, although in everyone else's words it's disastrous, is typically dealt with through a hunting licence process?
Well, I mean, just to be clear, I am not confirming that in any way. And
are you denying it?
Well, what I'm saying is we don't go into budget decisions and how they're made. And I don't think you ever did either. But just to be clear, just because you've read something in a paper, Senator Hume, does not make it correct.
Can I ask, Secretary, whether it's your understanding that that's how the Henry Tax Review was implemented?
Senator, I wasn't in Treasury when the Henry Tax Review was...
or the Asprey Tax Review was implemented, or how GST reforms were implemented.
Again,
were any of those major reforms implemented through hunting licences?
What you read in the paper is correct, and I'm saying you should not presume that, Senator Hume.
For those playing along at home, when ERC delegates a spending decision to an individual minister or ministers, that's what a hunting licence is. It essentially is a delegated authority by the ERC, and it's normally done because there is a rushed process. Secretary, was there a rushed process for these tax reforms?
It was a busy budget session, you know, like it always is.
So yes, it was a rushed process.
No, I'm not saying that. I mean, I'm not saying that at all. We are a methodical government, we work through things, we go through the standard process to put a budget together. That was followed. It is the same as it has been in previous budgets that I have been involved in.
Secretary, you're wearing the reputational costs for these broken promises. Can you confirm that a usual ERC process was undertaken that didn't involve hunting licences for these tax reforms?
Well, one, I don't agree with how you were, the first part of your question around Secretary Wilkinson's reputation. Secretary Wilkinson is a highly regarded leader in the public service, and governments make decisions. The public service implements them, and we have been clear about why we've been making those. So if you have kind of criticisms of the decisions we've taken, they should be aimed at me.
I have plenty, and I do.
Yeah, good, excellent. In relation to how the budget was finalised, it went through the standard processes that I believe operated under your government and that have operated under ours.
So the media reports from Phil Curry are incorrect, that the tax reforms that you have announced as part of your budget did not go through a hunting licence process.
I am not confirming how budget decisions were made, Senator Hume. I've been clear about that. What I'm saying to you is just because you read it in the paper doesn't make it a fact.
Secretary, are there any other errors in the budget or its supporting analysis?
So, Senator, there are no errors in the budget.
Or its supporting analysis, but there were in your speech.
No, there was one figure that I used in my speech. As I said, that was not an error in the analysis. There was an error in that speech. I have apologised for it, and I have corrected the record.
Secretary, would you prefer that things are done through a standard ERC process rather than rushed through with hunting licences?
Well, again, I've answered this. There is a standard budget process. It was followed, Senator Hume.
I was asking the Secretary
I was there.
whether she prefers a standard ERC process or the use of hunting licences, rather than the use of hunting licences, particularly with generational reform.
I can assure you there was a standard budget process.
Chair, I'd like to see the call to Senator Bragg.
Thanks very much. Your regulatory impact statement on your new taxes. the supplementary analysis, capital gains tax, negative gearing. So you lean heavily here, or you lean heavily on the Senate Committee's report on the operation of the capital gains tax discount, which Senator Sharma and I sat on. But the report of that committee was like a radically different model than what the government has gone with in the budget. So in that model, that committee recommended like the abolition completely of the capital gains tax discount, and it also recommended that there be no grandfathering at all. So I wonder what sort of quality what is the quality of the regulatory impact analysis that has been done here? This is a 2-page piece of paper that says that another Senate report looked at something, but it looked at a different thing. Like, how sure are you that the compliance costs and everything else are, as you say they are, which I think you've assessed them to be about $88 million?
So, Senator, I don't have the impact statement in front of me. I'm wondering whether in sort of talking through the details of the impact assessment, can I ask you to take that up with Revenue Group? They will be here for a couple of hours later today, and they can walk through the work that they've done. The only other thing I would say, though, Senator, is that I think Budget Statement 4 provides a lot of detail in relation to these reforms, in relation to both the rationale for the reforms and for the expected impacts of the reforms. So that, but I'm not in a position to speak to the details of that impact assessment, but I can assure you that there will be officials that will be available.
I will do that with the greatest respect.
Appears.
But I just flag that as the Secretary, I mean, this is a regulatory impact statement into, in the government's own words, the biggest tax reform for a long time. It appears to have relied upon a committee which recommended something entirely different. So, like, it doesn't appear to be
I don't think that's
a reasonable.
the case.
It doesn't appear to me to be reasonable to have relied on a model where there was no grandfathering, where the CGT discount was abolished altogether when you've made your regulatory assessments.
Well, that was a committee, from memory, that you voted for to support, to establish with the Greens.
I'm not sure how that's relevant.
You know, I don't think anyone has said at any point that we were following that committee.
Well, your own RIS says you relied on that.
Well, of course
we table the RIS?
Yeah, of course we look at what happened in the committee, and we monitor it. Treasury participated in it from memory.
The Select Committee report on operation of CGT discount addresses impact analysis questions 1, 3, 5 and part of 2. Sounds like
I was making a different point.
Pretty good report.
I was making a different point, Senator Bragg, that the government's reforms, and I don't think anyone has said they were based on or endorsing, the committee that reported.
You sure?
Yeah, like in terms of what the decisions we've taken, we participated in that inquiry. We read the report.
Right.
We understood what the submissions that were being made, all of that. So it informed our thinking, but it wasn't. We did not adopt the report of the committee.
But okay, who signs off on these impact analysis then? The impact analysis.
So I believe impact analyses are signed off at the Deputy Secretary level.
So the Deputy Sec signed. So you didn't sign it off. Your person who reports to you signed it off.
I believe so.
Right. Well, it appears that you did rely on it quite heavily. So we'll probe that. I don't want to be unfair, Secretary.
Not informed by.
Well, we'll probe it later. But I just want to flag a couple of other high-level issues on the housing changes with the Secretary, because I think these are material issues. Then the question of a new build. So what is a new build?
So I think in the one of the tax explainers that's released alongside the budget provides
So, does it include
new
buildings that are
builds.
currently under construction?
So, new builds are residential properties which genuinely add to supply. This will include dwellings constructed on vacant land or where existing properties are demolished and replaced with a greater number of dwellings. Knockdowns, rebuilds or substantial renovations that do not increase supply will not be eligible. So
if
obviously this would take effect from when the legislation takes effect, which would be the 1 July 2027, and so those that detail will be clear.
Okay, so if is a building under construction today, if someone's building an apartment building today, does that classify as a new build?
Senator, I'm sorry, Senator, I can't answer that particular question for you. The new build exemption will apply. Just trying to.
Well, while you're working it out, Minister, do you know whether if I'm building an apartment building today somewhere in Western Sydney, does that classify as a new build under our new laws?
Well, the arrangements, as I understand them, is that between now and the 1st of July next year, current arrangements continue.
So new builds.
So a new build's in.
So new builds can continue to be negatively geared before and after 1 July 2027. So any new build today will continue to be treated as a new build.
Okay, so building under construction today is in.
That is my reading of the policy.
Okay.
That's right.
Okay. Now this is the key. This is the thing I really want to try and work out because there's been some confusion about this. So, is a granny flat in or out? Don't laugh. Granny flat's a very important part of future housing stock.
So, Senator,
you should strike him for contempt.
Great mystery. This is why.
Well, we've got to find out.
I'm told it's out. So, table 2 in the explainer.
Were we looking at the same? We're looking at the same page, or what are we looking at?
Page
here?
6
of the explainer
of the tax explainer, negative gearing and capital gain tax reform explainer.
The A4 document.
Okay. Well,
it says that a granny flat built adjacent to an established property that is not eligible for negative gearing is not an eligible new build.
It's not eligible.
No.
Okay. Well, I've had to look at a lot of different. Pardon?
It needs to be your last question.
Oh, okay. Well, look, I've had to look at a lot of different housings for my sins over the past few years, and one of the things I've found is that a granny flat could be lots of different things. So, your legislation says that a boat's out. Fair enough. You can't be a hotel. That's out, or a motel. I'm not sure there's many motels anymore. Anyway, there's maybe a few.
There are. Yeah.
And then a mobile tiny home is out. A mobile tiny house is out. But a granny flat could be a mobile tiny house. So
Senator,
is a granny flat in or out?
Well, as I say, I think the explainer says that a granny flat built adjacent to established property that is not eligible for negative gearing would not be eligible.
Okay, but the Minister said that they were in.
So I'm just, sorry, Senator, that's what the explainer says. The regulation that will determine what is the definition of a new build will outline all of these details.
Sorry, just to clarify, I just have to understand this. So the Minister told the House representatives that a granny flat was in.
Well, my understanding is the answer to her question was, the answer to that question she said was that a new build would be classified as, I don't have the exact words before me, but that genuinely adds to supply of housing. So I'm not sure she did say that.
So, Senator, I've just provided to you the information that's in the tax explainer, but I'm happy to take on notice, and the colleagues in Revenue Group can provide more detail later tonight if there's any other sort of finer details which have been agreed or clarified in things like the explanatory memorandum. I can't help you with that.
Thank you. And we're just tabling this document that you referred to earlier. Senator Chandler.
Thank you, Chair. And I do want to ask some questions about the document, Secretary, that you provided to the committee as per my letter entitled CGT Impacts on Investment and International Comparisons. I note that we'll have some technical questions about what's in this document, but we'll leave those for later today when Revenue comes on. Now, the Treasurer circulated this 6-page document and he to the media and said that it was to deal with misleading claims being made about the government's CGT changes and what the Prime Minister has referred to as a scare campaign about those changes. As you would note, once we became aware of this document existing, we wrote to you asking for it to be tabled. Secretary, who requested that this document be produced?
As is completely normal practice after reforms are announced by government, Treasury has continued to provide support to the office, to provide...
to the Treasurer's office?
To the Treasurer's office.
So the Treasurer's office requested for this document to be created?
So there were a range of discussions that we've had with the Treasurer's office since budget night, and we have continued to provide them with advice on sort of questions that are coming up through the broader debate.
So they specifically asked for this document to be produced in relation to questions?
I'd have to take that on notice. I certainly remember having discussions with the teams about drawing together all of the answers to some of these questions. So I can't say whether, originally did I request some of this information or was it requested at senior levels within Revenue Group, or was it, after reforms are announced, in my experience, there are lots of different questions that always come up, and it's just completely normal practice to, if you like, continue to build up materials which help unpack, understand, explain changes.
Okay. This document isn't dated. Can you tell me, Secretary, when it was prepared and when it was provided to the Treasurer's office?
I don't have that with you, but I'm very happy to take that on notice.
It's not particularly attributable to Treasury. There's no coat of arms. There's no reference to the department on it. Why isn't it clearly attributable to the Treasury?
I can't tell you, Senator. There wasn't a deliberate decision to.
It's not a standard letterhead that you would ordinarily provide this advice on.
Well, it's got official stamped on it.
It does, but that could have come. I'm not being tricky here, but that could have come from anywhere in government, Minister.
Well,
we provide advice to the Treasurer's office.
Advice.
Yeah, we provide advice to the Treasurer's office. I mean, this is our advice. If you want me to confirm that, this is advice from Treasury that we provided to the Treasurer's office. We provide advice to the Treasurer's office in emails, sometimes in written briefs, so advice can be provided in a range of different forms.
When were you made aware, Secretary, that this advice that you have produced would be sent to journalists?
I think I was made aware on the day that it was provided to journalists, but it might have been earlier, the day before or something. I'm happy to take that on notice.
So sorry, but to be clear, was this document produced with the intention that it would go to a journalist, or was it produced with the intention that it was a Q&A type document for people to use in relation to queries about the budget?
That's how I would characterise it. This document was an attempt to try and provide some additional QAs in relation to questions that had come up.
But you know, we do get a lot of questions from the media and have post-budget that we have to reply to.
Yes, I'm just trying to understand, Minister, whether this document was produced with the intention that it was going to go to a journalist for a story, or if it was provided to the Treasurer's office with general advice and the Treasurer's office then decided to send it to a journalist, because I think that goes to why was the document created.
No, the document was not created with that purpose. The document was created in order to pull together answers to a range of different questions that have been raised over time. It wasn't created for the purpose.
But this document hasn't been released publicly beyond the coalition asking for it in this committee today. Is that correct?
I understand. That's correct.
So it was requested by the Treasurer's office through an iterative process with you, Secretary, for seemingly the sole purpose of going to a journalist.
No.
And now the committee has asked for a copy.
No,
I don't think that's correct, Senator.
You knew it existed because you asked for it. Like it's
because it was referenced in an article. I read the good writing of Mr. Kehoe and thought, that would be an interesting document for us to have a look at.
Can I say, I'm just having a look at it now. These are all questions that have come up from various media outlets since the budget was tabled. So, the idea that Treasury would provide some information for the Treasurer to deal with inquiries is not unusual.
Okay. Last week, and the Minister will recall this on another topic, I asked colleagues at Finance about the changes to the fiscal strategy in this budget at page 87 in the Finance and Public Administration Committee, and some of the officials at the table said that the tax elements were best raised with you. The fiscal strategy was amended to include a simpler tax system, yet Treasury's own impact analysis shows $88 million per annum in compliance costs arising from these changes. Secretary, how does that square with a simpler tax system?
Senator, I'm just looking for my brief on fiscal strategy. I know I have it here somewhere. Senator, those estimates, again, we do need to confirm this with, and I don't want to mislead the committee, but there are a range of measures in the budget which go towards simplifying the tax system. These build on reforms which have been enacted by the ATO over a run of years, and when Mr Heffron is here later today, he can talk to you about the wide range of reforms that have been implemented by the ATO to simplify compliance with the tax system. For this particular there are some additional reforms that have been brought forward in this budget which further aim to simplify compliance with the tax system, and there are things like expanding the trial around dynamic instalment reporting. But the broader thing I would say is that, when we are looking at tax reform, and in particular in any tax reform, you have to think about how you manage transitional issues, and managing transitional issues unavoidably involve complexity, at least during that transitional period. And so there is, in any tax reform, and I think I said this in my speech last week, there are trade-offs between objectives of efficiency, of equity, and of simplicity and compliance within a tax system. And so these things together have to be considered as a whole in terms of how you balance those different objectives.
Secretary, the updated fiscal strategy also added lower the tax burden on working Australians, and given you reference that ABE speech. I note that you said in that speech the revenue needs to be raised from somewhere. Is that a more accurate reflection of the government's fiscal strategy?
Senator, the statement I made in the speech, I did make that statement in the speech, and all I was pointing out in that statement, because that sentence follows, and taxes applied to labour income also have economic impacts. So all it's recognising is that raising tax revenue unavoidably has economic impacts. That's the point that I was making in that particular reference. And so when considering the increasing burden on personal income taxes, as is highlighted in BS4, it raises a question about whether what is the most efficient way of raising the revenue that needs to be raised in order to fund government services. And that goes to the question about whether a more efficient tax system involves, if you like, a broader base, which is effectively what is being delivered through the reduction in the concessions that are available, which is in turn facilitating lower taxes on labour income. So these are trade-offs in any tax reform and any tax design.
But the reality is the government is in a position where they have to raise taxes to pay for their reckless spending.
No.
So all governments have to raise revenue, and as Treasury Secretary, one of the things that I would say is that it's important for governments to run responsible and sustainable fiscal positions, and I emphasise that in my speech.
Yeah, and over the medium term, as you know, in this budget, 2/3 of the improvement to the budget bottom line comes from savings that we've identified in this budget.
Thank you, Chair.
Senator Canavan.
Thank you very much, Chair. Secretary, do the tax changes in this budget increase productivity?
So, Senator, I would come at that in a number of different ways. There are a series of tax changes in this budget which are changes to the business tax system. Those are the reforms to the way in which losses are treated by businesses, changes to the R&D tax incentive, making the instant asset write-off permanent, and changes to things like thresholds for venture capital investment. All of those are targeted measures that I think are widely regarded as measures that will incentivise productive and innovative activity in the economy. That's the objective of all those reforms.
Not sure I got an answer, but let's be more specific then. Does the changes to negative gearing, capital gains tax and trusts, do any of those tax changes increase productivity?
So I think what we've outlined in Budget Paper 4 is that in our assessment, moving from a capital gains tax system that has a 50% discount to a capital gains tax system that has a discount which is based on inflation delivers a more accurate adjustment for inflation across different assets and different time periods and different individuals. And that, we would expect, would reduce the extent to which tax settings are affecting the way in which individuals are making decisions to allocate their savings to different investment opportunities.
I'm still not sure if I've got an answer. Have you actually modelled this? Have you got something quantitative that you've calculated to estimate the impact of those tax changes on capital gains, negative gearing and trusts on productivity?
So, Senator, we have assessed that there are, and we have drawn on the cross-country analysis that has been conducted by the OECD, which suggests, Senator, that there is really mixed empirical evidence about whether changes to tax arrangements, such as capital gains tax
Just
arrangements.
can I just get a clue? We've only got 5 minutes to go. I got a call late, but have you modelled it?
Senator Canavan, she's answering the question.
So our assessment is that taken together, the reforms announced in the budget should help Australia move towards the long-run productivity assumptions that we have in the medium-term forecasts.
I'm just struggling a little. Sorry, Secretary. Have you modelled, have you estimated the impact of these tax changes, the big ones, capital gains, negative gearing, trusts, on productivity?
So we have assessed that these would move the system towards an allocation of capital which is more consistent with where economic returns would suggest that investment should take place.
It doesn't give me a lot of confidence. I note in your speech, Secretary, you quoted 2 previous reforms, big reforms, the mid-80s introduction of capital gains and other things, and GST. In both of those changes, you referenced the fact that those changes materially reduced personal income tax rates. Mm-hmm. Do these tax changes materially reduce personal income tax rates for Australians?
So these tax changes reduce personal income taxes for most Australians in relation to the working Australian tax offset and the instant deduction.
Well, you're about to vote against it, from what I understand, Senator Canavan, so it's a bit rich.
Compared to the GST and Paul Keating's change, this is.
So it's not enough. But
is there any change to the rates? Is there any
it?
change to the personal income tax rates in these changes?
So the two changes that I've outlined are the 2 changes to personal income taxes. And the only other thing I would say, Senator, is that the government has stated that these reforms overall create the room for future
The big difference here is that these changes massively increase the amount of revenue that the government takes as a percentage of GDP, whereas the previous tax reforms you mentioned reduce it. And that is clearly why you can't say that these reforms will unequivocally increase productivity, because they lead to a bigger government, a higher tax rate on the Australian people. Basic economic theory says that cannot increase productivity.
So Senator, happy to have this discussion when we've got more time, but it is, so looking at so when you're thinking about aggregate savings outcomes, aggregate investment outcomes, aggregate productivity outcomes, it is important to draw upon the empirical evidence that exists, and the empirical evidence, as we read it, and we might have to agree to differ if you have a different view, is that there is mixed evidence about the impact of different concessional CGT arrangements on those outcomes, and overall, I guess where I would land.
Just to summarise those different views, what concerns me is that the biggest economic challenge we face is productivity. We have never experienced negative productivity growth over a 4-year period. The first 4 years of this government has not just been negative; it's a 5% drop. I know the government likes to choose a different base point. Doesn't matter.
Well,
it doesn't matter, Minister. It doesn't matter if it's 3% from June 2022. We have never had negative. Never over a 4-year period. So at least 3, maybe 5 if you want to count the 2 months in that other quarter that the government first came to power.
No responsibility for the decade of inaction.
It's off the charts. And I'm just trying to ask, maybe Minister, you can ask this. What elements of your budget help increase productivity?
So there is a glossy, A4 there. There are 15 different measures, but I can take you through them.
So there's a glossy.
If you like. Well,
how does a glossy help productivity?
Okay, Chair, I'm trying to answer his question seriously. He's trying to make a joke out of it.
It's a very serious question, Minister.
Well, it doesn't sound like you are.
Yeah, let's table the glossy.
I was wondering whether or not you had read it, actually, Senator Canavan.
I read it on the night, Minister.
Right,
Thank you for
you just asked me what in this budget focuses
this should be a
productivity.
If you had a plan, this would be a Dixer.
I can take you through them. I'm very happy to take you through all of the elements that are involved.
We've got 3 minutes. Senator Canavan, do you have one last question, or would you prefer that Senator Canavan go through a document you've already read?
But I'm happy to look. As I say, this should be an easy one for the Minister. If she had a plan to increase productivity, tell us the plan. Don't tell us as a glossy.
Senator Canavan,
tell people
that's
what the plan
this budget is about. I mean, and you are voting against it. So, you come in here and you raise the concerns and then you vote against the steps that we are taking. to improve productivity. You also don't take any responsibility for the decade of inaction. Well, look in housing, look in energy, look in regulatory reduction, look in the single national market. Look across the board. We're working across government. We bring a bill to the Parliament on regulatory reform. You vote against it, and then you come in here and complain.
Okay. Just look, with limited time left, but it was this morning. Spent time with a real estate agent, lovely real estate agent, Geraldine, 26 years here in the ACT. She's very concerned at the moment, and look, she recognised that things were doing it tough before the budget. There was anxiety there with the conflict in Iran, with escalating inflation even before that, interest rates going up. But what she expressed to us is that there's these changes, the uncertainty created by this budget has tipped people over the edge, has created enormous heartache. She's hardly getting people turning up to inspections now of homes. People are just so uncertain. Minister, did the government ever reflect during the budget process that perhaps this is not the right time for the biggest tax grab in Australian history, given the conflict in Iran, the inflation that's been unleashed by your government, the escalating interest rates that were already causing massive headaches for small businesses and average Australians?
Well, I don't accept the way that you have outlined the reforms. The government has thought about this very carefully. We have taken advice across government around the reasons, the decisions that we took. And this is genuinely about ensuring that the opportunity for home ownership is not just afforded to generations of my age, but continue to be available to generations younger than me. And we had a problem in this country around how the tax system was interacting with the housing system, and we have taken the decision to change that. I accept that those on this side of the committee room want to maintain the status quo. Understand that. We have decided that the status quo is not working. I think most Australians recognise that the status quo is not working, and that's why we've taken the decisions we have.
Thank you.
Thank you, Chair.
We've hit 11 now. Senator Bragg assures me he has one or two very short questions, if we can just prevail on.
Is that okay? Look, just in relation to what we were just talking about, the granny flats, just one on that and then one on something else. So the Minister for Housing, Ms O'Neill, told the House a couple of days ago when she was asked whether adding a second dwelling onto an existing title would qualify. And the Minister said that a new dwelling is one that genuinely adds to new housing supply. Or I guess that leaves some uncertainty as to whether a granny flat would be applicable under the new tax system. So just so we have it clear on the record, so are you saying a granny flat, if it was a second dwelling, would not clarify, would not fit the definition?
Senator, I don't want to mislead the committee. I've told you what the government announced and what was outlined in the tax explainer. These sorts of distinctions are always challenging to draw, and that's why they will be outlined in the regulations, which determine what defines a new build.
Okay, fine. Just finally, were you Secretary when the Economic Roundtable was on?
I was.
Yeah, okay. Mm-hmm. So that was in August last year?
Correct.
Yeah, so the Treasurer gave a press conference after that where he talked about the National Construction Code. I know it's a detailed issue, but he did refer to it in his speech after his roundtable in the Cabinet room. And in that, on the 21st of August last year, he said that he'd asked Claire O'Neill, the Housing Minister, to go away and do some stuff on the NCC. And then 2 days later, it was announced that the government would be freezing the NCC for 4 years. Yeah. Now, last night at Senate Estimates, Minister Ayres was in Minister Gallagher's chair and said very clearly that the 4-year freeze was not necessarily government policy anymore, that if there were opportunities to change the NCC, then they would be considered by the government, and the 4-year freeze was not necessarily the government's policy. So I don't really, have a strong view about what the policy is right now. I just want to know what the government's policy is, because it seemed to me that the proposal was that you were going to make some changes to the NCC this year, and then you were going to have a 4-year freeze. But as of last night, it appears that there may not be a 4-year freeze at all. So my question is, what is happening with the NCC?
So my understanding is that we have paused further updates to the National Construction Code, and that a review is being undertaken to look to modernise that code. I'll have to take on notice the detail of your question. I'm not sure whether the Minister...
I haven't seen what Senator Ayres said last night.
I watched a lot of last night, but I didn't actually see that part of the evidence last night. So I'm not quite sure at what time
I'll see if there's anything else I can provide. I haven't seen his comments from last night either, so I'll bring it back if I
I
can.
promise to be quick, so I better leave it there.
Okay, thank you so very much. We will say goodbye to Ms Wilkinson. We will take a short break now and come back at 11:20, but continue with Treasury Macroeconomic Group. Thank you. Right, we'll get started again. We'll continue with Treasury's Macroeconomic Group and International Corporate and Investment Group, and I'll go to Senator Chandler.
Thank you, Chair. I just have some questions, first of all, about interaction of the tax package with Treasury's forecast for GDP growth. Dr Grant, I think you're best placed to answer those questions. On page 187 of BP1, it says somewhat cryptically that the impact of the tax package is incorporated into Treasury's economic forecasts. How exactly has that been done in these forecasts?
Hi, Senator. Dr Angela Grant, Deputy Secretary, Macroeconomic Group. I will try to be brief and explain the forecasting framework as clearly as I can. So we have a detailed forecast period, and they're all of the components that are published in Budget Statement 2. And the way that we do those forecasts are a very detailed expenditure side GDP built up with different equations taking into account very near-term factors. Then we have a medium-term forecasting framework which looks much more at the supply side of the economy. So this is where we decide to close an output gap, and the medium-term forecasting framework gives us the trend output or potential output, and that is how we get the medium-term estimates in the budget. So when we make reference to the policy being in the forecast, that can affect the detailed forecast period most often. I'm not talking about this specific package, I'm going to come back to that. And then in the medium term, we're looking at the supply side of the economy, and if we feel confident that we have those parameters correct, as we close an output gap and take the economy back to steady state. So for the tax reform package contained in this budget, we in Macroeconomic Group did the policy modelling around the impacts on the housing sector. So the dwelling investment forecast will have taken those specifically into account. More broadly than that, as we then look at the supply side of the economy, where we do have an assumption for long-run productivity growth, we had to make an assessment as to what we thought policy might mean for our medium-term economic parameters, and that is how we took it into account in the more medium term. Sorry if that's not clear.
So, just so I'm clear, so does that mean that Treasury adjusted its forecast for individual forecast components like dwelling investment and then built those individual component forecasts up into the overall forecast?
In the detailed forecast period, we look at what we call the expenditure components of GDP. But as you can imagine, Senator, with policy, it is very hard for us in the macro group to go policy by policy as we build into the detailed forecast period. So we will look at specific policies that we believe will have an impact on certain series, in this case, dwelling investment. Another example is the fuel excise rebate cut. Like, we have to think about what that does in the near term. So we take into account where we can some of the very specific policies that we think will impact very specific parts of the economy, and then at a more aggregate level we think about policy in the whole. So for example, we have public final demand forecasts in the numbers. So in the near term, as detailed as we can be, and in the medium term at a much more aggregate level.
So was lower after-tax income for Australians included in your forecasts?
So the question, in terms of the tax package in this budget, we ensured that the modelling that we did on the housing part of it, so we did do the economic modelling on the property market impacts, we ensured that that was taken into account in the dwelling investment forecasts. And then more broadly, we assessed whether the tax package as a whole would whether we were comfortable with our assessment of the medium-term projections in light of that.
So over the near-term forecast period, which is the next 2 years, is that correct?
You are right.
Did the tax package result in higher or lower growth in GDP?
I'm going to ask Mr McDonald to confirm this. It, in aggregate, did not have a significant impact in the near term. in aggregate, you will have some impact in some of the components. This was we mainly looked at dwelling investment in light of the tax changes. But I might just ask Mr McDonald to confirm that I'm correct.
And sorry, when we say impact, are we talking about an increase or a decrease?
So in the dwelling investment space, the changes in the very near term, we look at the pipeline of investment. So when we then had a look at dwelling investment in 2027-28, the government's policies as a whole are positive for housing supply, but it didn't have a material impact on our assessment. But it was positive for housing supply overall in this budget. Does that...
Mr McDonald, did you have something you wanted to add?
So Hamish McDonald, First Assistant Secretary, Macroeconomic Conditions and Population Division. It might help to talk a bit more about what is going on in our dwelling investment forecasts, perhaps. So there's a few important factors that are driving our dwelling investment forecasts. Our forecast is that dwelling investment activity will grow by 5% in 25-26, and then that this will moderate slightly to 4% in 26-27 and 3.5% in 27-28. A few of the key factors that are really driving this, so the thing that's supporting it is the pipeline of approvals and commencements. So if we take building approvals, the most recent figures for that from April were a growth of 10.2% in private building approvals. That's in trend terms. And commencements also, the most recent figure for that, again in April, was 27.9% growth. 27.9% growth through the year to the December quarter. That's seasonally adjusted terms. So those two things were building up projected dwelling investment activity, and then some of the other important factors that are driving the forecast are that there's some the higher interest rate expectation and the market expectations, and the other thing is also the conflict in the Middle East is creating uncertainty and is also driving up some costs.
But this tax package, I'll start that again. This tax package isn't just related to housing assets, it's related to a far broader cross-section of assets and investments across the economy. So did that inform your modelling at all?
So in terms of the package as a whole, if you think about the start dates and when we in Macroeconomic Group would be assessing it, that kind of falls into the later part of the forward estimates and into the medium term in terms of how we put the numbers together. In that medium term, there is an assumption made of long-term productivity growth. That assumption is 1.2%. It takes around 5 years from the start of the forecast period for us to get to that. We assessed that this budget and all of the policies. So I should have said, Senator, we always try every budget to incorporate all policy in how we do the economic parameters. So our assessment is that the tax package and the budget policies more broadly, we felt confident with our assumption in the long term of productivity growth of 1.2%. That is how we looked at the...
But so there was no Treasury modelling of the impact on gross mixed income, noting that these tax changes impact small businesses and trusts. There was no broader modelling on the impact on households of higher taxes because it all hits in the medium term and you just can't figure out those numbers? Because we in Macro Group look very much at the aggregates for the macro economy in the medium term. The way we looked at it was to assess these policies and to assess what we thought that meant for potential growth over the medium term, because often these policies have impacts over the medium term that do build. So we didn't do so in the detailed forecast period, we don't hold that kind of level of disaggregation into the medium-term economic parameters. But your assessment is that these changes, thank you, Chair, your assessment is that these changes do nothing for productivity growth.
Our assessment was that they were consistent with a long-term productivity assumption of 1.2%.
So, but if you take them out, that assumption is still there, isn't it?
Yes, although the risks around that assumption change. So if there were not policies to work in order to increase productivity growth in Australia, then our assessment of the risks around the medium term would be different. Sorry, Senator, I was just going to say, I know that this often is hard as macroeconomists because we deal in such aggregates over the medium term. This is the way we do it.
Okay. Did the government include an overall growth dividend in its output forecast from its tax package?
So by growth dividend, because we assessed that this was consistent with the 1.2% long-term productivity assumption, and that long-term productivity assumption was contained in the MyEFO, there isn't a shift in the medium-term parameters as a result of the tax package.
Okay. Thank you, Chair.
Senator Pocock.
Thank you. I have some questions in relation to tax incentives related to our net zero goals. So a bit of a shift, sorry. I wanted to ask how you consider net zero targets when you look at tax incentives for solar. How does Treasury consider the government's net zero emissions or renewable energy targets when you look at existing or reforming tax policy?
I'm sorry, Senator. I think this might be best directed to Revenue Group, so they will be here later.
We were advised to ask it here specifically.
So Macroeconomic Group was responsible for the modelling of the government's net zero plan, so I could definitely talk about the macroeconomic or the modelling aspects of it. We also look after the central government function, which DQ looks after, so we can talk about that. But on all things tax incentives, much better directed to Revenue Group.
So have you done any modelling in relation to tax incentives which take account of net zero?
Not to my knowledge.
Okay. So I'll come back then to Revenue. Thank you.
Thank you.
Sorry, I'm done.
Oh, great. Thank you, Chair. Just before I move on to another topic, so closing out that previous line of questioning, you're saying that the tax changes have no impact on GDP growth over the next 2 years, and they also don't result in any change to the productivity profile for the medium term.
I'm saying they improve our confidence in the 1.2% long-term productivity assumption, but you are correct, there were not changes made to that assumption, although our confidence in that assumption is now different given the budget measures.
So doesn't that mean that these generational, supposedly, tax reforms will make no difference to expected growth at all in the near or the long term?
So if we think about the long-term productivity assumption of 1.2%, that is a lift in productivity. So there has been a lot of focus on recent productivity, and I say recent as in the last kind of decade, there has been a slowing in productivity growth. So what we had to do with all of the budget measures, not just the tax measures, but the entire set of budget policies, which included regulation reform, and we included some numbers around that. What we then have to do is assess what do we think is a good assessment of GDP growth in the medium term, and our view is that the 1.2% long-term productivity assumption is a good assessment for the Australian economy, and that will include the policies announced in this budget.
Okay, so just to go to another similar but slightly different topic, I know, Dr Grant, that there are significant differences between the RBA's near-term forecasts and the Treasury's. So in 2026-2027, the RBA is forecasting 1.4%, Treasury is forecasting 1.75%. In 2027-28, the RBA is again forecasting 1.4%, while Treasury is forecasting 2.25%. That's quite a significant and growing difference in the forecasts. Could you outline the reasons for this difference?
Certainly, Senator. So I would make a comment that the main difference in calendar year, so you are right with those years that you have quoted, in calendar year most of the difference lies in 2027. So I would make the point that the near-term view of both the RBA and Treasury is fairly similar, and the difference grows for 2027. You are correct that a difference of 0.75 of a percentage point is wide based on the previous forecasts that were published. It's not unprecedented. So it is normal for Treasury and the RBA to have differences of about 0.25 to 0.5 of a percentage point in growth in each year for different reasons. In terms of some of those reasons, it really goes down to often the factors are the same. It's just the size of impacts, when you think they will happen, and how much you put in the central case versus the risks. So it is common to see 0.25 to 0.5 percentage point difference in growth rates. We have before seen 0.75 of a percentage point difference over time, so it isn't unprecedented, these differences. I think it reflects heightened uncertainty in the current environment. It is difficult to forecast given all that is happening, particularly with the Middle East crisis and how you think the economy will be able to deal with the shock.
So what are the reasons for this specific difference in relation to these forecasts?
So at a broad level, Treasury's view is that the assumed fall in global oil prices, which of course it's a technical assumption what global oil prices do. We think that that fall in prices, which is very sharp based on this assumption, will support activity in the economy as households and businesses get some purchasing power back. We also think that they will respond well to some of the uncertainty that is coming from the Middle East shock, and that the strong incomes and the fact that the household saving rate is relatively high will support household consumption. So the other thing I do need to point out is we have a different view on capacity within the economy. It's slight, but it is there. In our forward estimates period, we believe potential growth is 2.25%. That is slightly higher than the RBA assessment, and this is just based on our sense of the supply side of the economy. So all of those kind of separate things add up to give you this kind of difference in our forecast.
But how can we expect monetary policy and fiscal policy to work hand in hand to beat inflation if there are such currently seemingly wide divergences in the outlook?
So I think, again, Senator, it highlights that both fiscal and monetary policy in the current environment have to be set with regard to the significant uncertainty. So often when these kind of differences show up in the forecasts done by big institutions that focus on doing these forecasts, that gives you a sign of the uncertainty in the current environment, and of course macro policy has to take that into account.
But isn't the concern that if Treasury's forecasts are somewhat rosier, then that might enable or can enable the government to make different fiscal policy decisions than they otherwise would if they were making those decisions based on the RBA's more pessimistic outlook? So the one thing you make a good point, Senator, in thinking about fiscal policy worries a lot more about nominal GDP as well. So it is the case that the uncertainty in the current environment is showing up in global commodity prices. And I would say that while the real GDP numbers between the two institutions have a 0.75 of a percentage point difference, we do have quite conservative assumptions on global commodity prices. So nominal GDP growth does, the growth rate itself slows quite a bit in 26-27 and 27-28. So I would simply highlight that this uncertainty and how you think about fiscal policy in the current environment
versus monetary policy also must pay regard to what is happening in global commodity prices.
Okay. I want to turn to the housing forecasts because, again, there is a slight difference there. So Treasury forecasts slowing growth but seemingly still solid in housing investment for the next 2 financial years, with year average growth of 4% in 26-27 and 3.5% in 27-28. By contrast, the RBA is forecasting a much sharper slowing in housing investment. And I do know they go year-end, not financial year, but their year-end number was just over 1% for 26 and a decline of 1.1% over 27. Even so, despite the slightly different measurement points, they're clearly inconsistent. Now, I also note the Financial Review have reported a range of independent economists that are saying that the differences amount to a difference in forecasting of Treasury, saying there will be $14 billion more in dwelling investment over the next 2 years compared with the RBA. Do you agree with that $14 billion estimate?
We don't tend to look at these things in levels, but I'm sure that whoever calculated it, all you do is you take the level from the last financial year, which is published, and you grow it by our growth rates. I can only assume that's what they have done. That would...
Okay.
Yes.
So how much higher in percentage terms is the Treasury forecasting dwelling investment to be in mid-2028 relative to the RBA?
So the first thing that I do... You made the comment yourself, Senator, but the RBA publish year-ended numbers, we publish year-average numbers. They do matter quite a bit for how you think about doing comparisons. So, in a sense, very difficult for me to draw very specific differences between Treasury and the RBA. But I do want to make the point that since the MYEFO, we did revise down the dwelling investment growth forecasts. So we revised growth in 2025-26 was revised down from 5.5% to 5%. And in 2026-27, we made a sizable downgrade from 6% to 4%. That is largely reflective of a technical assumption around interest rates, but also some costs in the construction sector, particularly around the Middle East crisis, because it's having an impact on plastics costs, which does affect the construction sector. So the other thing I would say is that if you look at this sector over time, it's a difficult sector to forecast, and you will see relatively big moves in both the RBA and the Treasury forecast for this sector. It is one that you really watch in the near term and try to translate carefully, but it's lumpy. So the other thing, like often people will talk about completions, and completions matter, but in the national accounts, the Australian Bureau of Statistics is trying to count activity in each quarter. So it is a difficult forecast in this space.
And
last question.
Okay, thank you. I've sort of made it sound like you and the RBA are doing this forecasting in complete isolation from each other, and obviously that's not the case because you have your joint economic forecast group that meets regularly. So based on those meetings and in the lead up to the budget, why is it that the RBA is predicting no growth in dwelling investment over the next 2 years, and why is it that Treasury's modelling or Treasury's forecast appears to be, notwithstanding what you've just said, significantly more bullish than the RBA's?
So you are right, Senator, that we do speak to the RBA regularly. We don't, of course, do that to line up our forecast. We do that to understand what each different forecasting team is thinking about and assessing. The factors that are being assessed by the RBA and Treasury in the dwelling investment market are very similar. It is just a different assessment of how we think that impacts activity. The other thing I would say is that when the RBA published the May statement on monetary policy, it was before the budget. But like I've said to you previously, policy isn't having a big impact on our forecast. So that's not the reason for the difference, but it is, well, at least that's not a significant reason for the difference, but it is a piece of information that we had that they didn't when they published their numbers. This is largely just a different assessment on how much interest rates and capacity costs are going to impact the dwelling investment sector over the next few years.
Okay. I'll rotate, Chair.
Thank you. Senator Bragg.
I just want to ask you also ask some questions about dwelling investment. So, what's the government's current investment in the housing system, Minister?
In all of our different packages,
Yep.
I think it's in the order of 47 billion.
47 billion. Wow, it's a lot of money.
It is.
So
that's how seriously we're taking it, Senator Bragg.
I hear you bragging about this all the time.
Well, I don't think that's a fair characterisation. It's one of our.
Don't worry.
It's one of our key priorities.
So, what's the number? 47 million?
Just check. Yes.
$47 billion.
Yes,
Okay.
I was correct.
And as a result of that investment, what's the Australian community actually going to receive in terms of housing outcomes?
Well, I think you covered this all last night. Is my understanding. You had 2 hours or so of.
We're here in macro group and we're looking at the forecasts, and the forecasts are not good. Forecasts are bad. In fact, as you just heard, they're going negative in 27 actually. So most people will look at this. I mean, as you know, I'm not a very smart person, but I think be reasonable assumption to make that if you spend a lot of money on something, you get more of it, not less. So I guess I'm asking you, as the Minister at the table here in Macro, whether this is a good return for taxpayers for the $47 billion.
Well, yes, I certainly support all of the investment going in, and I think you've heard last night the amount of new social and affordable homes that are being provided, whether it be through the HAF, the 5% deposits, any of the programs. We believe they are being successful and they are genuinely assisting Australians either into home ownership or to provide more opportunities for people in the social and affordable end. Senator Bragg, I know you've had a long-standing opposition to our investments in housing. We know you took a different approach when you were in government, i.e. you ignored it essentially, and over a decade or 9 years in government, I think it was less than 400 social and affordable housing additional supply that was provided under your government. You know, we're taking a different approach and we are investing heavily. The Commonwealth is back at the table in terms of having a role to play in the housing sector. We're working with states and territories, we're working with local government, we're looking at regulation, you know, you name it. I don't think there is an area that we aren't focused on. And it is already...
But why are we getting fewer houses? So we used to get 200,000 houses a year on average. Now we're down to 170,000. What are the numbers you're forecasting in the Treasury then, Dr Grant, in terms of the annualised figures over the next couple of years?
So in completions, Senator?
Completions, yeah. I'm not interested in approvals. I mean, you know, the ministers talk about approvals and other things.
Why wouldn't you be interested in approvals
because we want buildings to be finished.
Because you're only interested in what's convenient for your political argument.
No.
Yeah.
Do you want to know why? Because just because you get something approved doesn't mean it's built. One of the big issues in housing is the viability of actually building a home because of all the various constraints on that particular market. It doesn't mean that every time an approval is granted that a house will be completed.
Well, I can tell you that commencements are up 26% on the same time last year.
Well, that's
when we came to government, they were down 29% on the year before.
That's not right.
Well, Senator Bragg, that is the advice that I have. We're investing 9 times what you did in a whole decade, and we are building more homes and making it easier for first home buyers.
Doesn't mean you get more stuff.
Well, we are delivering more housing, Senator Bragg.
But you're not. That's factually correct.
For the areas that the Commonwealth is investing in, it is additional housing that is supporting Australians.
How many
and
houses
whether
were
it
built in
be
2022?
Whether it be through access to 5% deposits, which you also oppose.
That's not supply. It's a demand side measure.
Well, no. I'm saying that we are coming at this from a number of angles, and it is about ensuring that people are able to purchase a home. That is part of our approach. HAF is delivering new and affordable social housing, and there's more rounds of that coming through. We're working with states and territories on the sort of the last mile, the how do you do all that in enabling infrastructure. The tax reform package is part of it. There isn't an area that we are not actively engaged in working with stakeholders on, and we are starting to see the results. I would also point out about the delays that you were behind in actually allowing the establishment of some of our programs, but now that they are up and running, we will continue to see increased housing.
Is it all right if I ask a question? Thanks, Minister, for all that. I think the official was about to give us the numbers. So, Dr. Grant?
So, Senator, you are right that we have got to keep our eye on the entire pipeline when it comes to forecasting dwelling investment. Of course, that begins with approvals, and some share of those don't start, but a lot do. From the approvals data, we do know that they are 10.2% higher through the year in trend terms. So from an approval, it goes to a commencement. There are a lot of buildings commenced at the moment within the Australian economy. So the Minister just referenced the figure. So total commencements through the year, over 25% growth. And from commencements, they become completions. There is a lag, and there is a long lag between an approval to a completion. That lag has lengthened in recent years. There are some capacity cost pressures in the housing market, but for a variety of reasons that can shift. So we do our best to try to translate from that entire pipeline into activity, because as that house is partly built, that should count into activity in the national accounts.
I understand that, but let's not be too, I'm trying to ascertain whether the taxpayer is gaining value from this government's large expenditure on housing, okay? Now, between 2013 and 2022, the nation was able to supply 200,000 houses on average over that period.
How much did your government do?
Right.
What did your government contribute to that?
That's the record, right?
Yeah, nothing.
That's the record.
Nothing.
Now, since you've come to office, you've collapsed that down by 30,000, and now we get 170,000 on average under your 4 years of your government, okay? And my point is, you're spending more money and we're getting fewer houses actually delivered. So,
well, in terms of what the government's investment are delivering, we are delivering
where the money's
thousands more than what you delivered when you were in government.
I just gave you the ABS figures.
Well, and I'm saying the housing that is being delivered via government investment is thousands.
I'm not talking about government housing.
Right.
You know that.
I'm not. No, housing that's delivered through government investment.
No one's talking about that.
Well, yes, our programs are talking to that. I know you don't care about people who might require social and affordable housing.
Eat the poor.
But, well, that's what you're saying. You just said to me, I don't care about that.
That's not what I'm saying.
So I am explaining that when you compare what you did in government to what we did in government, we have thousands, tens of thousands of housing being delivered, already delivered, and more thousands to come because of the investment that this government has made.
Do most Australians live in a government house or in a private house?
Senator Bragg, I am explaining. You are trying to draw a line between the investments that are being made through the housing program and the number of housing. And I am saying that you can directly link the investments we're being made into the housing that's being delivered. Now, you might not like that. I understand it. I understand there's a different view about how to approach this challenge, i.e. when you were in government you did nothing, and we think the Commonwealth has an active role to play and we are playing it.
Okay, so
last question.
In terms of the 1.2 million forecast, because over the course of this government there have been 30,000 fewer houses supplied. Does Macro Group have any view about whether that 1.2 million forecast will be met over the period of the accord?
So again, Senator, Housing Group is better. So we are not looking at this through a completions lens. We very much focus on the national accounts measure.
Okay, so you obviously have just canvassed the RBA's dwelling investment forecasts. So what sort of a sense does that give you about the longer-term investment profile?
I'm sorry, Senator.
Well, do you agree with the RBA's figures or not? I mean, I know you've just canvassed this, but I was just trying to get a clear answer. Do you...
Well, the RBA's
do you have any reason
figures.
to suggest the RBA's figures are...
Well, you can ask the bank about that when they come this afternoon. Treasury has its forecasts. The bank has theirs.
Well, they're quite different.
Senator, we're going to have to rotate the calls. So, Senator Sharma, you're up next.
Thank you. I just have some questions. Forgive me if I've gone in the wrong place here, but about the AOFM review conducted by Secretary DeBell. Guy DeBell. Is corporate able to answer that, or where does that sit within?
It might depend, Senator.
Okay.
If they're in relation to the contractual arrangements, I can, but if they're in relation to the response, I think Mr White with Fiscal Group would be best placed to answer them.
Fiscal Group?
Yeah.
Okay, so about the receipt of the report recommendations, all of that is Fiscal Group?
Probably best with Mr White.
Okay. Just quickly, has the contractual relationship with Mr DeBell concluded?
Yes.
It has. Okay. All right, then I'll come back to Fiscal on this topic then.
Great. Senator Pocock?
Yes. One quick question. I wondered, can you give us any correspondence that you've had between Treasury and KPMG since the whistleblower allegations surfaced in the Senate in March?
Sorry, Senator, can you repeat the question?
Any correspondence between Treasury and KPMG since the whistleblower allegations surfaced in the Senate?
Yeah, Senator.
I think the 25th of March.
Yeah, so Senator, as I alluded to earlier, we had a phone call with KPMG on Friday. We received a letter from them last night. Whether we received anything in the intervening period, I would have to take on notice for you.
And can you table the letter from them, so exchanges of correspondence?
I'll have to take that on notice as well.
Thank you.
Yeah.
So you didn't write to them after the allegations surfaced in March?
So, Senator, as I described, when we've procured services from KPMG, they've been done in accordance with the Management Advisory Services Panel that's managed by the Department of Finance. And so when they lodge issues around significant concerns, they tend to first report to the Department of Finance. We've then received correspondence from KPMG in relation to the specifics around the contracts they have with Treasury.
And did the letter you received yesterday relate then to your contracts or to what other matters?
They related to the contracts they have with, the services they provide and the contracts they have with the Treasury. They were not broader than that.
And I know you're going to take it on notice to provide that correspondence, but what did that letter say?
I think as I read out a little earlier, Senator, it covered the 3 items. Sorry, Senator, I don't actually have a hard copy with me. I'll have to pick it up on my phone. But it covered three main aspects, and it was firstly, as I said, to confirm that none of the matters in the notice of concern related to the performances of services to the Treasury, that they had not identified any inappropriate access or disclosure to Treasury's data, and none of the personnel engaged in connection with the services to the department were involved.
Thank you. Thanks, Chair.
Thank you. Senator Hume.
Thanks, Chair. I want to go back to the issue of productivity that Senator Canavan had raised, but perhaps a slightly different aspect. Obviously, the Treasury continues to use a 1.2% long-term productivity assumption. What is the evidence that would cause Treasury to revise that assumption down?
So, Senator, we did include a box in Budget Statement 2. I'm not sure if you've seen it. There are a number of factors that we have looked at when assessing the 1.2% assumption for this budget. The pandemic makes it very difficult to interpret some of the recent productivity numbers. So the first thing we would note is the heightened uncertainty around some of the measurement of productivity at the moment.
Okay.
Of course, all that's happening geopolitically in terms of trade tensions is not positive for productivity. But as we've seen, the global economy has been more resilient than we thought on the back of a lot of technology investment. We are seeing some of that data centre investment in Australia. So in this box, we talk about some of the upside and downside. We believe there's both upside and downside to that number. We also look at what other international agencies are doing with their long-term assumption, partly because they're well-informed agencies and good to speak to about these things, but also partly because Australia, you would hope we could also, the global frontier matters for Australia, so having a sense of where others think that will be is important. So we did try to say there's a lot of uncertainty always around productivity and outlined our assessment for this budget. You will see in that box we did make a change to the transition period to the long-term assumption. We thought it was better to be a little more in line with what others are doing. It does take a little time for productivity to lift, so we put that at 5 years, around 5 years.
So what is the current probability weighted risk that that assumption is too high?
Oh, that is difficult. I don't have the probability of that.
I'll phrase it a different way because I know you've done this work previously. Yep. Could you outline potentially what the budget impacts would be if productivity growth was not 1.2 and instead it was only 0.7% or 0.9% or 1% rather than 1.2% over the medium term?
Senator, we did include some sensitivity analysis in the 2023 intergenerational report, which does in fact do this. So around the 1.2, it then looked at productivity growth of 0.9 versus 1.5, so 1.2 in the middle. As you can imagine, it does matter quite a bit. Productivity matters in the long run, quite even small changes. So we report in the IGR, and I'll just make sure Mr McDonald doesn't want to jump in. I hope I don't misread the numbers. The level, if productivity growth was 0.3 percentage points higher, the level of real and nominal GDP would have been around 9.5% higher in 2062-63, so in the long run. And of course, that would have meant an underlying cash deficit as a share of GDP would have been smaller because of higher growth, higher real and nominal GDP growth.
Okay. So have you then calculated 0.3% productivity growth? Because that was the current figure in the national accounts from March last year to March this year.
So productivity in the national accounts at the quarterly level is incredibly volatile, Senator. So we haven't done any calculations beyond those published in the 2023 IGR when it comes to the sensitivity analysis. But as you know, the volatility means we will try to look at longer term trends than the latest quarterly results.
Okay, well, let me ask you in a different way then. How does Treasury reconcile its 1.2% long-term assumption with the Reserve Bank's downgrade of trend productivity back down to 0.7% over its forecast horizon?
So, over the same period, so in the detailed forecast period, so in the near term, we are about the same in our assumptions. So we are lifting productivity growth, the trend of it, or the underlying measure, slowly over around 5 years. What that means is in the near-term forecasts, it is very close to the RBA numbers and then lifts over time.
So how long is the RBA's forecast horizon compared to Treasury's?
They only do the detailed forecast period, so there's just the kind of the 2 to 3 years, whereas we forecast the 4 to 5 over the forward estimates.
Okay. Well then, perhaps if you've got some insights that the RBA doesn't, could you outline for me the government policies that are expected to make the largest quantifiable contribution to productivity growth and over what time frame they kick in?
So, sorry, Senator, can I make sure I understand your question? Could you ask me again?
Yep. Could you provide a list, for instance, of why don't we say the top 10 policies that are in the budget that Treasury has calculated as having a net positive impact on productivity, and give me a sense of the percentage increase that each policy is calculated in providing.
So we don't look at policy from a bottom-up perspective in the medium term, but in terms of the policies that the government has in this budget, where they are focused on productivity. So there are a range of measures to reduce red tape, so reducing compliance burden should help productivity in Australia. Removing barriers to trade is also something we would imagine would be positive for productivity in the long term. The single national market, so thinking about making it easier to work across the borders of the states and territories, also important for helping business operate smoothly in Australia. Accelerating approvals is another one that is coming to my mind. They are the ones that come to my mind as making a difference, but we didn't quantify.
You don't do a bottom-up, like if we fast-track approvals, rewrite the EPBC, whatever it might be, you don't say that will add X percentage or 0.000 something percent to productivity growth.
Our markets group would have a sense of the regulatory burden that is being lifted, so that would be an indication. But you are right, we don't kind of get down to bit by bit, policy by policy. It's very... Yeah. Let me tackle this in a slightly different way. In 2022, the former Treasury Secretary told this committee, and I'm quoting him here, if we had zero productivity growth, wage growth consistent with stable inflation of 2.5% would be 2.5%. If we had productivity growth of 1% a year, wage growth consistent with inflation of 2.5% would be 3.5%. And if we had 1.5% productivity growth, it would be 4%. Is that a view that's still held by the department? That is the long-run relationship, so that being an important caveat. But yes, you will see in the forward estimates of our economic parameters that over the medium term, wages growth finds its steady state at exactly the relationship that you have just pointed out.
Terrific. Okay, so given those recent figures that show that productivity growth is at 0.3% through the last 12 months and inflation is at 4.2%, what would an inflationary wage increase figure be?
Oh, that is difficult for me to make a broad comment on, simply because in the near term the labour supply, labour demand dynamics do matter. If you are thinking about, so in the aggregate that we kind of have in the economic parameters, let me check I have the right number in my head. So we have wage growth growing at 3.25% to the June quarter of 2026 and 3.5% to the June quarter of 2027. So that is our assessment of wage growth that is in line with the economic fundamentals at that time, so in that year.
So the first one was 3.25% wage growth
through the year to the June quarter of 26, yes?
To the June quarter of 26.
Yes.
Okay. So if you then add, and I know that we're slightly off, we're about a quarter off here, but if you add 3.25% wage growth to 0.3% productivity, does that lead to inflation heading back to the 2.25% band? Does that lead to a stable inflation rate?
So the issue, Senator, is that the relationship holds in the long run. So in the near term, there can be a whole lot of things that can influence where you think an economy settles. In the long run, that relationship, which is the inflation and the productivity numbers giving you wage growth, so the balance isn't found in the short term with that relationship. That is a long-term relationship.
All right, so then in the short term, you don't think that the current productivity growth level is consistent with a stable return to low inflation. Do you in the medium term?
Oh, so I didn't say that, Senator. So all I'm trying to say is that when we do the economic forecasts in the very immediate term, each sector, each market, we are trying to look at exactly what is happening within it. You can have a multiple number of factors influencing the economy. Where you think the economy settles at reflects that long-term relationship, but that relationship doesn't have to hold steady through any economic cycle.
Okay. I've got some further questions, Chair, if you'd like me to continue, or I'm happy to rotate the call, but I do want to come back to another issue.
It's a matter for your colleagues.
Okay, I want to ask some questions about how Treasury measures employment growth to assist in the calculation of productivity projections, or is that something that Treasury leaves to the Department of Employment and Workplace Relations?
We do the employment growth forecast in the budget, Senator.
Okay, and do you split that measurement between market and non-market sector?
Not in the forecast, no. We do aggregate employment.
Right. Aggregate. Okay, so do you use the same definitions as the ABS to?
Yes, Senator.
In your.
Yes.
Okay, so
yes.
the ABS does determine which jobs fall within each sector.
They report that. Yes.
They report that. So you could do that. You just don't. Is that right?
We don't have, so if you think about employment in the economy and what drives it, it's activity. We don't have activity forecasts on the market and the non-market sector. So we look at the aggregates. So in line with that, we look at aggregate employment.
Okay, so does Treasury then measure productivity improvements in non-market services where the output quality is not necessarily priced through markets? Is that something that Treasury would look at?
We look at it in history, absolutely, but again, in terms of the long-term assumption, that is an aggregate assumption.
Okay. Does Treasury, or has Treasury, I should probably better phrase it, assessed whether public sector employment growth is crowding out labour from higher productivity market sectors?
I might ask Mr McDonald to make a comment in terms of some of the more recent forecast assessments. Again, at an aggregate level, I don't think we are seeing that in the economy. You are correct that the non-market employment did grow strongly for a period. That's now kind of crossed back over and we have market employment picking up. So we do pay attention to what we think is driving the aggregate numbers underneath, and always you'll see different sectors grow at different rates. But let me just check with Mr McDonald.
Yep. Yeah, I can add to that. So it's certainly the case that there has been previously strong non-market sector employment growth, but in the December quarter 2025, the market sector contributed 65.5% of employment growth through the year in that quarter. And so that's reflecting both a moderation of the growth in non-market and the underlying strength in the market employment.
Sorry, was that for the quarter or for the year?
It's through the year to the December quarter 2025.
Right, okay. So there's some senior economists, and I've got a report in my hand from one of them that have looked at...
From where?
Sorry, this is from Westpac. That have looked at the employment shift that's occurred in the economy from the market to the non-market sector. And in this document, one of the economists has quoted that this is being unprecedented and represents a substantially larger labour market reallocation than occurred during the mining investment boom, owing to the far greater labour intensity of public services relative to mining. And it also included that 40% of total employment is now linked to public spending, almost 9 points higher than a decade ago. So I wonder if Treasury is doing any analysis on what that shift might have on productivity, what the impact of that might have on productivity.
So I can ask Mr Lawson. His division will often do analysis on productivity. What I think we're referring to here is the kind of the growth that we are seeing in some of the healthcare sectors. We saw that show up in the numbers, and you are exactly right that the measurement of productivity in some of those sectors is difficult. Yeah. Mr Lawson, did you have anything?
It's the care economy, the big shift. So We need to make sure there's jobs in aged care, early education care, disability care. Part of the reason why we've got some reforms for the NDIS as well.
Thanks. Mr Lawson.
Yes, so Jeremy Lawson, First Assistant Secretary, Macroeconomic Analysis and Policy Division. So just to make a few observations. So one is that this trend towards an increase in the relative growth of the non-market sector has not been has been common across the advanced economies. This is not an Australia-specific phenomenon. I think that's quite important context. That expansion of the non-market sector does reflect changing consumption preferences in the economy. So demographic shifts such as Australia's ageing population are very important, and so that growth is being driven in significant part by demand for health and aged care services. Healthcare and social assistance industry, which is a very important part, has increased from 8% of the workforce to 16% in early 2026, so that's over a 32-year period. Some of this is also related to the formalisation and marketisation of services that were previously paid for and not measured in economic statistics. And then you also have to take into account the way that it can be very difficult to measure productivity in the non-market sector. So there's like a range of things that are taking place here that's sort of influencing the relative growth rate of the market and the non-market sector, and then how that's sort of reflected in formally measured productivity and the measurement area around that.
So how do you track, what issues are you tracking then that you see as influential on your predictions, forecasts I should say, of productivity, but also participation? Do you do work on sort of labour market mobility, those sorts of things?
Yes, Senator,
yes.
We do. So we do, in the economic forecast, have the labour force participation rate rising a little further. Mm-hmm. We believe women are supporting that quite a bit. Also, older cohorts participating more. So we look at the participation rate. We also look at average hours in the near term, but over the medium term, and then productivity. The recent labour account also gives us a sense of the labour market and how many people are holding multiple jobs and what kind of job switching is happening across the economy, and continuing to show that while there has been a little softening in the labour market, it's still, by historical standards, holding up relatively well.
What about, I assume you track external changes like the fuel crisis and the effect that that would have on productivity as well. Does that feed in? Not really?
Of course, we assess it. It is very hard. So when we say that the extent and the duration of this shock is going to matter, that matters in the near term for the forecast. It will also matter for the world, and then whether the world makes any more kind of significant adjustments or finds it difficult to cope if this shock continues on. So we assess it, but again, very difficult, particularly in a shock that is occurring at the moment.
Okay. Yeah. What about changes to state legislation or domestic policy settings that might be outside Treasury's control? How do you factor that in?
At a broad level, so we do speak to state and territory counterparts. So in a sense, in ongoing conversations with states and territories, some of them do have their own productivity assumptions. Some are lower than the 1.2. What we do is have conversations with them around what they think factors driving their own assessments, and try to understand their view and their perspective on it as well.
And Commonwealth measures, do you track how they are impacting productivity or your projections?
In the sense of, within government? Yes.
What about the government's energy policy? What about the government's industrial relations changes? Do those things factor into your projections?
Again, at a broad level of assessment rather than from a bottom-up perspective. Okay. But yes, we have got to have a sense of what we think will impact productivity across the whole economy.
Okay. There is actually a productivity policy, isn't there? And that's Treasury's responsibility, is that right? Are you still responsible for productivity policy?
Markets Group are doing a lot in this space.
Right.
In addition, I think Markets Group would tell you other departments are also doing a lot in this space, but Markets Group would be able to speak to the specific policy details.
Right.
The ones that Treasury have responsibility for.
Right.
Yep.
Okay, so there's a whole of government, sorry, last question, there's a whole of government regulatory reform agenda and the fact sheet was produced. Is that Markets that's the correct place to ask that? It's, so
we dealt with that in finance.
Okay, did Treasury have input into that, creation of that fact sheet?
In the sense that we work across, the Treasurer and I work across it together, yeah, okay. But policy responsibility sits with me as Minister for Finance.
All right, I might have some follow-up questions on that. Thanks, Chair.
Thank you. Senator McDonald.
Thank you very much, Chair, and good morning, everybody. I've got some questions in terms of the Commonwealth's taxation revenue from the PRRT. It's been reported that Treasury has been requested to do modelling for another potential change.
That would be more appropriate to Revenue Group.
Okay.
Sorry.
I'll see you later in the day on that.
Yeah.
Can I follow up with you then on the mining investment forecast predictions in budget papers? In budget paper 1, BP1, page 62, in the forecast for the domestic economy, it shows that investment into the mining industry is expected to drop to zero growth in 27-28. Is Treasury aware of why that could be causing this figure and what impact that can have economically?
So, Senator, I will ask Mr McDonald to come in on this question. My understanding is, so this is just the growth rate. So while the growth rates are low, the level of mining investment is quite high at the moment. And this is a sector that goes through kind of bursts of investment, then they'll pull back a little bit, but not the level. The level holds. So just to say, I think they've undertaken quite a bit of investment recently, so the growth in investment slows in the near term. But let me just check that I'm correct.
No, that's correct. The growth in investment does slow in the forecast, but the level is at a historically elevated level in terms of the capital stock in the mining sector. Obviously we talked about pipelines in housing before, but pipelines in mining investment matter as well. And what we're seeing in terms of exploration pipelines is that mineral exploration expenditure rose by 6.3% in the March quarter, driven by iron ore, whereas petroleum exploration expenditure fell by 4.8% in that same quarter.
So why is it that last Thursday the IEA released the latest World Energy Investment Report that made specific findings with regard to Australia, particularly in the critical minerals space? It says that in terms of investment, that Australia has now that the report singled out Australia by name, saying, and I'll quote from the report, exploration spending for critical minerals also weakened, with activity falling in Australia by 30%.
So I haven't read the detail of that report, Senator. Can you just read that little section again, please?
Exploration spending for critical minerals also weakened, with activity falling in Australia by 30%. And at the same time, exploration spending in Asia, particularly South Asia, increased by 20%.
So in terms of the sectoral breakdown, I don't have any of that in front of me, so we could take on notice. I'm just wanting to refer to the national accounts that came out earlier this week. I had a recollection that it was quite strong and through the year. So the national accounts recently showed a small fall in mineral and petroleum exploration in the March quarter, but it is small because it's growing at 19.1% through the year.
Wasn't this extraordinary that the world is looking at Australia's data and saying we've fallen by 30%? I guess this is a point I was making in the Resources Department yesterday in DISA, is that we've got to be very careful to understand that we live in a competitive world, and if Australian investment is falling off a cliff in our mining sector, the part of the economy that pays the bills, we should be very concerned about that, and I'm surprised that Treasury has not been alerted to the IEA's report.
We tend to rely on the national accounts, Senator. We can have a look at that data source, but yeah, this does show relatively strong mineral and petroleum exploration. One thing that can happen is if this is happening in a particular part of the mining industry, then that it might not show up in the aggregate numbers. Because if one part of the mining industry was investing $100 and then they stopped doing that and another did, then you wouldn't see that in the aggregates. You see that in sectoral shifts.
I do understand
It might be a sectoral shift. We can have a
So
look.
that is an interesting point you make, because so much of Treasury modelling is around growth in critical minerals, a sector that has smaller tonnages, smaller prices, smaller commodities, and yet somehow that is magically going to replace iron ore, coal and gas, and I guess now gold as our big income earners. I think that is something that perplexes me, how Treasury is modelling that the growth in critical minerals is going to replace those core commodity groups.
So, Senator, I think you might be referring to the net zero plan modelling and the renewable upside scenario. So I would just make the point that our climate modelling scenario base is very different from core forecasts over the forward estimates. They are different.
You're right. I mean, I did have some questions around that under that modelling you see fossil fuel exports collapsing despite having worldwide records in demand for coal and gas each consecutive year. But the modelling is that will collapse, and instead we will have green commodities replacing those, and I think roughly it's a bit of a hard graph to read, but by about 2032.
So you are correct. So in the sense that report published a baseline scenario, then it published a renewable exports upside scenario and a disorderly transition scenario, all of those based on a range of assumptions, including global climate change policies. So I would just make the point, Senator, that please treat that as a scenario modelling done, which was the renewable upside scenario.
It also models fossil fuel exports collapsing when we know that each year we are seeing record demand for coal and gas in particular, and now oil has also leapt to the forefront of our minds. And yet this modelling, that baseline just seems to be completely at odds with what's happening in worldwide markets.
Yeah, so again, the scenario baseline is not the budget forecast. So I would just make the point that this was done to inform the net zero plan. When it comes to the forward estimates and the budget parameters, we largely hold the terms of trade flat by the end of the detailed forecast period. So I just wanted to be clear that this isn't driving any of the aggregate economic parameters in the budget statement. Why
would Treasury produce modelling that is so far removed from the reality of the data that Treasury is using to forecast the budget?
Oh, so we would say, we wouldn't characterise it that way. We would say this is scenario modelling where we were trying to show what could happen on the upside and the downside to a baseline net zero plan modelling case. So the other thing that I would say is very long-term modelling. So the intergenerational report is where we do the long-term modelling, whereas when we do the budget parameters, we're dealing with much shorter timeframes.
All right, if I could just finish on this point then. Regardless, this modelling is fanciful, it's ideological, and if there is one person in Treasury that is using a minute of time to model something that shows that two of Australia's biggest exports are in massive decline, which they are not, I think you're wasting your time and worst, setting up budget parameters and expenditure that is not in Australia's best interest and doesn't reflect reality. I'm really surprised that Treasury would have any part of your divisions doing that work.
So, Senator, in terms of this modelling, it was done to support the government's policy around the net zero plan. We were very open and transparent about the assumptions, and we released a fairly detailed appendix with all of those assumptions. It is often the case that scenario modelling is done to show what could happen under different circumstances, and often our job is to show that, or the risks around things. So that is the intent under which we undertook this modelling.
Normally, though, you'd use reality as a portion of the modelling, though, wouldn't you? I mean, this has no basis in reality. Either not supported by your budget forecasts, or World Economic, the International Energy Agency forecasts, or exports as they stand right now. There's no intersection between that part of reality and what has been modelled here.
So again, Senator, we based it on a renewable exports upside scenario. That is a possibility. And everyone will have a different view on the perspective on which possibilities when it comes to long-term scenario modelling. But I can promise you that a lot of care and effort goes into trying to show all of the assumptions, how we did it, and then what the results are. That's all we were trying to do.
Rotate the call.
Just which part of the team would do this work? Is that in the macro group?
Yes, Senator. We have a branch that focuses on climate and industry modelling, structural modelling, long-term structural modelling.
Right, okay. Well, they must be a lot of fun because they live in a different universe. Thank you. Thanks, Chair.
Thank you. Senator Hume.
I want to refer back to this fact sheet on regulatory reform, and there's in the appendix there's a breakdown of the regulatory burden reduction. This is the 10.2 billion a year in gross regulatory burden reduction, and I know that the Minister has said that this was the responsibility of Finance, not Treasury, but did Treasury have any input into it?
Yes, they would have. Markets Group in particular. We were consulted on some of it. I understand there may be a GDP number in that fact sheet. So Markets Group were the main lead on that from Treasury, and like usual, like Macro Group often consulted throughout that process.
Does Macro sort of cast its eye over the validity of some of the estimates, the costings of them?
Not so much the costing, so the regulatory burden we did not, but the GDP figure, which Markets Group calculated, is a long-run figure. We did take a look at that.
Okay. There was work across government done. You can see the different measures. Some of it relates to, like, environment would have been involved with the EPBC one. The big ones are in housing and environment, but there was whole of government work done on trying to land the gross regulatory reduction.
Okay, so this measure outlines a number of decisions and programs that will, and it says, increase productivity. So was the department consulted on how these measures would increase productivity?
So in terms of, it forms one element of the productivity package in the budget, but if you look at streamlining environment EPBC assessment pathways, clearly that's going to have an impact, right? Like that's been one of the big... That's what I want to know. That's one of the big areas that business has been asking for.
Yep.
I think you...
So is there a quantum on the productivity uplift on that measure or any of the other ones?
Sorry?
Is there a quantum on the productivity uplift on each of those measures? I know you've got a dollar figure about...
Yeah, well, that's the way we're trying to measure it.
All right, so you're reducing the regulatory burden, you put a dollar figure on the reduction in the regulatory burden, but not necessarily a productivity quantum.
Well, all of these measures work towards supporting the productivity forecast in the budget.
Right.
As previous evidence have heard. So it forms one element, reducing red tape or regulatory reduction, but, you know, the trade, removing barriers to trade, building a single national market, accelerating approvals, simplifying building regulations, building more homes, modernising the energy system. All of that contributes to supporting the forecasts that Treasury have outlined in the budget.
Okay, so that some of those on the list have caveats. The first being that some of the measures are subject to agreement by the states and territory governments. So does Treasury have a timeline on what year we can expect the full $10.2 billion of productivity uplift being realised?
I think the 10.2 is the regulatory...
Sorry, I should have said regulatory.
Yeah, it's the gross
the regulatory burden being realised
reduction.
as opposed to productivity being realised.
Markets Group will be able to answer your questions on that, Senator.
Okay.
Noting that it is a matter that the Department of Finance is responsible for, and we did go through this last week.
And it's a gross figure?
Yes.
Why is that?
Because we're trying to measure these elements of the budget measures.
Why not measure all elements of the budget as to what the regulatory burden may be?
Well, Senator Hume, in relation to the regulatory reforms that we are bringing in this budget, this is the way that we have chosen to measure it.
But you're only measuring the regulatory burdens that you feel that you're removing, not the regulatory burdens that you're imposing.
We're being very clear that this is a gross regulatory burden reduction. So I think we're being very upfront about that.
Are you being upfront about what the net imposition or removal of regulatory burden is?
The budget figure has a gross reduction.
Well,
that's
reporting
clear.
revenue and not payments. Why not use a net figure?
Well, this is the first time that I can recall us putting a measurement essentially around the regulatory reduction or reducing regulatory burden, and we will continue to look at ways to measure it, and hopefully you might vote for some of it, because the first bill we brought to the Parliament you voted against.
Sorry.
And
Minister, when do you think the $10.2 billion per year will be realised?
Sorry?
When do you think the $10.2 billion per year in gross regulatory burden will be realised?
Well, it's dependent. As we said, we are pressing on with it. Some of it requires you to support the regulatory reform bill that's being introduced with the budget. So if you say no in the Senate and we can't get that bill through, then that will have an impact, because that is the approach you took on the first regulatory reduction burden. Reduction omnibus bill last year, you voted against it.
Miss,
so
I'm simply asking when you think the number that you've put in the budget, as selective as it is actually going to be realised.
We are trying to be... Look, business had asked us, in consultation with, pre-budget, key priorities, they wanted an effort put in on regulatory reduction. We have done that. Hopefully you will support some of it, noting that you don't support housing elements and you didn't support the EPBC from memory. So the big components you're already opposed to, but we will press on and try to ensure that all of these elements are delivered.
So half of it's dependent on the states, isn't it?
Well,
negotiation with the states.
Well, we work with, unlike your government, we work with states and territories. And yes, on housing, on building more housing and on planning reforms, yes, the Commonwealth does not have those powers. So, yes, we work with the states and territories on that. But are you suggesting we shouldn't and therefore just leave planning reform to somebody else to care about?
So, but the understanding is it's $10.2 billion, but only if everything goes your way, and it's over a time period that no one can determine.
Well, Senator Hume, with your support, we will be able to deliver that.
No, you need the
very
states.
Quickly. Well, on all the other elements that we need, like including the Tell Us Once reforms, help us with those. Simplifying the tax system, put your votes where your concerns are and actually support regulatory reform.
So is it the Commonwealth or the states that are delivering on these reforms?
Sorry?
Is it the Commonwealth or the states that are doing the heavy lifting here?
It's the Commonwealth in partnership with the states particularly on housing and to some degree with the competition policy and where there are shared responsibilities under EPBC. But that is the Federation, Senator Hume. That's the way it is.
So the package is pretty much a rough figure reliant on others to do the work, and we don't know when it will be delivered.
Well, Senator Hume, you have a role to play here. You could support this.
We're going to have to rotate the calls.
We haven't seen any indication that you will. But talk it down, that's fine. We expect that from you.
Just trying to understand it.
We are being clear. It's about a gross reduction. We've outlined the measures that we think deliver that outcome, and we are absolutely determined to deliver them.
Just one last question, Chair. There is a regulatory burden that's imposed by the tax changes, and that's been made clear. Why wouldn't you include that at least because you know what that is? Why would you not include that in a breakdown of regulatory burden?
We've reported against the gross regulatory
So only the
reduction.
good stuff and not the bad stuff?
Well, yeah. I'll leave you to editorialise as you choose. What's more important is actually voting for and helping deliver these changes.
We're going to vote against the tax cuts, and that way we're going to improve the regulatory burden on Australians.
Right. You're voting against the tax cuts right now. I don't know if you've noticed, but those bills going right now is you voting against tax cuts.
No, we're voting against your tax.
Yeah,
we're voting against your taxes, your increased taxes, and that will reduce the regulatory burden on Australians.
The bills have been going all morning, and you are ultimately going to vote against tax cuts today, right now, that make a difference for people.
Increases.
And,
net tax increases.
On the
That's what we're voting against today.
No, no, let's be clear what you're voting against. Yes, you're voting against tax reform, but you're also voting against the instant tax deduction, the $1,000, and the waiting. That's what you're doing today.
Is the legislation that's in the chamber today, the House of Representatives today, a net tax increase or decrease?
And, Senator Hume,
is it net increase or decrease?
Regulatory reduction.
If you can't answer
that we have brought to the Parliament, you have voted against them. So you raise concerns here, you walk out of here, and you take
That's what we're voting against, a net tax increase.
I'm going to rotate the call now. I think we're having tax increase not getting anywhere. Talking over the top of each other is probably not going to get any additional answers. So we'll go to Senator Chandler. Thank you.
Thanks, Chair. I just want to go to some more of those forecasts that we were discussing earlier. Firstly, the population and migration forecasts in this budget, which I understand contains yet another upgrade to the NOM while the government is claiming it's getting migration under control.
Well, net overseas migration has fallen 45% since its peak. You know that.
Thank you for that, Minister. Dr Grant, can you outline the revisions to the NOM contained in this budget?
So, Senator, with the latest data that we have received on population and specifically on net overseas migration, we are seeing some slowing in the rate of departures, and that is influencing the upgrade that we are making to the forecast. I might just ask Mr McDonald to add some of the detail if he would like.
Yes, so we've been seeing for a little while that people have recent cohorts have been departing at a slower rate than what they have in the past. And we talked about this, what we've been seeing in the population statement that came out earlier this year. There was a box that discussed this phenomenon. There is a large post-COVID cohort that is gradually departing, but that departure is happening a bit slower than what previous cohort or what has happened for previous cohorts. And so what that is doing is meaning the falls in NOM are not as large as what we had previously forecast. So we're now forecasting that NOM will be 295,000 in 25-26, 245,000 in 26-27 and 225,000 in 27-28.
And so am I correct in saying, Mr McDonald, that is an increase of 35,000 revision upwards and in 26-27 and a revision upwards of 20,000 in 27-28? Is that correct?
It's 35,000 and 20,000. That's correct.
Thank you. If these forecasts come to fruition, what does it take the total NOM to over the 5 years from 2022-23 to 2026-27?
Well, I think you can add that up. It's outlined in the budget papers.
I believe it's 1.8 million. Is that correct?
Well, I don't know. You can do the adding up, Senator.
we have some Treasury officials at the table.
Published.
I'd like
published
confirmation.
data.
Is it 1.8 million?
I don't have the annuals back that far in front of me, I'm afraid.
Minister, how many budget updates now have the non-forecast been missed? Because by my count, given that you seem to want me to be doing the sums, it would be the 8th budget update out of 8. Is that right?
Well, I don't have that numbers in front of me. The numbers that the government's focusing on is that the net overseas migration has fallen by 45% from its peak. Net overseas migration for 24-25 came in about 30,000 below the forecast at 2025 PFO. And there's measures in this budget to put further downward pressure on migration. And
well, it doesn't look like downward pressure given those revisions.
We can go through those if you like, and we can also go back through the history of the broken system that we inherited when we came to government, including a department that wasn't adequately resourced to do the job we needed it to do.
So that last column in the budget papers, 1,812,500. That's the number, isn't it?
Can you just give me the page that you're referring to?
I can in a moment. Sorry, I'm just looking through this. Page 62 of BP1.
Yeah. So it's a outcome for 24-25 and then forecasts for the years ahead.
Yeah. Can we go to, we've done population, can we go to wages forecasts? Can I confirm that Treasury are forecasting real wages to continue to fall this financial year to June 26?
I think that is correct. Do you have those
Yes,
numbers?
I've got them here. So we're forecasting the wage pricing index to have increased by 3.25%. June 26, and we're forecasting the CPI to be 5% higher in June 26.
So am I correct in saying that that is a 1.75% fall in real wages?
On that measure.
On that measure, thank you. Can I...
That has come, obviously, since we've had, wages growth with a 3 in front of it for a number of consecutive quarters and consecutive quarters of real wage growth. This is something the government has been focused on since coming to government. That's why we've funded wage increases in aged care, early education and care, and it's why we've supported the work that the Fair Work Commission does to make sure that there is wages growth across the economy. Obviously, when inflation is higher than we would like, that means that we won't see it necessarily until we get inflation down further. But I think on any record of assessment, if you go back and compare our record to yours, you'll see which government supports wage increases and real wage increases across the economy.
Minister, your own budget says that real wages are falling. Can I confirm that Treasury is forecasting real household disposable income to only grow at about 0.5% next year, 2026-27? I think that's on page 63.
Yes.
Can I confirm that Treasury is forecasting population growth of 1.2%?
What is the issue here? I mean, you've got the document, you've got the budget papers. Is there a question, or are you just wanting to go through and confirm that detailed forecasts are outlined as at page 62?
I just want to confirm that what is written in black and white is the truth of it, Minister.
Well,
I do have further questions.
The budget is, the budget and the forecasts are Treasury's advice to government.
So on a per capita basis with household disposable incomes of only 0.5% and population growth of 1.2%, that means that living standards are falling in the budget year 26-27. Is that correct?
It depends on your measures. I think just on the population growth, so population growth is 1.3% in 26-27 and then 1.2% in 27-28.
So, Senator, your broad point. So we do.
Sorry, Mr. McDonald. Are those numbers worse?
They're just the numbers. I was just you were saying 1.2. I wanted to make sure we were.
Yeah, Dr. Grant. Sorry for interrupting you. You were going to say something.
I was just saying generally in 2026-27, given all that's happening in the world economy, it is having a big impact on our outlook for Australia. So the higher oil prices feeding through does impact the aggregates. So, and we downgraded growth. So just to say that very much the outlook in 2026-27 reflects the Middle East conflict.
Minister, based on these numbers, your own budget confirms falling real wages, falling living standards. The only thing that appears to be holding up economic growth is the increased revisions in the NOM. How does that square with your claims about getting real wages moving and improving living standards?
Well, I think if you look at our record on wages, and I just took you through it, you'll see that we are a government that cares about what working Australians get paid.
But your budget papers don't stack that up, Minister.
Yes, there are some. I mean, I know you'd like to ignore the significant economic challenges there are across the global economy right now and pretend that that's all something that, right here. Okay. All right. So some of those significant challenges that Treasury have talked you through today, they're not relevant here for consideration. I mean, how ridiculous is that? No wonder that you have
inflation was a challenge before
economic
the fuel crisis,
credibility,
Minister,
when you have that attitude. We have been very upfront about some of the challenges in our economy, whether it be inflation, which was higher than we would like before the Middle East, but certainly
because
since
of your
the
own
war
government spending
in the Middle East. Well, that's your perspective, Senator Chandler.
I think it's the Reserve Bank
that
governor's
is your
perspective as well.
If you want to put this government next to your government when you were last in power on wages, I would happily have that tested. I would happily have that tested. You had wage suppression as a deliberate design feature of your economic policy. You never supported an increase to the minimum wage. In fact, you used to have a whole section in the submission that the government provided going, the importance of low-wage jobs.
No one got poorer
That's what
under
you
a
did.
coalition.
What we have done has changed that approach, and we have seen real wages growth, and we have seen consistent wages growth above 3%, which I don't think is something that you were able to achieve when you were in government. And yes, in this year, because inflation is higher than we would like, we do see that impacting on wages. But also, if you look at living standards, when we came to government, they were going back badly. And again, I don't think it had concerned you so much when you were in government about that. But we have to, the forecast in the budget reflects some of those challenges in the near term, but we remain absolutely determined to ensure that working Australians, including in getting these tax bills through the Parliament, so that we can provide better support to working Australians, whether it be through tax cuts or wages growth.
Minister, given these economically challenging times, as you've outlined here today, why have you decided to increase taxes on Australians? That's what the ringing of these bells represent here today.
Right at the time that you were voting against tax cuts, I find that question pretty staggering, to be honest.
They're tax increases, Minister.
Well, when you go through and you look at the fact that we are returning the revenue raised from some of the tax reforms back into the house, the pay,
net tax
back
increase
through the pay packets and into the households of the working Australians, and you can see it in a number of different ways, whether you look at it in terms of...
Tax to GDP.
And I have, if we go to page 186 of BP 1, you can see it there. Tax reform, cutting taxes with a working Australian tax offset. Personal income tax, increasing the Medicare levy low income threshold.
I don't think that's what Treasury's wanted in their forecast, Minister.
And then we've got the instant tax deduction as an election commitment with a cost of $2.6 billion over 4 years.
At least you committed
when
to
you
that
look
one
at
an
that,
election.
that is clearly showing the effort and the decisions the
But none
government
of that's
has
included
taken
in
in
your forecast.
lowering the burden on working Australians.
I understand that you're a bit over 10 minutes. I thought that your colleagues had no more questions, but we do have another question from Senator Bragg. So we'll go to you, Senator Bragg, and then we need to finish at 1 o'clock.
You're not finished?
No, you go. All good.
I just have two questions. Hello. Who's doing all the government advertising at Treasury? Is that you?
Could be me, Senator.
Yeah. How much are you spending on this 5% deposit scheme?
Oh, hold on 1 second, Senator.
Everywhere I go, I see government advertising. It's like I see more 5% deposit marketing than I do for KFC these days, or even the super funds, actually.
Well, I find that very hard to believe.
It's hard to believe anyone could advertise more than the industry super funds, but there you go. We found someone. Minister?
Did you?
Your government.
Angela Mason,
Can I just
Assistant...
say, on government advertising, we have never exceeded the amount that the
politics.
Morrison government spent in
Back to
its
politics.
final
Well,
year.
we
It
all
was not
agree that wasn't a
COVID
good
related,
government.
so I just want to put that on the record.
We're all embarrassed about
We
that.
have not exceeded by far the amount that the Morrison government spent.
Well,
so
I'm
I
not
think
here to
your
defend the
concerns
Morrison
about
government.
that
Who cares about the
are
Morrison
not
government?
true.
Let's move on.
Angela
with the
Mason,
politics.
Assistant Secretary, Corporate...
I love politics. You'd be a good politician.
Oh, says Senator Bragg.
I'm just trying to get to the bottom of things.
Never, ever. It's never been about the politics
What
for
do you
you, has
mean?
it? Never.
Just trying to get to the bottom. How much
Yeah.
have you wasted on these 5% deposit advertising?
Well, there is a purpose behind public information
Here we
campaigns,
go,
Senator
yep.
Bragg. Well, you keep saying things that I have to respond to. I can't just let it go when you say
Chair, this is
wasting
getting
money.
unruly.
Let's go to the official. Thank you.
Angela Mason, Assistant Secretary, Communications Branch.
Yeah, how much?
So yes, the advertising campaign informing Australians about updates to the 5% deposit scheme and the introduction of the Help to Buy scheme.
Yeah.
So would you like the total campaign expenditure
Yes,
at
please.
30 April? So total campaign expenditure for that at 30 April is $6,993,751.
$6 million on 5% deposits? And where's all the cash going?
Can I just intercept that there quickly, Senator, and Miss Mason can correct me. I don't think we are breaking it down between different elements of the housing package. Is that entirely on the 5% deposit?
No, that is, it was a campaign about the 5%
$6 million on 5%
scheme
deposits?
and Help to Buy.
Where's all the... OK, so $6 million on Help to Buy and 5% deposits?
Yes.
OK, where's all the cash going?
Did you want me to break down to different suppliers?
Yeah, just give me an overview. Good to know where our taxpayer funds is going.
It all gets approved through the Independent Campaigns Committee too, that is there to determine whether or not it meets the requirements.
Yeah.
Senator Bragg, I know that.
Is that part of the Politburo?
Oh, I don't know what you're referring to there, but it's highly regarded individuals who do this, and was arrangements, this work, you know, and it was arrangements that operated under the former government.
Where's all the cash going?
So there will be, I mean, I can go through those line items. There is 9 different kind of contracts and suppliers that do make up that figure. Did you want me to, I can go through all of those 9 line items, or we could provide that on notice.
Finish at 1 o'clock.
Can we get it on notice?
Yep.
Great. How long will it take to get that?
That won't take too long.
We get it today?
We should be able to do that today.
Okay, if we get it today, I'll move on to my last question.
The Chair read out the requirement for providing answers to questions on notice, so it'll be in accordance with that.
But the official's offering it earlier.
Yeah, so which will be in accordance with what the Chair outlined earlier.
Do you have any other questions?
Well, my last question is, when am I going to get the information now?
We will get to you as soon as possible, Senator Bragg, your interest. It is all reported against publicly as well. as you'd be aware, the release of annual campaign data, public information campaign data, is provided online by the Department of Finance annually.
Okay,
I don't
so
know
we
if
can
you've ever read
get it
one.
today then, yeah?
We'll see.
We look forward to receiving the information later today via electronic email. Electronic mail.
I don't know that you can dictate how you will receive it, Senator
Well, you just
Bragg.
said it's already ready, so we'll get it. Thanks, Chair.
Well, great. Sorry, Chair. Just because I'm not going to be verbal by Senator Bragg. I said the campaign report is available online that the Department of Finance puts out. You have asked a separate question, which we have taken on notice, and we will do what we can to meet your expectations.
Okay. Thank you, Minister. Thank you, Senator Bragg. That takes us to 1 o'clock, so we will suspend for lunch now and return at 2 o'clock. And I would also note that the committee has now concluded its questions of macroeconomic group and international corporate and investment. So we'll be back at 2 with markets. Thank you.
I haven't got my page, so...
You good, Susan?
I haven't found my page yet, I'm sorry. Bear with.
Okay. The committee will now continue with Treasury Markets Group. Welcome, and over to Senator McDonald.
Thank you very much, Chair. Good afternoon. I wanted to start by asking you if Markets Group was consulted during development of the budget's capital gains tax measure.
So James Kelly, Deputy Secretary, Markets Group. I mean, we're part of the department, Senator, so obviously we're on a range of matters involved in discussions. We don't have there's no formal consultation on tax measures, but tax measures generally are led by and done by revenue groups. So whilst I had awareness of what they were working on and the chance to express views and think about particular aspects as they related to Markets Group, there wasn't a formal consultation as such.
Right. The Treasurer provided to the media what was called Treasury advice. It says the current system overcompensates high growth investments and undercompensates low growth investments. Did Markets Group have any legal into that? Any input into that advice, or does it purely relate to tax?
I would need I would need to see the document you're quoting from, but based on what you've said, it seems to be it's relating to tax, and so that's really more a question for Revenue Group.
They're coming tonight.
They are, yes, can't wait. So was Markets Group asked whether these capital gains tax changes would make it easier or harder for startups, for challenger businesses and growing Australian firms to raise capital?
So as I just go back to my earlier answer, there's kind of no, we're just part of Treasury and we work together and discuss issues as needed, but there's no, Revenue Group doesn't go formally around asking people what's your opinion or advice on this. So we're part of the general discussions. Through the executive board role that I have a chance to participate in those and express views. And obviously as a Treasury, we try to bring together as much as possible a single Treasury view on issues.
So the Markets Group wouldn't have a view on the ease or otherwise for developing businesses, the business environment that they're investing in?
We don't in terms of how we're organised, have a team whose sole job is to think about startups in the economy and all the factors that affect those. We think about those issues in respect of the laws and the areas of policy that we advise on, such as financial system division, for example, in respect to competition policy. And so even the kind of merger reform laws have kind of raised issues about how to affect some of that, kind of those things, and some issues raised there that we've been working through together. So.
Yeah, okay, thank you. Because if the tax system reduces the reward for backing new and risky businesses, that doesn't help competition, does it? It helps the incumbents.
Yeah, so Senator, I just probably don't want to answer the question because you've got a presumption at the beginning about what the tax changes do, and that's more a matter for Revenue Group.
All right. How do you see competition being improved in the economy? Is it with additional new businesses, startups, and by their nature, investment into more risky startups?
Yeah, I suppose, Mr McDonald might want to, Mr Jason McDonald can add to this, but when we think about competition in the economy, then definitely ease of entry for new businesses, the ability for small businesses to grow rapidly, the ability to introduce new products and compete across product lines. They're kind of all very relevant things. There's a range of factors that affect competition.
Yes, so having more businesses in the economy would improve competition.
As a general sort of proposition, yeah, more businesses entering, yes.
Yeah. Okay. Would it be fair to say it's harder for small businesses, startups and riskier businesses to get bank finance?
So I think it's generally true to say that bank finance, bank finance from banks is going to be harder to get if you kind of don't have assets to secure against, and that's a long-standing feature of the way banks lend and the kind of role they play in the financial system, and it's not peculiar to Australia. So in some ways we have different markets that provide like equity capital, venture capital, or whatever you want to describe it, because some things aren't suitable to being provided through debt funding as financing as opposed to other forms of financing that better suit the particular business.
So for these businesses that we agree, particularly if they have they don't have the ability to borrow from banks, if they're already finding it harder to get bank finance, the government then reduces the after-tax reward for private investors who back those businesses. Doesn't that make it even harder for challengers to raise capital?
I think some of these questions are going to Revenue Group, but there are also measures in the budget which are very much through some of the tax measures about relieving the kind of liquidity constraints on businesses, so around the treatment of losses. And other things very much target those financing issues for small business in a very, very targeted and effective way. And Revenue Group would be able to talk you through those.
Well, sure, that's revenue side, but I'm interested in what markets do, particularly around this concept of competition and having more businesses, more competition in the market. We have some very over-consolidated sectors of our economy. So surely you would have a view, as market section, would have a view on providing an environment that allows for additional competition, more entrance to the market.
Yes, that's what the government has been working on, and I'm sure Mr McDonald can take you through all of those measures.
So that's the question I'm asking is, does these arrangements, these new arrangements, which will make it harder for private finance, private equity to go into small businesses.
That's your view.
It's what is being canvassed in the media. It's what the startups are saying.
You're putting a political view to
I'm putting a reality view.
Which is not responsible for tax policy. Revenue Group is. They're coming at 8 o'clock, but know that the government is doing a lot of work on competition policy, and so it's probably relevant in relation to your questions that the officials are able to give you an update on that.
All right. Specifically, what I'd like to know is what is the government doing to encourage more capital to be more easily available to small businesses to enter the market and provide more competition in the economy?
Thanks very much, Senator. It's Jason McDonald and I'm the First Assistant Secretary for the Competition and Consumer Policy Division. In answer to your question, yes, in general it's better to have more competitors to drive competition than less. Where there are fewer competitors, if there's 1, 2 or 3, then the things we like to think about are the barriers to entry, maintaining a threat of entry.
Capital, finance, would they be some of the examples of barriers to entry?
Access to finance, obviously, but maintaining the threat of entry is actually something that we're particularly looking at. In terms of what's in the budget in the area that I'm responsible for, there's quite a few measures. For example, the government has decided to make mandatory standards free for all businesses. This includes small businesses, small electrical firms that might need to provide competition for other electrical firms. They can now access standards for free on a regular basis.
That's terrific. So about them getting finance, capital,
I think it's
to invest and build the business.
If you're concerned about competition policy and the arrangements for small business, I think it is reasonable to broaden it beyond capital gains tax.
Well, it is, Minister, but what I'm very narrowly looking at is one of the biggest challenges for business is access to finance, access to capital, and so that's the bit that I'm specifically asking the Markets Group about. What policies are they doing to better enable small business, startups, risky ventures, to have access to capital to be able to get going and provide greater competition in the Australian market?
There's a number of measures in this budget that go to that.
In some ways, rather than let Mr McDonald continue, in some ways it does cut across a range of areas. So I'll give you some specific examples. So one, not in Markets Group, but just to talk to it, because the productivity package is reforming or strengthening the superannuation performance test, is very much about the ability of kind of capital markets to fund innovation and
super
economic growth
funds
in the
investing
economy.
into.
So that's around the superannuation
into
performance test.
small and medium enterprises.
Part of the motivation for those reforms, and I can let revenue groups speak to them in more detail, is about making sure that kind of alternative investments and venture capital sort of investments can be invested in by super funds, and that the performance test does not operate as a barrier to that. Another part within Markets Group is thinking about putting a regulatory structure that around digital assets markets and kind of issues around tokenisation and so on, and around the payment system, which is a source of a lot of startups and innovation in the system. So part of those reforms that have been worked on, some are passed and some are in train, is about making sure that kind of the regulatory protections are there, but also having regulatory certainty, eliminating certain problems in the system, actually is critical for kind of new entrants in those markets to come in and develop and compete.
You're quite right. All of that is important, but not as important as access to capital, particularly for smaller and more risky businesses, which I would suggest to you is not the market that superannuation funds in particular are operating in. And that's why the capital gains tax changes have been so devastating to people who would otherwise have taken their own private capital and entered into supporting the sort of businesses that will one day be a bigger business, hopefully, but potentially to provide more competition in the market. And I think it would be...
Is there a question?
Thanks, Minister, for your assistance. No, I'm trying to frame it up, so otherwise we'll go round in circles and we'll keep talking about things that are not very important to small businesses who are desperately trying to get capital to get into the market. They are, but they're not addressing capital, which I would suggest is the number one most important thing to small businesses, tech startups, innovation and risky enterprises to start a business. Like, without capital, everything else that the government is doing is irrelevant and unimportant.
At 10 minutes, do you want to
I'll just ask Mr Kelly to finalise then on what is it that this Markets Group is doing to provide greater access to capital and finance for those sort of businesses that I've described to enter the market, particularly given your remit is competition.
I think we've spoken to the things we're actively got in train that are relevant to new entrants to markets and kind of innovation.
But not finance and not capital.
So through the Financial System Division, obviously we're always thinking about the kind of financial markets and access to capital through that. And there's a range of things in that world that kind of are about making sure those markets operate efficiently. So, for example, the ASX and the Financial Market Infrastructure Australia works in terms of allowing funds to be raised. So that's like broad and ongoing work. And overall, Australia actually has a pretty large pool of capital available and a pretty efficient capital market.
It used to have a very efficient capital market, but what the proposition is that these changes to CGT are going to change that landscape dramatically.
Questions you can put to Revenue Group, who have done all of the thorough analysis on that.
Okay, so this is a section of the department that operates in the competition space, and they're not interested and not able to answer questions on access to capital and finance for small business and risky business, which I think is a massive oversight from the government. Thank you, Chair.
Senator Pocock.
Thank you, Chair. Minister, you would have heard earlier me ask questions of Treasury about their contracting and correspondence with KPMG, and I wanted to ask you what contact, whether it's correspondence, phone calls or conversations, have you had with KPMG since the whistleblower allegations surfaced in late March?
I haven't, nor did I don't think I recall I had any contact with PwC either. I'm not involved in procurement across government. My job directly in contract arrangements, they do not involve ministers, nor should they. My job is to make sure that all of the guidance and guidelines and rules and things like the Supplier Code of Conduct and compliance are operating as effectively as we can, noting that individual agencies make decisions about contracts. So I have a very particular job. On KPMG, I think we went through this last week, and I have said in the media, we are extremely concerned about the allegations that have been raised, and we have it under review. and indeed have done so since Senator O'Neill raised them in the Senate.
Have you directed any of your leaders in the Department of Finance to have any contact with KPMG in relation to these matters?
I've certainly had discussions with officials in the Department of Finance to stay across the discussions they are having with KPMG and the assurances that they have been seeking, and we have that matter under review. I mean, they will come back to, they are in, I think we had the evidence last week that a letter had been sent following up from meetings that had been held with the Department of Finance to KPMG, and no doubt I will be being briefed on those once we've finished estimates.
So, Minister, your government has many millions of dollars of contracts, both audit and consulting, with KPMG, 27 million in your own Department of General Consulting. We heard yesterday, or was it the day before, it's a blur, 17 million, I think, in DISA. I recollect something like 7 million in DUA. And, Minister, I have a list of 34 active contracts that mention audit that are in the public sector. At present, they are all active. Their value is over 27 million, and they include audit matters, for example, in the ATO, $680,000 for an ATO audit service. It's at this value, it's 3 times its original value, but that's classic for a consulting firm. The AEC has an audit contract of 3.1 million, 2 million for the Bureau of Meteorology, 1.6 million for ANAO. In fact, there's a group of contracts here for the ANAO of over $6 million of audit services with KPMG. Veterans Affairs, similarly, the internal auditor is KPMG. What steps have been taken in relation to KPMG and this very extensive audit footprint across the public sector in relation to audit matters, which must be a real concern given the specific acknowledged misdemeanours within KPMG relate to their audit department?
So I think if we did have a discussion about what's going on with, bringing more work inside, and that's covered into the public service, and that's covered in budget paper 4. We also point out there are some new requirements that we are putting in place over contract variations, so that concern you raised, and I think Senator O'Neill has about contracts being varied once they've been entered into. Will require a new obligation on agencies covered by Commonwealth procurement, requiring agency heads to apply greater scrutiny over contract variations. We're also requiring that agencies will be required to provide additional information on all new and varied consultancy service procurements valued at $2 million or more. And so they are some additional changes that decisions we have made. You've heard from Treasury earlier in corporate that they have sought assurances about individuals that have been identified to have been involved in the allegations raised by the whistleblower. And Finance is looking at this very, very closely. I can't really go into much more detail than that. I would have more to say after I've been briefed following the time we've finished at estimates, because they have been engaging with them over the last couple of months.
Minister, your code of conduct, which you often refer to as
the supplier code of conduct.
Thank you, sorry, not your code of conduct, your supplier code of conduct.
Yeah.
Thank you. Which you often talk about as an innovation of your government to deal with the appalling practices we've witnessed in the consulting industry.
Yeah.
It states that it expects its suppliers to conduct themselves with high standards of ethics such that they consistently act with integrity and accountability. Ethics is considered to encompass, at a minimum, honesty, integrity, probity, diligence and fairness. It goes on, failure to adhere to the conduct may result in remedial action and or termination in accordance with contractual provisions. What we have now from KPMG is not a series of allegations. We have clear public admission of serious misdemeanours. I go to their press release of the 29th of May where they acknowledge that their standards have fallen well short in the handling of very important matters. The board has confirmed shortcomings in the management of the whistleblower and their concerns, remembering that they are now on their 4th internal inquiry in relation to the whistleblower, the rigour of the investigations they have held, the action by leadership regarding the allegations raised, and they go on to say that they admit that they have identified matters in relation to inappropriate sharing internally of confidential client documents, inappropriate sharing of internal documents containing client information that they acknowledge has been shared inappropriately. And they have also made self-reports to regulators and professional bodies. This is not a matter of allegation anymore, is it, Minister? It's actually clear, acknowledged breaches of ethical practice. Given the Code of Conduct, which you present as an important innovation of your government, why have you not taken action already in relation to these public acknowledgements of very significant failures on ethics and practice?
Well, we have put in place the Supplier Code of Conduct, and I think you heard last week the work that Finance is doing, including that it's reserving its rights in relation to this, including the potential to suspend KPMG from the MAS panel or to seek a mutual agreement from KPMG not to bid for any Commonwealth work for a period of time. The Department of Finance has notified other Commonwealth entities that this is a significant event that is being assessed by Finance, and that entities, I'm trying to get to the second bit, may seek assurances from KPMG that no individuals engaged on the work are associated with the matters currently being examined, and a couple of other points. But I think that we are taking this extremely seriously, Senator Pocock, and Finance are undertaking that work. I have had a number of discussions with them. We will have more to say on this when we've reached, when I've been briefed and they've replied back to Department of Finance.
So let me ask you.
9 minutes, Senator Pocock.
Okay, I've got a couple more things on this. Suppliers in your Code of Conduct are reminded that suspected breaches of the code that could constitute serious and systemic corrupt conduct will be notified to the National Anti-Corruption Commission as soon as reasonably practicable. Is it currently under consideration that you will refer KPMG to the NAC?
Well, I don't think we've reached that point because it's suspected. I have not been advised formally. Finance has not formed a concluded opinion about a breach of the code at this point. That's what I'm saying to you. We have it under review, under active review. We will abide by the Supplier Code of Conduct as it's outlined, but I guess the discussions and the final thinking of Finance has not. We haven't reached that point, but we would abide by the Supplier Code of Conduct.
But it is on the public record that confidential client information has been misused. These are KPMG's words.
Yeah. No, I know.
To win work.
But the code says suppliers are reminded that suspected breaches of the code that could constitute serious and systemic corrupt conduct will be notified. I'm saying we haven't got to that point yet.
So what information do you need that you don't have?
Well, I would need some. Well, one, I think it would probably be a matter that Finance determines because, ministerial role. I don't know that it's a matter for me to agree to, but I think it is reasonable that I be briefed on where their thinking is up to on it.
Minister, is it the case that you do not have, as a government, the ability to ban unethical contracts? I have a private member's bill that would create that facility, which other governments, state governments, have in this country. If you get to the point where you do agree that sharing confidential information to pursue very profitable audit contracts is unethical, which I think very few Australians would argue about, that you will not have the capability to ban KPMG, even if that is judged to be true?
Well, in relation to PwC, I think in the end we received a voluntary undertaking from them for a period of time. And I know you've got legislation. At the moment, the advice to me from Finance is not to support a disbarment regime, but I am in continual discussions with the department around those matters.
Because we're looking at repetitive. These are incredibly expensive for your department, I imagine.
And look, the work that Senator O'Neill and yourself and others have conducted in the last 2 years or so, probably a bit longer, informs our thinking as well. So,
but in terms of action today, Minister, I have to say, we have a code of conduct, we have an attempt to tweak the guidelines structure for a new body, single body, to set standards for behaviour, but we've had a voluntary withdrawal of PwC from contracting, but we haven't seen significant structural or legislative measures that actually signal to the world out there, the cowboys that exist, and protection for those who would never behave like that. That your government has not responded, and here we are in our second big chapter of a disaster so expensive for the public sector.
Well, I don't know that I agree with you on that. Like, I think we have done, I accept that you think we haven't done enough. We've done the changes that you've outlined. We've also done quite a lot of work on the procurement rules, and we've seen quite a significant shift, probably the biggest shift that I've seen in public administration, away from the big consulting companies. They get much less of the work than they used to get. And, in my view, our outsourced contracting is still too high. I'd like it to be lower than it is. But we have seen quite a dramatic shift from the big companies into more diverse range of providers. And we've defined Australian business, we've set target, like we have done a whole lot in this area. There is more to do, and we continue to work through, some of those details, specifically in relation to KPMG, but more broadly about consequences for failure of standards and procurement of Commonwealth work. And I get that we're a big purchaser, and that means that we can help shape behaviour. I understand that, and I'm getting as tired as I think you and Senator O'Neill are as well about this.
Thank you. I'll come back. Thank you.
Ask one question just on the back of
Quick
that.
follow-up, and then we need to move.
Thank you, Minister. The timing of this is quite remarkable. It's only last Friday that there was an admission from KPMG. One of the things that I'm seeking your assurance is that the government will very carefully consider this. I think the last thing we need is a knee-jerk response to emerging information that hasn't been properly considered. So I guess I'm seeking your assurance the committee will have another hearing on the 19th. More and more information is emerging by the day. I think a judicious government is actually going to need to take a little time to consider this, and is that the case? Will the government consider this carefully, not in a knee-jerk way, as egregious as it is? And I've been chasing this down for a long time.
I know. Yes, we will, and I can guarantee you that we are taking this very seriously.
Thank you.
Thank you,
Senator Chandler.
Oh, sorry, no, I think Senator McDonald. Yes.
Oh, okay. Senator McDonald.
I want to ask you, Mr Kelly, we put a question on notice to you, AET 085, asking whether the Treasurer or his office ever asked you not to provide advice by email or PDMS. It must be something very modern. Andrew? Might be like a BlackBerry. Might be like a BlackBerry.
Sorry, it's interesting what it was.
No, I don't have that particular.
No, that's because you haven't answered it. I'm sorry, Mr. Kelly. I was getting to that. No, well, I thought I'd give you an opportunity in case you had it there. I mean, it's obviously an inappropriate request not to ask the department not to communicate advice via email or PDMS, which I assume is some internal government communication system. So I thought this would have been a very easy question to have been answered. Why wasn't it answered?
So, sorry, Senator, I would just need to check. I do usually bring the ones that have not been answered, and that's not in my pack today. I thought it had been answered. I think all Treasury advice, when we write ministers, briefs to ministers, it all goes through PDMS, where the advice is provided by email. That is also included in PDMS, whether separately or attached to previous advice. That, from my observation, is that's almost universally followed. I'm not aware of exceptions to that. I think where that kind of, the way my memory of that question, the way it was asked, is, kind of raises issues where sometimes the thing the minister will want to do, and this is true not only of ministers of this government, but all previous governments I've been familiar with, they actually want officials to come up and talk to them about an issue and get, have that discussion with them. And in the course of doing that, that can involve, in effect, advice. And do we always put that through? Is that always going to be then captured in PDMS? No.
Right. Well, I guess it was our view that it was quite a simple question to answer, and if that was the clarification, that would have been quite directly provided. But the question was, has the Treasurer or his office ever asked you not to provide a briefing via email or a briefing or advice via email or PDMS?
Not in that negative, I can't recollect one in that negative sense that the question's being asked. If it's in the sense of we've been asked for advice and it happens in the course of a meeting, that's, I think, something that's not contemplated by that question.
Well, if you thought the question had been answered and you don't have it, that possibly means it's...
So I would just need to go back and see what happens, Senator.
I'm trying to see where it's at, Senator McDonald.
Thank you. Before the last estimates, we asked a number of questions on how many times the department had provided the Treasurer with the draft statement of expectations for ASIC. How many times has the Treasury provided the Treasurer with the draft statement of expectations for ASIC?
So there was a question asked on that before. I believe an answer is provided, as we discussed, I think, at the last estimates or the one before that. Ultimately, the answers provided in writing are those of the Minister themselves. ASIC's had statement expectations for many years, so it's it's a pretty open question if you're asking me over that period of time, how many have we provided. It's also the case, and this kind of makes these sort of questions challenging to answer, as often we'll start with a draft and then we'll work through it with the Minister, and sometimes there'll be a bit of back and forth. So that can mean, so what's, is the original draft one, or is it kind of multiple times? So
I understand that, but on the 3rd of February of 2026, the Treasurer announced the appointment of the new chair for ASIC and that there would be an updated statement of expectations. The new chair commenced on the 1st of June, and yet still no updated statement of expectations.
Senator, we are, because the chair has now commenced, we are working on a draft of the statement of expectations with a view to providing that an advanced draft to the Treasurer in the near future.
That's consistent with the evidence we provided last estimates too. I think we're just waiting for the new chair to come in and have the opportunity to help shape that document.
Right. Slow, isn't it?
Well, it's not that slow. Did you start on the 1st?
Monday.
Yeah, started on Monday.
Sure. All right. So we will ask again at the next estimates if the statement of expectation has been updated. But I appreciate that the new chair is going to have a hand in drafting it, but it's been since 2019 that we've been looking for. Not 2019, it's been some time. I'm just trying to think, when is the last time it has been updated?
I beg the last one. Yeah, 2021.
Right. So, not in this term of this government has it been updated. Are you satisfied with the operation of ASIC, Minister?
Look, it doesn't report to me, it's not in my portfolio, but I have no reason to be dissatisfied, no. And I think it is entirely appropriate that a new chair would have the opportunity to be consulted on a statement of expectations. I mean, the previous statement of expectations would have covered the former chair's tenure, I imagine, from 2021.
That's right.
And, you know, we've made updates to statements of expectations with a range of other regulators. This will be the next one.
So I'm just, you know, the previous one was done during COVID. The Treasurer hasn't updated expectations of ASIC. He hasn't set any for 4 years. We'll come back to the next estimates.
They're not necessarily annual documents.
The last one was drafted during COVID. Circumstances have changed dramatically since then, and yet there's been no update. The Treasurer, there has been drafts, I would imagine, during that time, and yet that has never been progressed.
Well,
was it that the previous chair...
for some time that this was going to be updated, and the new chair, the appointment of the new chair, has meant that that has been held over until she's in an opportunity to be consulted on it. She started on Monday, Senator McDonald. And she appears tomorrow, 9 o'clock.
Look, I think what we're seeing is that 50% of the statement of expectation under this Treasurer's portfolio have not been updated. It speaks to a Treasurer who does not have his hands on the wheel.
Well, that's your, you know, that's your political commentary.
I think
I get a different
CEOs
view because I work daily with the Treasurer, so I know exactly how hard he works and how involved he is in all aspects of his portfolio.
Big regulators of the economy and no statement of expectations updated by the Treasurer.
That's not correct. There are statement of expectations, and at particular times those statements of expectations get updated. And in fact, when we updated one for the Future Fund, I remember the howls from you because we had updated it. You just didn't update it. We updated it, just not in a way that you liked.
That's because you're butchering the fund.
Oh.
Senator, you
yes.
8 minutes.
Right, you've looked at the returns, have you? Yeah, very, very strong returns under the Future Fund.
Your favourite vested interests.
Let's have one at a time. Can I rotate the call?
Come back to me, thank you.
Okay. Senator Chandler. No. Okay. Senator Bragg, and then we'll come back to you.
Just quick ones for me, and I like to be efficient, you know that.
I love that.
So, in terms of the stuff that Senator McDonald was just probing you about, what's going on with this ASIC report response that you promised many times in estimates gone?
Has that not been provided yet?
No.
It's the one that you chaired?
The very good one.
Let me see if I can get an update. I'm very sorry if that has not been...
Excellent report.
Right. But
well, whatever we may disagree on some things, but I think we all agree that the Senate report should be at least responded to.
That's right.
Yes.
Maybe we don't even agree on that.
Some are worthier than others, Senator Bragg.
Well, that may be the case. It may be the case. But I do think that you have promised this before, and we think that there are issues with ASIC that can only be addressed through structural changes. Obviously, I respect the fact that the government may not agree, but at least we expect the responses to be provided as they were promised in the past.
Yes, and Treasury does have a lot of responses, and I think we can certainly take you through the ones that Markets Group has replied to. I understand. I'll just wait.
Reported 2 years ago.
It's not far. It's not far, Senator
Is it actually coming this time? Because I mean, we could play a video of you saying this last time.
Hey.
I wouldn't want to embarrass you, but you did say this last time.
Yeah.
So.
Look, I'm trying to get advice. I'm here. You know, it doesn't directly relate to my portfolio, so I'm trying to get some advice from you. I understand it's not far away from being lodged.
Lodged with the Senate?
Yes.
Okay. Will we get it today?
I don't have that confirmation. It's going through the final clearance processes.
We'll wait with bated breath. Okay. Well, the other thing I want to ask...
I don't know that I think they're, you know, I can't remember all of the aspects of your report, Senator Bragg, forgive me, but I'm not sure we agreed with a lot of
I don't think you do agree, but that wasn't... I don't expect...
It was a reference committee, Senator.
Yeah.
don't expect you to agree, but the recommendations were around the functions and the capability of the organisation to perform its role as a law enforcement agency, and it was quite critical of its...
Yes, I know you have been quite critical.
Effectively,
yeah.
I'm trying to sort of depoliticise this completely, and I guess the main point was that it is too big to be effective, and it has some other cultural issues, I guess. So regardless of whoever you've appointed, or know who you appointed, I think they would benefit from your insights. So can I ask you about some of the prudential issues here, macro-prudential issues in Markets Group?
You can ask Markets Group. Yeah, we're the
Don't sound
relevant
confident.
part.
Is it okay if I ask you?
Yes, Senator.
Okay. So, what input do you have into the macro-prudential policies that APRA deploys, if any?
The macro-prudential policies of APRA belong to APRA, and they're an independent regulator, but they are, their frameworks and their approach are discussed at the Council of Financial Regulators, and we do have a chance to have an input and discuss those with them.
So, in relation to the serviceability buffer, do they consult you on their judgments on that?
Lynn Kelly, First Assistant Secretary, Financial System Division. So in considering the serviceability buffer, APRA take into account a range of factors, including the macro-prudential advice they receive from the RBA. In their consideration, they will at times discuss with us what their thinking is and why, and that will be within Markets Group, but it will also be our macroeconomic team as well in Treasury. Ultimately, their decision is that of their own, but they take into account different views in formulating their final positions.
Okay, so when they deployed their macro-prudential tools, do they consult you before they do that?
They will discuss what they're thinking with the Council of Financial Regulators because it impacts on financial stability, and so they will take into account relevant inputs, but ultimately they will make a decision themselves.
Who attends that? The Secretary?
So the Council of Financial Regulators meets at different levels, but the heads meet progressively across the year.
Right. So what level of Treasury meets with APRA to discuss the serviceability buffer?
So it will happen at the heads is the primary place, but also APRA consult more broadly, not just with Treasury.
What's the heads?
Janie Wilkinson, the Secretary of Treasury, attends the CFR heads, as do James Kelly and myself.
So, I mean, who is the Secretary discussing the buffer, for example? Or would that be something that you would discuss at the
APRA, so the Chair of APRA will discuss what he's thinking about the serviceability buffer. He will take into account, under the changes with the RBA are required to give advice on macro-pru to APRA, which APRA need to take into account. So there are various inputs that go into his thinking.
So do they provide to you, in what form do they consult you about their thinking on the buffer?
It will be typically in discussion, but they may, there could possibly be some written document we may see at some point, but we usually have discussions.
Yes, Senator, usually there is a process by which they go through the Council of Financial Regulators, whether at the working group level or the heads, which meet on a kind of formal basis quarterly, will have papers. They'll have papers, as Ms Kelly said, from RBA with his assessment of kind of the environment, and they'll have analysis and a framework from APRA. APRA also publishes quite a bit publicly on this, and I think the other thing I'd say is it's not let's have a discussion on the serviceability buffer. What the discussion is about the overall macro-prudential settings, because it's the totality of them that makes sense at the end of the day, rather than any specific bit.
So you would be aware that APRA have a couple of macro-pru tools at the moment. They've got the buffer, 3%. They've got the restraint on what they call risky lending, which by their definition I think is 80% loan-to-value ratio loans. So they're trying to rein those in. That's their view. There's too many of them. So when they consulted you, I assume that they consult you in some form before they announced that macroprudential measure? The 80%?
I think you should take it as a given that all the major macroprudential settings, they consult with the relevant agencies within the Treasury portfolio and the Council of Financial Regulators.
So the answer...
It's not just a bureaucratic answer, they just do, as a matter of course, test and explain their position well ahead, and including publicly.
Thank you. So what was your... when did APRA first raise the spectre that they would deploy a macroprudential tool like the restraint on 80% LVR loans?
We'd have to take on notice the actual dates, but the APRA's decision was a preemptive move to limit the build-up of risk in the system. So that would have been informed by data that they were seeing in the market, advice from the Reserve Bank of Australia, various other factors. But it was a preemptive move to limit build-up in the risk in the system, and they've been quite clear about that.
Okay. So they announced this in November last year. So did they raise any concerns about the 5% deposits? Because I think a lot of people would look at the market now and say, well, you've got politicians in Canberra peddling these 95% mortgages like, dodgy financial planners. And then you've got the prudential regulator over here saying, actually, we want to rein these in. We don't want to have 80% mortgages. We don't want to have 95% mortgages. So what did APRA say about the 5% deposit scheme when they gave you their draft thinking on their macro-pro arrangements?
So I think APRA have said quite publicly at the time that they made the announcement, the signs of the build-up of risk in the system that they were concentrating around high DTI lending was actually investor lending.
I see that covers both, but yeah.
Yeah. So, and with the way that the DTI limits are deployed, segregate investor lending and home lending, but for them, the risk they were seeing was around investor lending and it wasn't home lending.
Right. Well, when they were here last time, they said that they were concerned about both.
Okay. Well, at the time, their public statements are around that build-up of risk and that preemptive move around the build-up of risk around investor lending. But APRA will be here tomorrow. I'm sure they're happy to
check
talk
that
about
with
that.
them. So, what concerns do you have, if any, about these 5% deposits and the risk of people going to negative equity or other things like that?
So, in terms of high DTI lending, first-home buyers typically don't have high DTI lending, just because usually younger in the financial position they're in. So, this particular macroprudential tool doesn't really bite typically with first-home lenders. And
it restrains the number
Senator, I'm going to have to
loans institutions
can you wind up,
risky.
please? Sorry?
It restrains. It is designed to restrain the number of risky loans.
Yes.
So wouldn't a 95% loan be risky by definition?
Well, I think I don't have the details in front of me, but
Are you worried about
the lending standards? The same lending standards apply.
Are you worried
all
about
banks to consider? So that's a safeguard. But also, I think I caught the Minister for Housing talking about this the other day, saying that for a significant number of those coming in through 5% deposits, they had a deposit larger than 5%, and that for many of them they were ahead in their mortgages, and a number of them have transitioned off the program. What it's done is get them into housing earlier. Stop paying rent, pay your mortgage off.
But do you have any concerns about people going into negative equity?
Well, I think the responsible lending standards, the same standards that apply to other applicants for mortgages apply. So I think there are safeguards here.
And this matter was traversed quite a bit last night as well.
Was it? Where?
Yeah.
It was here.
Who did that?
Not you, obviously, Senator
Was I here for
Bragg.
that?
I think you were, yeah.
You're not a night person though, so maybe you'd clocked out.
Maximum payout.
Oh yeah, but we're not. I'm talking about that. We're talking about a different issue.
I think it's related, but we're going to have
They're
to
related, but they're
rotate
not the same
call.
issue.
I'm going to go to Senator Pocock.
Thank you.
Thank you, Senator Bragg.
I wanted to come to Treasury's paper, Regulation of Accounting, Audit and Consulting Firms in Australia. Thank you. This paper was published over 2 years ago, and we haven't heard any progress since, except through an FOI, and that FOI 4201 reveals that as of 2024, the Treasury was preparing, quote, an options paper addressing the issues examined during this consultation. Where is that options paper?
Michael Quinlivan, Assistant Secretary, Corporations Branch. Following that FOI, there were discussions with the government about what options could be, and there was a process discussed about...
I'm sorry, I can't hear you.
Sorry, there was a process discussed about what the next step would be. Options were provided at the time, but that was obviously before that was to the former Assistant Treasurer. Sorry, that was to the former Assistant Treasurer around that time. Following the change in Assistant Treasurer, updated advice had been provided to him about what that next steps could look like, and the timing of that's a matter for government.
So you've put options to the government in relation to this paper?
That's right, on what a consultation process could look like for taking policy options forward.
Well, the FOI committed, I think, to an options paper. Has an options paper been prepared?
A draft was prepared.
A draft was prepared. When was that prepared?
There was one prepared shortly after that.
So back in...
There was one provided to the former Assistant Treasurer.
2 years ago. Okay, so, Minister, why have we not seen any progress on this paper, which is incredibly timely today? Why have we seen nothing happen?
I'd have to take that on notice. Senator Pocock, I'll come back to you.
So, I want to go to this paper because it's very good paper. It foreshadows all of the mess that we're dealing with today in relation to KPMG. It lays out the issues really clearly in relation to the adequacy of prescribed governance requirements, adequacy of current professional standards, regulations and laws, whether the transparency requirements for accounting, audit and consulting firms are sufficient, adequacy of regulatory enforcement, protection of whistleblowers, competition and resilience in the audit sector. I mean, you couldn't have written a more relevant shopping list for things that need fixing in order to prevent the mire that we're now embedded in with KPMG. I want to go to page 13 of the paper where the issue of partnerships is surfaced, and it says, the current partnership limit of 1,000 for accountants may be too high. Our inquiry reported it should be 400. The Greens said it should be 100. In the absence of mandated government requirements or transparency requirements, the capacity to identify and probably assess risks may be impaired in large partnerships. Further, the report goes on. The growth of multidisciplinary firms raises concerns about the adequacy of penalties in the event of a breach, and then goes on to specifically canvass a bunch of audit standards and the way they are implemented inadequately. Minister, when will you provide an options paper out of this work?
I'll see if there's anything I can provide to you, Senator Pocock. I'll take it on notice.
Thank you. The FOI also showed that the Minister was given a recommendation to approve the publication of all non-confidential submissions to the consultation paper. 2 years on, we haven't seen anything of those submissions. Why have we not seen any of that material? They weren't confidential by the people who put them in. Why has the government not provided those?
I think I'll incorporate all of that into coming back to you on notice. I'm not in a position to answer that today.
I think only one of them was asked for confidentiality, so it's a puzzle. The Treasury's consultation paper, this paper, described the regulation of the Big Four as a grey area and described that, and quote, recent events have called into question whether the regulatory framework for accounting, auditing and consulting firms appropriately balances policy objectives such as supporting a competitive market while fostering appropriate conduct in the provision of key services such as audit, insolvency and tax. Does Treasury believe 2 years on after this paper, in the midst of yet another Big Four scandal, this one relating to audit specifically, that Big Four misconduct has, quote, called into question the regulatory framework of the Big Four?
Senator Tony McDonald, First Assistant Secretary, Digital Policy and Corporations Division.
Senator, I think, like you and as the Minister said, it's incredibly disappointing to see the reports come out about KPMG. Frankly, we would have thought that the sector would have learnt more from the experience with PwC. We've been working through a number of other issues, as you know, with the External Reporting Agency, and the whistleblowing review consultation that came through was released earlier this week. But we're currently working on expect to provide advice shortly to the government on the next steps on this paper, updated in the light of the additional experience and information we've seen from the KPMG experience. But I don't know, Mr Quinlivan, if you wanted to add any further to that.
So I will come to those two issues, the External Reporting Agency and the whistleblower, in a moment, but I want to deal with this, come to the structural issues which are at the heart of this disaster. We highlighted in hundreds of pages and hundreds of evidence witnesses in 2 reports that the structural location of consulting alongside auditing is just too tempting for some of the characters who inhabit these large firms, these large partnerships. They use work from one element of their activity to inform the other. And we have now learnt in KPMG, within audit, who are meant to be the respectable end of this business, actually use confidential information to inform the chasing down of audit contracts. So the structural problem is critical here, and it won't be fixed by improving rights for whistleblowers, and it won't be fixed by a new external reporting review, no matter how vigorous. So are you aware, I'm sure you are, that the Corporations Act ordinarily prohibits partnerships of more than 20 persons, but from 1998 has allowed partnerships, these big 4, of so-called accountants, up to 1,000 partners to operate outside corporations law? And what justifies this carve-out for these accountants?
I'm obviously aware of those provisions, Senator, and they're canvassed, as you said, in the 2024 paper, and as we said at previous estimates. Senator? Those are things that would be incorporated in our advice to government on the next stages forward.
So you have made recommendations in relation to the structural separation, for example?
We've provided advice on these questions previously, and we're updating that advice in the context of the additional information that we have from KPMG on the specifics of what that advice covers and sort of what the recommendations have. That would be matters that we would put to government.
In your report, in your discussion paper, you give data which shows that 80% of the Big 4 revenue is actually earned from commercial consulting and 20% from statutory audit and financial accounting. At what point should these Big 4 firms be considered consultant firms and not firms of accountants?
Well, ultimately, Senator, that's a policy decision for government. Sort of the key consideration probably here is that sort of you would have heard from ASIC, I think, last week, talking about the actions they're taking in regulating individual auditors and their behaviour. I think the question then becomes sort of how that applies, and our consultation paper would have talked about that for auditing, sort of the provisions apply at practitioner level rather than a firm level. The question of whether or not auditing should be a standalone business with no other sort of functions attached to it, that would be a big step, but that would ultimately be a decision for government.
Senator, we need to conclude at 3 for the RBA, but we will come back to this. So I might, if we can say thank you to Markets Group team, please don't go away, but we need to move to the RBA now, and then we can come back.
Well, you want us to go away but then come back?
Yes, please. Yes. Yeah, temporarily.
No problem. No problem.
Thank you.
They're on video conference, aren't they? So
yes.
I don't need to move.
Good afternoon. Can you hear me?
We can indeed, thank you. We're just waiting for the room to clear out.
Okay, no worries.
All right, thank you very much. Welcome to representatives from the Reserve Bank of Australia appearing today by teleconference. Welcome Ms Bullock, Governor of the RBA and colleagues there. Ms Bullock, would you like to make an opening statement? We have your written one tabled here.
Thank you. I would like to make an opening statement, Chair. So, good afternoon to Chair and members of the committee. I've got my colleagues here as Sarah Hunter and Chris Kent, and we'll be here to answer your questions. Before that, though, I wanted to just make a few points. As you know, our mission is to promote the economic prosperity and welfare of the Australian people now and into the future. And we do this by conducting monetary policy with the aim of maintaining low and stable inflation and full employment. And we also support the stability of the financial system. But our responsibilities go beyond this. We work to support a reliable, efficient and competitive payment system. We deliver efficient, effective banking services to Australian government agencies, and we provide secure and reliable banknotes. Now, since the February estimates hearings, the Monetary Policy Board has increased the cash rate to help return inflation to target. So I'm going to briefly outline recent developments in the Australian and global economy. I'm going to discuss inflation and the outlook, and then I'm going to conclude with some remarks on the bank's work on payments, including the recent review of card payments and what we call Project Acacia. So in the first half of 2025, you may recall that inflation was coming down and had declined to be within our target range of 2 to 3%. Labour market conditions were easing and employment growth was slowing. And of course, there was significant uncertainty, if you recall, about the economic outlook driven by developments in global trade policy. At the time, the board judged that capacity pressures would continue to ease and that it was appropriate to remove some restrictiveness from the stance of monetary policy by lowering interest rates. But inflation picked up notably in the second half of 2025, and to date it remains too high. This increase in inflation reflected a strong increase in output growth, which has added to existing capacity pressures in the economy and tightness in the labour market. So inflation was too high even before the conflict in the Middle East began. Conflict has led to a sharp increase in oil and other key commodity prices. This has already pushed inflation higher through higher consumer fuel prices. We've also seen some tentative signs that higher fuel-related costs may have been passed through into the cost of other goods and services, including new dwelling costs. And there are indications that there are likely to be second-round effects on the prices of goods and services more broadly. As I mentioned, this inflation impulse is in addition to the high inflation recorded in the start of 2026. Developments in the Middle East remain highly uncertain, but under a wide range of scenarios, the conflict could well contribute to even higher global and domestic inflation. The effects of the conflict on economic activity are less certain and expected to vary across countries. But for Australia, we judge that it will weigh modestly on growth. This would worsen the trade-off between inflation and economic activity. Now, as you know, the Monetary Policy Board has increased the cash rate by 75 basis points in total this year. These increases have been necessary to tighten financial conditions and slow growth in demand in the economy to ensure we get on top of inflation. We've already seen some signs that this tightening is starting to work, though it will take around 1 to 2 years for the full effects to fully flow through to the economy. One of the channels through which monetary policy can often start to have an impact quite quickly is the housing market. Conditions in the housing market have eased in recent months, and that partly reflects tighter monetary policy. Having said that, the recent increases in interest rates will have no impact on the increase in inflation already in train, following the increases in the prices of oil and related commodities. What these increases in the cash rate do, however, is help to contain the domestic inflationary pressures and second-round effects from higher oil and commodity prices. Now, I recognise that this is a difficult time for many households facing cost of living pressures. but it is important we bring inflation under control. If high inflation persists, it risks becoming embedded in price and wage setting behaviour, particularly given the prolonged period over which underlying inflation has been above 3% since the pandemic. And this would result in more persistent inflation and would require even higher interest rates and for longer to return inflation to target. High inflation hurts everyone, it reduces the purchasing power of all Australians, and it disproportionately affects those on lower incomes and the more vulnerable people in the community. Now, you may know we published our latest forecasts in the May Statement on Monetary Policy. Overall, the flow of data and developments since May has not been materially different to our expectations, but we will publish a full update to these forecasts in August. We expect inflation to increase further in the near term. In our baseline forecast published in May, headline inflation is expected to peak at over 4.5% in the June quarter, while underlying inflation remains above the target range until the middle of 2027. GDP growth is expected to slow this year, reflecting the effects of higher interest rates and the conflict in the Middle East. We expect the unemployment rate to increase over the coming year or so, but still remain lower than before the pandemic. We will be carefully monitoring conditions to assess how the combined effects of higher interest rates and the energy price shock are playing out. Employment is expected to continue growing gradually over time. And it's worth noting that the share of population with a job remains high, notwithstanding recent declines. And this is a welcome development for those individuals and their families and the wider Australian economy. However, forecasts are just that, and the outlook is highly uncertain. Alongside our most recent set of forecasts, we published 2 adverse scenarios that outline how the economy could evolve under a larger or more prolonged conflict in the Middle East. This would increase commodity prices further and would result in higher inflation and weaker growth than currently forecast. While these are challenging conditions, the economy is still expected to grow, even though modestly, even under these scenarios where oil prices are significantly higher than recent levels. Investment has been a bright spot recently, and growth is expected to continue in sectors of the economy with strong structural tailwinds such as software, data centres and renewable energy. The Monetary Policy Board will continue to assess the incoming data and developments here and abroad. Having raised the cash rate 3 times, monetary policy is well placed to respond to developments. Inflation is too high and the Board will do what it considers necessary to achieve our mandate to deliver price stability and full employment. Now, finally, I will briefly highlight some of the bank's work on payments. So following our review of card payments, we announced 3 key changes. Surcharging on debit and credit cards should end from 1 October. We're lowering interchange fee caps on debit and consumer credit cards, and we're improving transparency on payment costs. So together, these reforms will simplify payments for consumers and improve outcomes for businesses. In addition, the bank, in partnership with the Digital Finance Cooperative Research Centre, recently published the findings of Project Acacia. So this work explored how tokenisation of assets and money would enhance the functioning of Australia's wholesale markets. The project found that there's growing industry interest in the potential for tokenisation to improve efficiency and reduce risk in wholesale financial markets. Similar momentum is building in key financial centres around the world. So the bank is now in the planning phase on a range of subsequent initiatives aimed at promoting responsible financial innovation and ensuring the Australian financial system is well positioned for the digital age. So thank you, and my colleagues and I are happy to take your questions.
Thank you very much, Ms Bullock. We will go first to Senator Chandler.
Thank you, Chair. Thank you, Governor and officials, for your time this afternoon. Has the Reserve Bank formed a view on whether the overall fiscal impulse from this budget is adding to or subtracting from aggregate demand?
So I think our assessment at the moment, and we would wait to see what is legislated, but if everything goes according to plan, we don't see that it's much different than what we were foreseeing in MyEFO.
Okay. The budget includes significant new household transfers, including the fuel excise cut, the $1,000 instant tax deduction and cost of living measures. Has the RBA assessed whether these measures are likely to be stimulatory to demand at a time when inflation isn't yet sustainably back in target range?
So what matters for the budget, Senator, what matters for inflation, Senator, is demand relative to supply, and fiscal public demand adds to aggregate demand. Our assessment is that public demand relative to our forecasts in May, this budget is not adding anything further to public demand than it was adding in our further forecasts. I don't know if you want to add anything, Sarah.
Yeah, thank you, Michelle. I'd just add to that we don't just consider the federal budget, of course. We realise that's your focus, given this is federal parliament, but we have to look at the whole picture, and the states are actually very important in all of this. They account for the majority of government investment, for example, and around about half of current consumption. So we're also waiting until we get the full set of state forecasts, certainly the big state forecasts, because they matter in all of this as well.
But to be clear, the RBA hasn't done any specific assessments on those household transfers that I talked about.
The household transfers are part of public demand, and what we look is the aggregate.
Okay.
We don't do individual assessments of individual components of the budget. We focus on what the bottom line of public demand is in the budget. And to the extent that there is something there and there's give and takes in other areas, what matters is the total.
You've said that there's no additional, nothing additional being provided from the policies that are in this budget, but it's fair to say, isn't it, that a high level of public demand is already built into your forecast? Is that correct?
We've got a level of demand. You can make a judgment on what's high and low. I'm not making a judgment on that. I'm just saying that there is a certain amount of public demand baked into our forecasts, and when eventually things get legislated, then we will incorporate them into our forecast. But at the moment, based on what we've seen, we're not seeing additional public demand. It looks very similar to what we were seeing at MyEFO. Caution what Sarah said, though, of course, because there's still state budgets to come.
So sorry, just so we're very clear, in terms of when something is legislated, does that mean that your forecast will change when the Parliament passes the package that we've started the process of today?
No, I'm not saying that. I'm saying if everything goes as the government has put out in its budget,
sure,
then that doesn't look, as in terms of the public demand profile, does not look very different to what it looked like last time we did our forecast. So it's not adding or subtracting, it's just what it is.
So public demand is growing at 3.7% this year in your forecast, is that correct?
Yeah, so Senator, that's our forecast from May that we put out just before the federal budget. So we expect through to the June quarter this year that the year-on-year increase in public demand would be 3.7%, and then you can see that growth rate tailing off as you move through the next 2 years of the forecast horizon that we have.
2.8% next year, that's correct?
Yep, through to June 27, that's right.
That's still much faster than real GDP growth, though, isn't it?
That is faster than we expect real GDP growth to be at that point. Obviously, it's a forecast. And just to clarify, when the Governor was saying about what's legislated, what we care is what's actually going to happen. And so we wait to see what actually is implemented. So it's not a question of what's in papers or what's in the newspapers or anything. It's just what's actually implemented. And the next point for us is August, which will be more than enough time for us to have a look at what's actually implemented between now and then.
Okay, thank you. Just on the Working Australians tax offset, which will commence in 2027-28, has the RBA had any engagement with Treasury about the timing of that measure from a monetary policy perspective?
No.
Okay. Governor, can you confirm that the RBA's current central expectation for when the cash rate will return to a more neutral setting, and whether that expectation has been revised since the budget was handed down?
So I probably should just be very clear here, Senator. When you see assumptions about the cash rate in our forecast, they are assumptions. They are not our expectations. They are market expectations, and we use them as a conditioning assumption on which to base our forecast. So they are not our expectations. Now, having said that, they are market expectations, and market expectations at the moment are for one more increase in the cash rate. I'm going to defer to Chris here. One more increase in the cash rate by the end of the year, and then a slight decline, I think, next year. But Chris, did you want to elaborate?
No, just to reinforce exactly what you just mentioned, Michelle, but with regards to the budget, what we do when we bed our forecast down is look at what the market expectation is and then use that for our forecast. That's an assumption. That's very mechanical. And that market expectation has eased a bit since we did them, the forecast in May, but that's not following the budget. That was following some slightly weaker data than markets had expected on the monthly inflation and then the monthly labour force data.
Thank you. The government has made a number of statements about the relationship between government spending and the task that you have as the RBA. Does the board share the government's characterisation that its budget settings, including Commonwealth spending being at a 40-year high as a share of the economy in 2026-27, will support the return of inflation to target range?
The board doesn't have a view on the government's budget. The board basically is focusing on what the difference between aggregate demand and aggregate supply is inflation, takes the rest as given, and is going to adjust monetary policy appropriately.
Thank you. Just back to some questions that I did go over with Treasury earlier on today. So if you were listening along, apologies if they're a bit repetitive, but we were asking Treasury earlier, it's been widely reported that there are significant differences between Treasury's near-term forecasts and your near-term forecasts. In 26-27, the RBA is forecasting 1.4%, while Treasury is forecasting 1.75%. And the next financial year, again, the RBA forecasts 1.4% and Treasury is forecasting 2.25%. So there is a real difference there and it is growing. Can you please outline the reasons for this difference?
So I'll make a couple of opening remarks and then I'm going to pass to Sarah for some details. The first point I would make is that we just dropped off.
No, we can still hear you.
Oh, you can still hear us? Okay,
yes.
Good. So the first point I would make is that forecasts are forecasts and reasonable people can differ on forecasts. The second point I would make is that we talk to Treasury, but we do have difference of opinions on some things, and one of the things I think is on the gap between excess demand, aggregate demand and aggregate supply. But look, I'm going to pass to Sarah because I think she has more of the detail on this.
Thank you.
Yeah, thank you for that, Michelle. I think I'd reiterate Michelle's first point. I think that's really almost the most crucial point here, that economists and reasonable people more broadly will definitely hold different views as to the outlook and how things are going to play out. In terms of the GDP forecasts specifically, I thought I'd talk a bit to what's underpinning ours and why we land where we do, and what I understand are some of the differences with Treasury. But before I do that, I also wanted to just point out that other aspects of the forecasts are actually pretty similar across the two institutions. In particular, the outlook for the labour market is pretty similar, and the outlook for inflation as well. So this one aspect is there is a bit of a gap, but it's not sort of uniformly replicated across all of those key economic indicators. In terms of our forecast, so we think that the economy is going to go into a bit of a slowdown now. In fact, we saw a slowing in growth momentum on the quarter in the national accounts data that we got yesterday. That wasn't a surprise. In fact, the data yesterday was broadly in line with what we were expecting, but we can come back to that. And so by the time we get through to the June quarter next year, we think that GDP growth momentum, as you said, will be around about 1.4%, so 1.5%. Or near enough. That's slightly below the pace that we think the economy can sustain on a trend basis, which is around 2%. You could also describe that as the pace that the economy's supply capacity is growing. And we think that we'll stay at around that pace of growth, as you noted, through to 2028. That's really a product of the fact that we think the cash rate settings that we assumed in our forecast horizon, to reiterate what the Governor said earlier about them being an assumption, not an expectation or an internal judgment. We think that the cash rate holding at around 4.6, 4.7%, which is the technical assumption, you can see it in the S&P, will mean that it's somewhat restrictive. And so that being restrictive means that growth momentum in the economy, so the pace of GDP growth, will generally speaking be coming in below that pace of trend growth. So that's that gap between the 1.4 and the around 2%. And it's that gap that means that we reduce capacity pressures in the economy. The output gap moves to close in economist parlance. And that brings inflation back down, as you can see at the end, to around 2.5%, which is our target, obviously. In terms of some of the differences with the Treasury team, when you spoke to them earlier, they are obviously far better placed than me to talk to their own forecasts, but just a couple that I'd highlight. One is that in terms of our productivity assumption, I think Treasury did outline earlier that over the forecast horizon we're talking about here, which is just the next 2 years, we're not so different in terms of productivity outcomes, but on perhaps more of a medium-term basis, they do have a slightly higher rate of productivity growth than we do. Ours is an assumption that really anchors us for the 2-year horizon, and it's 0.7% year on year for labour productivity growth, but it is just a 2-year assumption. I'd also say that there are other differences around our assumptions for population growth. Again, we use the Centre for Population Studies forecast, but we obviously use their pre-budget numbers. We didn't have access to the budget numbers when we put these together. I understand there's a few differences there. And you can get a few other differences around labour supply more broadly. But I think really it does come back to, in a very headline sense, to the point the Governor made earlier. Different people can take a different view of what the outlook is going to look like. We do that. We do our forecasts independently, absolutely. We do talk to our colleagues in Treasury on a regular basis to discuss current conditions and the outlook at the moment. We're also discussing clearly the global outlook, which is really important right now. But, you know, the forecast teams, and in this particular case, have slightly different profiles for GDP growth, but I would expect there to be differences. Very, very strange for us to completely agree all the time.
That being said, given that you will be making decisions based on your outlook and fiscal policy decisions are being made on a slightly rosier outlook, are you concerned that this divergence between your view of the world and Treasury's view of the world may mean that monetary policy and fiscal policy are not working hand in hand to tackle inflation?
No, I'm not concerned about that. I mean, as I said, our focus is on inflation and keeping full employment to the extent we balance those two things. We just have to take fiscal policy as given, and we do. And the extent to which our forecasts are slightly different from theirs plays out in a discussion at the board table, and board members are welcome to bring different views to the board. And I can tell you different board members do bring different perspectives to the board table. So I'm not concerned that it hampers monetary policy at all.
Thank you. Senator McKim.
Thanks very much, Chair. Good afternoon, folks. Thanks for your time. Ms Bullock, you've made it clear that the latest round of interest rate rises was, at least in significant part, about ensuring that inflation expectations don't get embedded into the economy. Is that fair?
Yes, it is, but it's also the key point that you didn't state was that it was in reaction to the fact that inflation was too high. It was a reflection of the fact that we had excess demand in the economy. Yep. And what you have to do in those circumstances is dampen demand, which in our case means raising interest rates because that's our instrument. If we don't do so, then there's a possibility it will get ingrained in inflation expectations. But the proximate issue here was excess demand in the economy.
Yep, thank you. And when you say ensuring that inflation expectations don't get embedded, Can I ask what you're actually referring to here? Because historically that has been taken to mean workers demanding higher wages. Now I'm going to assume that you're actually not concerned about a wage price spiral here and are potentially more concerned about firms that know that they can take advantage of excess demand. Is that fair?
No, I don't think that's fair, Senator. I think what we're saying is that what happens when inflation expectations get ingrained in everyone's conscious. So it's workers, it's firms. If everyone starts to think, you know what, the new normal is 3 or 4% inflation, so workers think, well, 4% is good for wages, and they're getting what inflation is delivering, and firms are putting up their prices by 4%, so it's just inflation. That's what I'm talking about. It's not one set or the other. It's about everyone just saying, you know what, inflation's been above 3% for 6 years. The new normal is 4%. That's what I'm worried about.
All right. So last month, the RBA released its analysis of price-setting behaviour of firms during supply shocks. That analysis found, and I'll quote, a decline in price rigidity as firms became more willing to adjust prices. And it also found that decline in price rigidity contributed meaningfully to the sharp rise in inflation in 2022 and 2023. Ms Bullock, I've previously asked you in the context of the supply shocks caused by the COVID pandemic whether you thought that some firms or some sectors, I'm directly quoting from my question here, some firms or some sectors are using the cover of a significant rise in inflation and a lack of competition to boost their profits over and above what would be required to meet increases in their input costs. Do you share the same concerns now, given the supply shocks that we're currently experiencing? That is, that some firms or some sectors in the economy are using the cover of these supply shocks and a lack of competition to boost their profits over and above what would be required to meet increases in their input costs.
So you're talking about markups and margins. In fact, we released a bulletin article fairly recently about caution in interpreting increasing margins and inflation. So I would suggest you don't conflate increasing margins with inflation necessarily, because they can have different sorts of impacts depending on the circumstances. Having said that, if firms can, and I've said this before as well, firms can only put up their prices by more than their costs are inputting if, as you say, there is a competition issue. There might be a competition issue. But in addition, they can only do it if demand allows them to do so. So in circumstances where demand is running stronger than the economy can accommodate, then yes, you can end up with firms putting up their prices by more because demand doesn't slow. So the whole point about raising interest rates and trying to slow demand is to try and bring back that impetus for higher inflation. So I think it's easy to say that firms will just raise their prices by more than cost, but they can only do it if demand isn't impacted by that. And at the moment, our judgment was, prior to the conflict in the Middle East, even then, that demand was running too strong for supply. And that's the reason why you could pass through cost increases, because demand was allowing you to do so.
Yeah, I understand that point you're making, Ms Bullock, but can I ask again whether the RBA is concerned that firms, particularly firms in highly concentrated sectors of the economy, are using the cover of the current supply shocks that we're enduring to increase their prices over and above what would be required to meet increases in their input costs?
I have no evidence to make a comment on that, Senator. I have no evidence to suggest it is.
All right. Well, can I ask this then? Is the decline in price rigidity that the RBA identified in its analysis of price-setting behaviour of firms during supply shocks. Is that decline in price rigidity more prevalent in highly concentrated sectors of the economy?
So I'm happy to talk to that particular research paper and just to reiterate what the Governor said, I would encourage you as well to have a look at the bulletin article that was released just last week, because it does talk to this topic and has some empirical evidence that the Governor just referred to. But that particular research paper wasn't looking at the degree of concentration in any particular sector. It was actually focused on retail sector, because that's where we have access to new data that really allows us to dig into this question empirically in a way that we couldn't before. So to understand how quickly prices are being reset, this paper makes use of effectively scanner data. So individual products in the retail sector, looking at their pricing over time, being able to strip out sales events and what have you. So it's really detailed data, but it is just for that one sector. So it can't innately talk to the question that you're asking about. I would also say as well that this particular paper was really looking at what the pricing response from businesses was through a period of time, as I'm sure you remember, when we had substantial increases in costs going on. So this was during COVID, where we had supply chain disruptions. We had big shifts in the patterns of consumption across the global economy, here in Australia as well. And so we had some products that were being imported in many cases where the prices were rising rapidly as imported prices. And this was really trying to get at how quickly are businesses resetting their sales prices as a reflection of what's happening to their cost base. Yeah. So it wasn't really talking to a question of margins. It was really trying to get a handle on, in an environment where we've got costs moving quite rapidly, and that we're in another environment like that right now, of course, with the shock in the Middle East flowing through,
that's my point.
What the firms do. So it wasn't really talking to the question you were asking.
No, I understand that, and that is in fact my point, that although the circumstances are different, we're in a similar environment right now because of the illegal war that's being perpetrated on Iran by the US and Israel. But can I just ask, why wouldn't the RBA be interested in whether the decline in price rigidity that you identified stemming from the COVID period was more prevalent in highly concentrated sectors of the economy?
I wouldn't describe it as not being interested. As researchers and analysts and economists who are working in this space, we work with the information that we have and we dig into questions as we can. Again, I'd point you to the bulletin article, which was looking at different data sources, not as high frequency. It can't draw the same conclusions, and we couldn't use the same empirical techniques on the data that bulletin article talks to, because it's just not as detailed. But it does talk to some of the questions that you're asking. And to reiterate what the Governor just said, in that paper you can see, if you look at the different measures and metrics we have for margins and markups, and they're not actually the same thing, they're used interchangeably, but they're not the same thing. You can see that there aren't necessarily trends that we can identify in those data series by sector, but those data points and data sets are quite different. They're very aggregated. They don't let us dig down, certainly not to anything like the firm level, but they don't even let us dig down into what you might consider to be different sectors or industries within the economy. They're very high level. But the data is what it is, and we do with it what we can. Okay. This particular RDP was taking advantage of a new data set that we've only just got access to. Of course, we want to expand our horizons and make use of new information, and this is one of the ways that we're trying to do that.
Okay, thanks. Ms Bullock, back on to my previous questions about inflation expectations, and you, I'll paraphrase you here, but you said it's a range of matters that you're concerned about around the potential for inflation expectations to be embedded. But as I pointed out, historically that has been in significant part concerns about workers demanding higher wages. I mean, you're not seriously concerned about a wage price spiral here, are you? Workers are just like, real wages are either stagnating or declining, depending on how far you want to go back. And workers basically just have to cop whatever they can get now. They don't have expectations of their real wages climbing anymore because they just haven't for so long.
I said no.
So you're not concerned?
Not concerned about a wage price spiral, no.
Okay. All right, good. So,
Senator, 2 more minutes.
all right. Well, I'll just park it there because I've got another series of questions. So I'll come back. Thank you.
Senator Canavan.
Thank you, Chair. Look, thank you, Governor. And note in your opening statement, you mentioned that you've increased the cash rate by 75 basis points this year. Was it a mistake to cut rates early last year?
No, I don't believe it was, and I don't believe the board thought it was. Circumstances changed, Senator, and when circumstances change, we have to change. I actually recall that when we were gradually cutting rates through the first half of 2025, inflation was, underlying inflation and headline inflation actually was back in the target band. The unemployment rate was rising and we were copping a lot of flack for not cutting quickly enough. So, no, it wasn't a mistake, Senator.
So if the inflation that did break out then early this year, before, as your opening statement notes, before the Iran conflict, why did that happen?
What happened there was that there was a slowing in demand, and what happened was that a little bit as interest rates came down, but also there was a rebound in demand, particularly consumption, I think, rebounded a bit more than we thought. There was wealth effects coming through from the housing market, and things just rebounded more than we thought. The other thing was that the supply capacity of the economy was less than we thought it was. And so it didn't take much of a rebound in demand, which we saw through the second half of 2025, before it ran up against capacity constraints. So that was why things started to move. The other thing I would point out, and I pointed it out in the statement, is that through 2025, the first half of 2025, you might recall that the trade issues with the United States were really front of mind for everyone. Everyone was really worried about the world economy. People were very uncertain. People were worried about what it might imply. As it turned out, through the second half of 25 and it continues now, the AI boom in the United States is absolutely supercharged everything. Many of our trading partners who were expecting to be very badly impacted by the trade restrictions and the tariffs, they weren't impacted nearly as much by those, and in addition they got a huge tailwind from AI, so that's really helped us as well. So all of the circumstances that look like, you know, we were deflating, we were seeing inflation come down, we were seeing activity slow, the world was seeing activity slow, all of a sudden everything reversed. And that's goes for us, and it goes for a number of other countries as well.
Right. But in your answer just there, you said that the supply capacity of the economy was less than we thought and that things rebounded more than we thought. If your thoughts were wrong, didn't you make a mistake in cutting interest rates last year?
I don't believe we did, Senator. I think we were doing the right thing at the right time. We were trying to be forward-looking in looking at what was happening to the data and where our forecasts were leading us. And as I said, if you recall, the views about the Australian economy and the world economy in that period when the trade tensions were going on was very, very poor.
I mean,
everyone was downgrading their forecasts. It was, everyone was worried. What ended up happening was, of course, that the tariffs didn't end up being anywhere near as bad as everyone thought to begin with. And so there was a whole lot of things changed. Forecasts can't take into account these sorts of things. We know we're in uncertain times. We're in new uncertain times now. Forecasts are difficult. We have to do them because we can't be backward looking. But if it turns out that the forecasts are changed because of external factors or because perhaps they weren't quite right in the first place, then you change. And that's what we did.
Yeah, that's right. Yogi Berra is right about forecasts. But I thought, at least in part, why we appoint people with expertise to the RBA board and yourself is to look into the future, to make predictions. And there's nothing wrong with getting it wrong, but I think your evidence today indicates you got it wrong, and therefore you made a mistake. But I'm not so concerned about you making mistakes. I'm more concerned you not being able to admit to it. That concerns me more greatly. If you've made a mistake in your forecasts, haven't you made a mistake with your decision?
Senator, one's got to make forecasts, otherwise one is looking in the rear view mirror, and everyone with hindsight can say you made a mistake. So no, I don't accept we made a mistake, and in fact I think if we hadn't have been lowering interest rates at the time, if things had turned out differently with respect to the trade restrictions and so on, we would have, if we hadn't have been lowering, people would have been screaming at us, why weren't you? So no, I don't accept we made a mistake. We work with what we've got. We have to make forecasts. We know they're not perfect, but we have to do them, and we have to act on the basis of what we think is our best guess. We do scenarios to try and get a feel for where the risks lie. And in those circumstances back then, where we saw the risks lying was more on the downside. Turns out we had changes that meant risk came up on the upside, so we changed.
So just moving to a different topic, we saw yesterday's national accounts, another disappointing result for productivity, and productivity has now been negative for over 4 years. It's never been anything like this in recorded history. How concerned are you about our productivity performance and how it might restrain your decisions and their impact on potential inflation?
Well, yes, concerned, and B, we can't grow any quicker than supply side allows us, and you can't get any growth in real incomes if you don't have productivity growth. So, but that's not something we can control. All we can do is set policy appropriately.
It was the issue last year when you lowered interest rates, and as you say, the supply capacity economy was less than we thought. Is part of the reason for that lack of capacity and supply our poor productivity performance?
Yes. Yep.
Yeah, I could probably provide a bit more detail on that, Senator. So if you go back to our August Statement of Monetary Policy, you'll see in there that there's a special chapter on productivity, which, and in that we outlined recent performance and effectively built up why we were at that point downgrading our medium-term assumption for productivity growth from 1%, that's labour productivity growth, from 1% a year to 0.7% a year. That's the assumption that sort of anchors the back end of our forecast, if you like. So we're only looking at a 2 to 3 year forecast horizon, but we do, as the Governor's just said, we do have to take an assumption on that because we need to think about, well, how fast can the economy grow, and productivity growth is obviously a really important part of that. So August last year, we actually published that piece of work and incorporated that new judgment, new assumption, if you like, into the forecast. And we haven't changed it since, so we've held that through to where we are today. I'd just also like to say, in terms of the productivity performance for the March quarter specifically, we have said this before, but I do think it's worth saying again, we wouldn't really look quarter to quarter at productivity outcomes. They're very volatile. They can be knocked around by all sorts of one-off temporary factors. And so we don't typically look quarter to quarter. And in fact, we were anticipating prior to yesterday's data that we might get a decline on the quarter in productivity as a mechanical outcome from what we saw of labour market outcomes and what we expected to see for GDP. Because those two things, broadly speaking, came in line with our expectation, we weren't surprised by what we got yesterday. But I would certainly point you to that August SMP special chapter so that you can see and read more of our views on productivity.
So you're at 8 minutes, Senator.
How much?
8 minutes.
Okay, thank you. The Statement on Monetary Policy has a forecast productivity growth rate of 0% for the June 26 quarter. I just was a little confused by the heading of that table. Is that year on year or a quarter on quarter growth rate?
That'll be a year on year number. Right. And for us, labour productivity is output from the non-farm sector per hour worked. So we strip out agriculture effectively because that, as I'm sure you're very aware, gets knocked around by weather and other events that really are random. So we don't tend to focus too much on that. We take that out. And we're looking on a per hour worked basis because that's our measure for labour input into the economy.
Okay. I think we took evidence earlier that the Treasury is forecasting a productivity growth rate of 1.2%. That seems way above yours, though. So what's the reason for the difference?
Well, I don't have the Treasury numbers to hand, and I'm not sure if that was their assumption for the sort of medium long-term productivity growth rate. So that would be, I think, their 5 to 10 year assumption. I don't know what they're forecasting for the June quarter specifically, but I do know that their forecast and ours are not so different for the June quarter, so I'd be surprised if they're very different, but you'd have to take that up with them.
Okay. Are you concerned then with this low productivity performance, another energy crisis, which the International Energy Agency says is the worst since the 1970s? Are we at risk of entering a period of stagflation?
Well, it depends on what you define as stagflation, but what I can say is that we are seeing the trade-off between inflation and growth go the wrong way. Inflation and unemployment go the wrong way. So for every level of unemployment, what we're experiencing is higher inflation. So that's not a good thing, obviously, because, as I've said earlier, inflation is bad for everyone in the economy. And that's why, as I was answering Senator McKim, I was making the point that we want to make sure this is a one-off lift in the price level and not embedded into expectations about continual rises of this nature. So that's the key.
Okay. Well, thank you, Chair. I'll happily rotate the call. Thank you.
Senator Bragg.
Thanks very much. I just wanted to ask you a few questions. Firstly, about the 5% deposit scheme. Do you have any concerns about the way that the scheme may be impacting house prices or increasing prudential risk in the system?
No, we have no concerns, I don't think, about increasing prudential risk in the financial system. We have observed that there has been an increase in first home buyer interest. I think we've seen a lift in that and in credit to first home buyers, I think. And we've also seen an increase in the loan to valuation ratios reflecting that. But we don't have any concerns that that's in any way threatening financial stability.
Okay, and have you had any input into the deployment of APRA's macroprudential tools to rein in risky lending at some level?
So the way it works, Senator, is that the Reserve Bank provides advice to APRA, or the Reserve Bank, the Monetary Policy Board, provides advice once a year to APRA on where it sees the financial stability risks. And then APRA take that and they make decisions on their macroprudential policy. We do not tell them what to do with macroprudential policy. We provide them with the analytical input about financial stability risks, and then they decide whether or not they will take action, and if so, what they will do.
Have you given any thought to the risk of people going into negative equity?
That is something that our financial stability team do look at, Senator. At the moment, practically no one is in negative equity. Negative equity matters if people get into trouble with their loans and then they have to sell their homes to meet that. That's why a strong employment market at the moment is really important, because when people have employment, the things that end up with people having to sell in distressed circumstances are often loss of employment, family breakups, those sorts of things. So at the moment, if you look at negative equity, though, it's absolutely minuscule. It's not big at all.
Okay, so what sort of forward projections are your internal analysts imagining are you doing scenario planning?
We do scenarios. We do look at, if you look at our financial stability review, we often do scenarios in there about what sort of things would result in large increases in negative equity. We also do some work on looking at households that are, in effect, we try to do estimates of the percentage of households that are paying out more in mortgage repayments than they have spare income, disposable income. That's fairly small, and it's actually declined over the last year or so. So we do these sorts of scenarios, but I have to say, because of the increase in the house prices over the last few years, as I said earlier, negative equity is a very small share of loans.
Okay. I just want to take you to an FOI that's recently been released from the bank, which talked about some of your internal deliberation on housing policy. So am I right in saying that in relation to dwelling investment, so that goes negative from 27, doesn't it, under your projections?
Yeah, so that's the negative number is the growth rate in dwelling investment activity as captured by the national account. So yes, you're right, we have positive year on year through the sort of first half of the forecast horizon, roughly speaking, and then we tip and have some negatives. So that would be the level of activity dropping from where it gets to. So it's a cycle, if you like. It's a bit of a hump shape profile for the level of activity.
Yeah, so according to your projections, the housing accord won't be met, will it?
Well, Senator, we actually discussed this, I think it was about a month or so ago at a separate hearing. We don't, on a regular basis, do forecasts for dwelling completions. And that's certainly the case today. We haven't done a forecast of dwelling completions that's consistent with our May SMP forecast. What we do have is a housing market and rental market model that does work on a sort of approvals, completions, number of dwellings basis, if you like. We use that to really dig into housing market dynamics. We can look at how what that model would say about how dwelling approvals and what have you could evolve. But it's not, because it's not part of our core forecast framework, we don't do those forecasts on a regular basis. So I can't tell you, what our current dwelling investment forecast profile means for completions, because we haven't done that, that work.
But I mean, page 6 of this FOI says the annual completions implied by our forecast remain below the national housing accord targets, including the 1 million target and previous peak. So, I mean, the target is 1.2 million. So, So
it's certainly true that the latest dwelling completions number, if you just annualise that, that's running below what would be consistent with building 1.2 million homes over 5 years. So that's true about and a statement about the historical data, but what I can't tell you is what our current forecasts imply for future completions, because we haven't done that work.
I understand that, but your current analysis is released under FOI.
Well, that analysis was from, I think, around about a year or so ago. I'd have to check the date, so I can't confirm that, but I think that it was dated from around about that.
Okay, but I mean, as a reasonable person looking at these documents, you assume that your view is that just as the National Affordability and Supply Council says that we won't hit the core target of 1.2 million houses.
Well, I think Sarah's already said, Senator, we have no forecasts on that. That may well be the case, but that is not our job. Okay. Our job is to keep inflation low and stable, and the best thing we can do for helping the housing market is to make sure we keep inflation low and stable. That's the best thing we can do.
So I understand that's not your. I understand your job is to fight inflation, and we wish you well in that endeavour. Of course, it's a very difficult challenge, but like you do, it does say in these documents you have forecasts, and.
So as I said, Senator, we have a separate model. It's the Tulip Saunders model that's named after a couple of people that used to work at the bank who actually developed the thing in the mid to late 2010s.
Very famous.
Very famous. So it's used right across the country, and it is the benchmark model. So we have that, and as I said, what we really primarily use that model and that model framework for is looking at housing market dynamics. It helps us to understand how prices might evolve, rents, vacancy rates, these sort of important features of the housing market. And as the Governor said earlier, we are interested in the housing market because it is an important transmission channel for monetary policy. It's also an important sector in the economy, full stop, and it's rightly getting the attention that it needs. But we don't use it as part of our core forecasting framework. That's really what we're really interested in the context of inflation, is the amount of activity that's happening in the economy. With respect to housing, that activity is broader than just dwelling completions. It includes alterations and additions, for example. It's important what type of housing is being built. Is it a detached dwelling versus an attached medium high density? All of that sort of detail and richness really gets aggregated up for us in the National Accounts Framework and Dwelling Investment Series, and that's the real focus for our forecast. So that's why we focus our attention there, because that ultimately is what really matters for inflation outcomes, for that balance of demand and supply that the Governor was talking about earlier on.
Okay, so as per these documents, it says that your forecast suggests that we won't get to 1.2 million. So, I mean, have your forecasts changed since these documents were prepared internally?
Well, I think that's what Sarah's saying.
Yes, yes, they have. So the forecasts are updated once a quarter. The core forecasts are updated once a quarter and released in the SMP. As I say, I would have to go away and just check the dates on these documents and on those particular numbers, but they're not from May 2026, so they're not consistent with our latest forecast. So yes, the forecasts change.
You're at 9 minutes.
If you could provide those on, we get those on? Sorry,
just 9 minutes.
Could you get those on notice to us?
The dates for these documents, yes, I think we can provide this to you.
Okay. In terms of staying with these documents for a second, what about the issue of migration in housing policy? You've flagged it as one of the, what do you say? How does government influence the housing market? And you list tax and migration. So, how in your mind does migration affect housing policy in Australia?
So that was those points being called out were really highlighting, if you like, what are the fundamental drivers for housing demand and housing supply, structural features of the economy. And just starting on the demand side, that's where migration comes in. So ultimately, demand for housing is the number of households that are forming in the economy. And that's really a function of three things. The natural increase in the population, so that's births minus deaths, to be very crude, and I'm sorry for that. It's net migration, so people that are moving here minus the people that are leaving. And then it's we capture it through average household size. But to how many households are formed out of that total resident population. And all that document is really highlighting with respect to migration policy is that obviously the migration policy settings have an impact on the number of people that might migrate to Australia. And so that then comes through in the population numbers. It was really just saying that it was almost a mechanical statement about what are the drivers of housing demand ultimately, and obviously that comes back to population.
Last question, Senator Bragg.
Sure. Does migration add to housing demand?
Well, a growing population increases demand for housing, and just migration as part of that, yes. But really what matters ultimately, certainly for us in thinking about inflation and monetary policy setting, is the interaction of demand with housing supply. And so, for instance, as an empirical sort of observation from history, Australia, generally speaking, has built, completed more dwellings per person than in other countries with slower population growth. That's a supply response to demand. So we're really interested in both sides of the equation, not just one side. And that's indeed why the document that you're referring to calls out features that are reflection of the supply side of the equation rather than demand, which would be the tax settings and the regulatory settings.
Okay, thanks. So I just have one more and then I know I'm done. So can I just ask you, in relation to the other point on that page, was you indicated that tax settings could be a factor. So what do you say about this latest, these significant tax changes to housing and to CGT? How does that affect housing, do you think?
Well, so we're obviously still digesting those, as I think everybody is, and we'll be looking at how they come through into the established housing market, and then over time we'll be looking at how they come through into approvals. But we haven't got any analysis that we can provide to you at this stage. They're very new. But I guess what we can say is what we hear from some of the banks and other contacts that we talk to is that the tax changes do seem to be having some impact in the established dwellings market. That's not unexpected. I think the Treasury analysis that was put out as part of the budget also anticipated that. But I can't give you any more than that. It's very new.
It's new. We have, in the past, when we've done work on this, I mean, we've thought it would impact investor demand. That might mean that it's easier for first home buyers to get into the market. You might recall back in 2014, 2017, when APRA put on restrictions on first interest-only loans and on investor loans. Investor lending came up, and in fact, first owner-occupier lending came up, including first home buyer. So it might mean that there's a bit of a change in the mix of housing. What it does eventually in the long run, I don't think we necessarily know. It's a bit uncertain. But certainly one expectation, certainly from our work in the past and just some observations relative to 2014, 2017, is that you might see that if investor demand does come up, you might see a switch.
Thank you. Senator McKeeman, I think you're going to share your block with Senator Pocock.
I am indeed, Chair. Thank you. Ms Bullock, there's been more discussion about stagflation recently than there has been for some time. Has the Reserve Bank seen any indication that the global economy is heading into a period of low growth, rising unemployment and rising inflation?
So the first thing I'd say, Senator, is that this has been a massive supply shock, and when we get supply shocks, what happens is that, as I said earlier, the trade-off between unemployment and inflation worsens. That's what happens. The key, though, and this is what you will hear central banks around the world talking about, is that there is, with supply shocks, there is some ability to look through the initial direct impact, but central banks are very focused on making sure that there are not second-round effects, that the price level change, because of the supply shock, doesn't turn into a consistent inflation shock. So I don't think anyone thinks that there is stagflation going on around the world at the moment. I think what central banks are being very focused on is making sure that we don't end up in a situation where we have permanently higher inflation. That's what central banks are focused on.
Thank you. As part of the discussion, CBA's economics team under Luke Yeoman have made a distinction that we're experiencing an impulse of stagflation, but not yet a drawn-out, persistent episode. And of course, that kind of episode would require prolonged inflation, a feedback loop between rising wages and prices, higher inflation expectations locking in. Would you agree that we are experiencing an impulse of stagflation?
No, I wouldn't even use the term stagflation in the current circumstance. I think we're in a supply shock, and stagflation is about their second point, which is about a prolonged period of high inflation and very poor growth and poor employment outcomes. We're not in that situation.
All right, thanks. So you went to this a little bit in your opening statement, but there's going to be lag effects to the supply shock that we're currently undergoing, sort of second round inflation effects. Sorry, I'm using lay terms here, but everything from food to anything that needs to be moved around by vehicles or boats. Do you not think that those circumstances are potentially a precursor to a stagflationary episode?
It goes back exactly to what we were talking about before, Senator, which is making sure that people see this as a price level shift and not a shift in the level of inflation. And that's where inflation expectations come in. So what we need to make sure is that to the extent that the price of fuel has gone up and it stays there, that's introduced a permanent cost increase to many industries as well, so they will put that into their prices. But there it should stop. But if it gets into inflation expectations, it won't stop, and that's the whole point. You've got to constrain it to a price level. And what central banks are talking about second round effects here, they're talking about the possibility that the second round effects of this get embedded into people's psyche, and then you end up with inflation expectations adjusting. So that's really, yes, and we fully expect in our inflation forecast, that's what we've got embedded in there, the fact that there is going to be flow-on effects to industries and firms that use products that are impacted by the fuel price rise.
And can I just add something? I mean, on the globally, markets are thinking, yes, inflation will be higher in the next 1, 2, 3 years, but much further out beyond that, not persistently higher. And inflation expectations from a range of measures in the longer term, 5 to 10 years out, are very consistent with inflation targets. And part of that is because central banks are expected to respond. We've responded, the Norwegian central bank has responded. I would argue the Fed has responded by not cutting rates, which they were widely expected to have done of late. And others are expected to be raising rates a bit. Now, whether that's sufficient or not, time will tell. But I think that says there's not a widespread expectation of stagflation, i.e. persistently high inflation. That doesn't mean there won't be a period of some higher inflation and some weaker growth for a time. But beyond the next year or two, markets and economists globally are not looking for that. That doesn't mean there couldn't be further pressures if the supply shock worsens. But central banks are expected to have learnt the lessons of stagflation of the 70s and get on top.
And it's worth pointing out, Senator, that if central banks don't respond, then that's when expectations will start to move.
Yes, I mean, it's a very uncertain world that we live in at the moment, and assumptions can vary wildly in terms of the potential for supply shocks, new supply shocks or extensions of existing supply shocks. But last question on stagflation. The Deputy Governor, Mr Hauser, recently described stagflation as a central banker's nightmare. Is that because ultimately if the world is heading into a period, whether it's an impulse or a persistent episode of stagflation, that central banks need to basically choose between inflation and a recession?
The reason I think it's a nightmare is because we have a dual mandate, but it does mean that in order to, as we saw from the 70s, if you are going to get inflation back down from high levels, and I have to say, we're still only in the 3s and 4s here, we're not in the 17s in inflation. But if inflation does get high and you end up in a very severe period of stagflation, the only way to get it down is to increase interest rates substantially, and that is likely to mean a very bad growth outcome and potentially recession. So we don't want to go there.
All right, thanks. I appreciate your willingness to engage in that discussion, and I'll ask Senator Pocock to fill in the rest of the block.
Thank you. I have a couple of questions about KPMG. Do KPMG play any role in the audit of the bank?
Yes, they do, Senator, but we don't have a direct relationship with them. We have a relationship with the ANAO, and the ANAO engages an auditor, and they have engaged KPMG.
So what is the actual reality of that relationship? KPMG staff are looking at the detail of your audit?
Yes, the KPMG do the audit. and they are engaged by ANAO to do the audit of the financial statements, and they're focused on the financial statements.
And we've been reading about your whistleblower hotline contract with KPMG, the one called Fair Call. What's your have you had any contact with KPMG about that in recent days?
Yeah, we're going to be re-tendering for it soon.
What was the value and length of that contract historically?
I don't know the length. I know the value was about $10,000 a year.
Okay. And have you got any other contracts with KPMG?
Yes, we have had a contract with KPMG where they have done some work for us on immigration. So sometimes when we're bringing staff in from overseas, foreign staff, and we've had a contract with them for assistance in. I'm not familiar with what you have to do, but there's quite a process you have to go through to bring in staff from overseas. They assist with that. That contract is also out for tender.
And given the open discussion, the concessions by KPMG in recent days about their misdemeanours, about their unethical use of information to win contracts, their treatment of their whistleblower, use of AI to cheat in exams, what is the bank's view about contracting in the future with KPMG?
Well, I think we'd be looking very closely at it, Senator. I don't think we'll be reappointing them to the whistleblower service. We are re-tendering for that. In terms of the audit, that is a matter for the ANAO, and you'd better speak to the Auditor General about that.
Thank you. Thanks for those answers.
Thank you. We go to Senator Smith.
Thank you very much for your participation this afternoon. Can you update the committee in regards to what the bank's liaison program is observing in regards to how community services, charities and not-for-profit organisations might be how they might be responding to increased cost of living pressures being experienced by Australian families?
So at a general level, Sarah might have some more recent information, but at a general level, over the last couple of years, I would have to say generally when we speak to not-for-profits and charities, they've expressed the view that they're seeing a heightened level of demand from households, often from households that they wouldn't necessarily expected to have seen from in the past. And this even persisted, I think, when interest rates were going down. So it's not actually necessarily an interest rate story. It's a cost of living story. It's about prices of things. The unfortunate thing, Senator, is that when we talk about bringing inflation down, we're talking about bringing down the rate at which prices are rising. We are not talking about bringing prices down. And so what people are suffering is the fact that prices are just much higher than they were a few years ago. So that's the general sort of flavour we get from them. I myself have done a couple of sessions with our liaison team speaking to charities and speaking to debt hotlines and those sorts of things. And it's a very similar story that I hear personally, which is that demand is heightened and the things that are worrying people are the prices of the goods and services that they have to buy and their essentials.
Yep, Senator, I'd just add to that. So I met with an organisation very recently, within the last sort of month or so, and it's clearly a very challenging time for some members of our community. There's no hiding away from that, and some people really are struggling. They were saying that just in the last couple of months, so more or less since the conflict in the Middle East has broken out, and obviously that's come through into higher fuel prices in particular, but it's starting to show up in other parts of the economy. They're seeing, if anything, more demand for their services. To go with what the Governor was just saying, I mean, obviously that is clearly a sign of cost of living pressures that have intensified a bit in recent months. That's not surprising for us to hear, but it's clearly really challenging for the community and for certain members. And getting the cost of living increases, bringing them back down to manageable levels, that's clearly something that we hear a lot, that is really important to this particular group. these people, generally, if you're managing on fixed incomes, if you're struggling with that, then having certainty of what things are going to cost when you go to the shops or when you go fill your car up, what have you, is a really important part of how you can have security, and that's a strong message that we get from the liaison program in these areas.
What variation are you seeing between capital cities?
So generally speaking, it's actually, I would say, perhaps a bit more of a reflection of what we see across the whole economy. So what we can see if we look at even just labour market data and some of the survey data and things, generally speaking, conditions in Victoria, so Melbourne specifically, a bit more challenging than in other parts of the country. You can see that in the labour market outcomes. The unemployment rate there, generally speaking, is a touch higher, though it can jump month to month. And then at the other end of the scale, if you like, we're generally seeing stronger outcomes in terms of the labour market and activity more broadly in Western Australia, so obviously Perth, Adelaide, South Australia, and up in Queensland. And actually the Queensland story is not just a Brisbane story. We're hearing that from other parts of the state as well. It's not atypical for the country to have be going at different speeds in different geographies and regions, and it just so happens that that's the sort of distribution at the moment, that it's the larger cities, particularly Melbourne, that are perhaps a bit softer than some of the other cities.
At a household level, so in your opening statement, you do acknowledge that it's a difficult time for many households facing cost of living pressures. At a household level, how are Australian families responding to the cost of living pressures?
Well, we don't have really granular data on individual households. What we can observe, I think, and we do a little bit of this through our financial stability review. You might recall earlier I was talking about we do try to get some estimates of the extent to which households have got more, they're spending more than they've got in disposable income. So we do try to get a handle on that. It's a relatively small share of population, less than 5% of households, but for those households, it's absolutely, devastating and critical. So in saying it's a small proportion, I'm not suggesting that it's not a great outcome. It's not. So we can do that sort of work. There's more aggregate data that looks at household balance sheets more broadly, and I'll ask Chris to talk very briefly about the way mortgage holders are handling some of these things. But generally, if you look at coming out of the pandemic and the government assistance through the pandemic, many households, not all, some really, really struggle, but many came out with a household balance sheet that looked a lot stronger than it did. So from the perspective of an aggregate perspective, the household balance sheets have looked pretty strong, and some evidence of that comes from the way that we observe people treat their mortgages. So I might just get Chris to say a couple of words on that.
Yeah, so coming out of the pandemic, as Michelle said, many households, by absolutely no means all, had substantial savings. Now that makes a lot of sense because they were still receiving income, but in many cases were in lockdown, couldn't travel overseas and spend that money on holidays and so on. And spending was severely curtailed. So the other thing, though, is that they, unlike in an economy like the US, they typically didn't go and then spend those, whereas that buffer of savings out of the pandemic for the household sector in the US was largely spent within a few years. That was not the case in Australia. The other feature of that is for those who had mortgages, they tended to maintain quite a lot of extra payments. So that's paying more than the bank requires you to pay contractually every fortnight or every month. And that was even ramped up a little bit more, not surprisingly, when we raised interest rates. Because at high interest rates, all households, including those with a mortgage, have an incentive to pay down their debts or save more. And those extra payments have been sustained for quite some time and are still holding up. So that does not say that that's the case for all households or all mortgage holders. What I'm saying is for the household sector as a whole and for mortgage holders as a whole, or the average mortgage holder, if you like. But there are mortgage holders who are obviously struggling to make their payments. That's always true, but those numbers are pretty low in the scheme.
With rising inflation and as a consequence increasing interest rates, there must be an erosion to that buffer of savings that you have reflected on. And secondly, how do you record what that erosion rate might be?
Well, I think we can look at the episode of higher inflation from 2022 onwards as a good example of what might happen now. And that's perhaps a surprising thing to many people. Yes, households are under cash flow pressures, and many who do have savings buffers have to fall back on those and rely on them to help support consumption in the face of higher interest payments. They have a mortgage, and particularly if they've lost a job, which makes things very stressful. Some, unfortunately, are forced to often sell their house. But in the main, the average mortgage holder was actually maintaining those savings buffers. So what they were doing was cutting back on consumption. And that's one of the key mechanisms through which monetary policy works. Not just the cash flow channel, but the decisions that households make when they can afford to maintain savings rates and even increase them. And that's what economists would call the intertemporal savings channel of monetary policy.
But in the Governor's opening statement, she says we expect the unemployment rate to increase over the coming year. Surely, if that is to be realised, that is the point. Rising levels of unemployment surely is the point at which people feeling a degree of, it's not the right word, but a degree of comfort in terms of being able to manage cost of living pressures, shifts to anxiety once people move, and particularly in the situation in Western Australia where people, I think it's fair to say, have an expectation of job choices in addition to the job that they've got. But once the risk of losing a job or just the reduction in job choices becomes more apparent to them, then the level of anxiety around cost of living really does start to tick up.
Absolutely. And what those households will often do is rein in their consumption to make sure they're still putting away for a rainy day in case they are one of those people who, for a length of time, is out of work.
And just to add to that, Senator, I mean, we have seen the consumer confidence series decline very sharply at the start of the conflict. They've recovered, they've come back up a little bit, but not all the way since, as it's become clear that perhaps the terrible, terrible outcomes are not yet true. But one of our main questions at the moment in the context of the outlook is how does that shift in confidence and that impact that channel exactly that you're talking about, how does that show up in consumer spending and in those decisions that Chris was just talking about? So we're very actively looking at that at the moment. You're absolutely right, it is a really important transmission channel through the economy, and we're very alive and looking very closely at it right at this moment.
Yeah, it's not clear exactly how much impact we'll have because there's not a great relationship, but then this is a very big drop in consumer confidence, so it could have some impact. Yeah.
Thank you. If time allows, can we come back to me? If time allows, yeah.
Senator Chandler.
Thank you very much, Chair. I just want to circle back to some comments, Governor, that you made earlier. We were talking about the impact that the budget has had, and you outlined that there wasn't a great deal of impact in your forecasts, full stop, as a result of this budget. But isn't that a problem in and of itself at a time when you are raising interest rates because of high inflation and, I think, to use your own words previously, Australians are poorer? This budget isn't really doing much to help that situation?
Senator, I've said this before in a number of different forums, but fiscal policy has a very difficult job to do. And it has to balance a number of demands on it. It has to provide services, it has to provide support to people, the vulnerable people and so on. So it has a whole lot of things it has to do, and it has to juggle those sorts of things. Now, I am not in a position to say what level of public demand is an appropriate level of public demand. That is a matter for the Parliament and the government to decide. I take it as given, we take it as given, and then we decide how we need to adjust monetary policy to make sure that we meet our inflation target. But it is not for me to say what is the right level of public demand.
Okay. So, as you foreshadowed, the Reserve Bank obviously is doing something here in terms of fiscal policy. You've increased interest rates to the equal highest rate since 2011, and you had to commence that reverse trajectory well before the fuel crisis in the Middle East. The 3 interest rate cuts we saw in 2025 were the shortest and shallowest easing cycle in more than 35 years in the history of the modern cash rate. That's correct, isn't it?
I'm not sure it's...
I don't think it's the shortest.
I don't think it's the shortest, but I would check. But there is one other one, I think, which was reasonably short as well, but I'm not sure of the exact months.
Just on those comments that I referenced previously about Australians being poorer, it's correct that your forecasts are for real wages to continue to fall throughout this calendar year to December?
It might depend on the measure you use.
It does. I mean, yes, in a broad sense, Senator. So effectively what we have playing out at the moment is we expect that wages growth will be fairly steady. In fact, through the whole of our forecast horizon, as you can see in the forecast table, it's sort of around 3.2% and it dips down right at the end, but basically stays there. And what we have happening with inflation at the moment is right now for what we call headline inflation, or the sort of aggregate total, we've got upward pressure coming through from fuel prices, from what's happening overseas. We've also got the role of electricity rebates that's still working its way through. And then we've got what's happening in terms of underlying inflationary pressures that we were discussing earlier on, and that sort of starting point where we think we had underlying inflationary pressures above targets going into the conflict. Those 3 things together give you headline inflation outcomes for, we expect for the June quarter this year of 4.8%, and then they're coming back a bit, but to 4% by the end of this year. And so, yeah, the difference between those 2 numbers is clearly negative, but there are a lot of things running through headline inflation right now that are really holding headline inflation up, if you like. People are experiencing those. We're not trying to dismiss them. They're clearly happening. If you drive a diesel car, you're very aware of what's happened to diesel prices recently. But that's really explaining a lot of why headline inflation is so high right now.
So you can see that in the forecast table, Senator, because you can see that growth in real wages, both measures that we've got in there, decline to the end of this year, but then they start growing again.
Okay.
So that's that hump in inflation.
Is it correct that your forecasts are for living standards on a per capita basis to fall this calendar year as well?
You mean real per capita incomes? Is that what you mean?
Yes. So real household disposable income.
Real household disposable income per capita.
Yeah.
That's not a number that we've got precisely in the table, but actually if you just look at there is a line item for real household disposable income, that's the total. Yes. And then you can also look at the population forecast that we've keyed that off. It's positive at the moment. It gets broadly close to flat, and then it sort of goes positive and then sort of flat. So it's it looks a bit different to the real wage outcome, but that's because there's other components of disposable income. So wages is obviously what you earn if you work, but households can get income from various other sources, and that's why you get a bit of a difference.
Sorry, Governor, were you going to add something there?
No, that's fine. All I was going to add was real household disposable income is about the incomes you earn from wages and salaries plus other things, including net interest, I'd have to say, and then taking off that is taxes and mortgage payments to the extent that you pay mortgages, you pay debt off. So there's positives and negatives to to real disposable income.
So, given this and given that initial question I asked regarding the impact of the budget, I'll just ask one more time. Is this budget making it easier for you to lower aggregate demand, or does it do nothing to change it? Because if it does nothing to change it, that's still not particularly useful, is it?
The budget is, in terms of where we thought we were in our May forecast, which is where we are here, the budget doesn't look different enough to change the impact of the budget, public demand on aggregate demand. Now, mathematically, if you said to me, if public demand was lower, would aggregate demand be lower? Yes, it would be if private demand didn't rise. So I don't know the answer to that question. You could lower public demand, but you would lower, presumably, a whole lot of, you'd decrease expenditure and services and all these sorts of things. Yes, you could do that. But I don't know what would happen to private demand. If private demand didn't respond, then we'd end up basically in a situation where we'd have much lower growth. This is the challenge. It's not just one or the other. We've got to think about it in terms of the total, and mathematically, private and public add up to aggregate. So you can't just say lower public demand because you don't know what's happening to the rest of it.
But one is more within the government's control than the other.
Well, the government controls fiscal policy, yes, and it can change public demand. All I'm saying is that we take it as given, and it's not for me to tell the government what to do with fiscal policy.
Just on the public demand forecasts, how certain are you of them? And I'm interested in understanding how have recent outcomes compared to what the RBA has forecast in relation to public demand.
So I could answer this, but I'll get Sarah to answer this.
Thank you.
So just in terms of recent outcomes, I can actually talk to the national accounts data we got yesterday because that's fresh in my mind. I have to say I don't necessarily have the numbers going back beyond that to hand. What we got in the data yesterday was the government investment component was broadly in line with what we were expecting. The government consumption component was actually a touch weaker than we were expecting. So in an aggregate sense, that was a touch weaker. To your question on public demand and forecast revisions, so I would reiterate what the Governor said earlier. Forecasts are innately uncertain and inevitably somewhere in this table, multiple numbers will be wrong once we get actuals. So our forecasts are not perfect by any stretch. But in terms of how we put together the forecast for public demand, what we do is we take the budgets, federal and state, together, obviously then taking account of what's actually legislated, if there are any changes that we have to be aware of there. We take them, we convert them into quarterly numbers, we map them across into current consumption, into investment and so on. And we aggregate them up. And one of the things that we do through that process is actually take account of historically what has happened to actual, as measured by the ABS, public demand relative to what was implied by the aggregation of those budgets. And we make an adjustment for that forecast error, if you like. So we are trying to sort of get ahead of at least one possible area where the forecast might be wrong. But are these forecasts more or less certain than other components in the table? No. Forecasting is innately hard. That's true for that particular line item. It's true for all of the line items in here.
So just in summary, have you been underestimating the strength of public demand in recent quarters?
No, not in general. There was a specific reference to the March quarter data that we got yesterday, and it was a relatively small difference as well. So I would say in a broad sense, no, we weren't surprised particularly by that.
So, sorry, in quarters before the March quarter?
Not particularly. It's very common, particularly with government investment, in fact, which can be really quite lumpy. So government investment, all investment can be quite lumpy. When a road project gets completed, for example, you can get a big lump of activity. It can be hard to know ex ante, if you like, before the completion, when exactly it's going to come in, and we find out ex post when it has come in. So it's very common for those forecasts to miss, because you get these lumpy bumps coming through. So I would say, generally speaking, we've not been, in the recent past at least, we've not been particularly surprised, and that's still true today.
Okay, thank you.
Senator Canavan?
Yeah, thank you, Chair. Look, I just wanted to ask a little bit about the data centre situation. There's been some commentary in the past day that but for investment in data centres would all be ruined. I wonder, have you looked at this in total? Obviously, data centres is lifting the capital investment account there, private capital spending. But I just wonder, is that the end of the story? Is it having another impact on, say, the net imports account, given that presumably much of the material that goes into making data centres we have to import? Is that something you've looked at?
Yes, I mean, the answer to the question is yes. We think there is a big offset in the import side of things, because we import a lot of that equipment. I mean, there is some that will be domestic. Obviously, they've got to construct buildings, put all the equipment in and so on, but there is a big offset in the import side of things.
Have you looked at it in a quantitative sense at this stage?
I don't. I'm not sure of that.
So I can say, again, just in reference to yesterday's data, because it is very timely. So what we saw in yesterday's data was a substantial increase in private machinery and equipment investment, and within that it was the category that's associated with data centres, so it's IT equipment, server racks, servers and what have you. As the Governor just said, we saw it coming through on the demand side within business investment, but we also saw it coming through in the equivalent category on the import side. So those two things do net off in a GDP sense, and what adds to GDP is, as the Governor was just saying, the activity of building the shed, I'm told is the right lingo, from the sector, and installing the actual equipment where that requires tradespeople, electricians in particular, to do that work. So that installation and building activity counts as part of our GDP. That's done domestically, but when the equipment is imported, it offsets what shows up on the investment side.
Okay. All right. And what about the long-term impacts? Is that something you're looking at the moment? I suppose the other issue here is that, at least for some of the value add from these IT type applications tends to find a way to go offshore, or at least to find a way to go to the lowest tax regime around the world. Is it going to add a lot of value to Australia's national income long term?
So what we are looking at, Senator, I'm sure lots of other people are as well, is in particular the rollout of AI technologies into workplaces, what that might do in the context of productivity, how it might change how different firms and institutions operate, and then what that might mean in the context of demand for different types of skills and expertise in the labour market. So we're certainly considering that. To your question around what types of services does Australia import, and thinking about IT services as an import category, it certainly is in there. We certainly track it as part of imports, and our models do have a dynamic and a relationship that links back demand to that import channel. So second, we do as standard and have done for some time. AI obviously is a relatively new piece of work for us to be starting to undertake, but it is something that we're now actively researching.
Okay. Just turning to the fuel crisis, have you at all looked at the rundown in reserves in our region, the oil reserves? Some new data has just popped up for me today, although this is, I think, a commonly reported on issue, is that China's oil imports have plunged by 38% compared to the previous year. They're importing just 6.6 million barrels a day. They were well over 10 for most of the past year. million barrels a day. It's obviously huge. There's generally thought that the disruption in the Straits of Hormuz is something like 12 to 14 million barrels a day, and there's other ways it can get out. That change in China's imports alone provides enormous relief. Have you done any analysis then of how sustainable this is? If we are somewhat not seeing as much of a crisis as was feared because of a rundown of reserves, and obviously that has a limited life as a strategy if the crisis continues.
So we get, we don't do this independently, Senator. I mean, we get some information from Treasury and the government on what they're seeing in this space. I think Jenny addressed this, Jenny Wilkinson addressed this issue in her appearance before the Senate. It's true that at least part of the reason why we have seen oil prices increase a lot, but they could have increased a lot more, and there's two reasons for that. One is there's been a bit of a response from particularly the US oil producers, so a bit more supply from there, and around the world, not just China, but everyone running down their reserves. So there is a question about when we get to a point where that is no longer providing support to the oil market. And I think that is something that's front of mind for many countries. I'm not sure what that time frame is. We're getting our information, obviously, from Treasury, and they're hooked into the government on this, but that's something that everyone is very focused on.
Just on another impact of this fuel crisis, there was a report yesterday that wheat crop in Australia could be down up to 50%. Seems large to me, but other estimates put it at, 8 or so %, at least in plantings or area planted. Is that something, is farm output something the Reserve Bank has looked at in response to the high fuel and fertiliser prices and what that impact that might have on economic growth in the next year?
Yes, I think is the answer. I don't know if we've got firm estimates yet, but it's something that we're focused on.
Yeah, absolutely. So we would work and use the information from our colleagues at ABARES, who are obviously exceptionally well placed to do this analysis and provide that. So we connect with them. So we're looking at it in the context of production, as you mentioned. We're also very focused on the impact that second round type effect might have on food prices. Because obviously that's a negative supply shock to global food supplies, and we would expect that ultimately to come through in food prices. And that's actually an example of the Governor was talking about earlier on of how those indirect effects can take time to show up, but we know that they're coming. So we've had the very immediate direct effect from higher petrol and diesel prices that you put in your car. But what we know is down the track there are likely to be these further indirect effects, as one example, as that higher food cost flows through into the supply chain and ultimately into the price consumers have to pay when they go to the shops.
You're at 8 minutes.
Okay.
I've got...
Well, if others have... Look,
just
I
a
can...
quick one, I think,
Yeah,
Senator
because
Smith.
given the time, I'm happy for others to take it home. Thank you, Chair.
Thank you. Senator Smith.
Thank you again. I was listening to the exchange between senators and yourself just in regards to inflationary expectations being embedded in the economy. How would you characterise the risk at present of inflationary expectations being embedded in the economy?
I'd say the risk is low, and it's for reasons that Chris was talking about earlier, that so far longer-term inflation expectations are remaining anchored at around the target, about 2.5% in our case, and overseas in other countries around about 2%. So I'd say the risk is low at this point, but short-term expectations have definitely risen, and that's to be expected. So it does depend, keeping those long-term inflation expectations anchored and keeping that risk low of them rising will depend on the response of central banks.
Thank you. Just turning to the decision around surcharging, has Treasury modelled the inflationary and employment impact of any harms materialising simultaneously as a result of the October this year implementation date of the surcharge changes?
I don't know if Treasury's modelled it.
Oh, sorry, I meant the bank. My apologies. Yep, my apologies. They're coming back. They're coming back.
We haven't modelled it explicitly, but it's quite a challenging thing because on the one hand you're going to be seeing costs to merchants coming down from the reduction in interchange, and on the other hand you're going to be it might find that if they can't surcharge they put a bit into prices, but people were already paying higher prices through surcharges. So it's an inherently difficult thing to model. It wouldn't, for example, I don't think suit modelling through our typical inflation modelling circumstances. It would be a bit of a mechanical thing, but I think it would be very difficult given the number of things that are going on. If there is any impact, I think it's going to be minuscule.
How has the bank? Has the bank been responding to concerns from the small business community about the impact of the surcharge, particularly around the timeliness or the time frame for implementation?
Yes, we have been engaging with merchants. We've been engaging with card schemes as well because you might recall, Senator, that it's not us banning surcharging. We're just telling the schemes now that you can put your no surcharge rules back on. So that's we are engaging with the schemes on this, and they will be engaging with their acquirer members, because it's the acquirer members that will have to be making sure that surcharging isn't happening.
Right. On notice, can you just provide me an update on the recommendations from the incident report around the RBA payment system outage that occurred on the 27th of January? But I'm also particularly interested to have a better understanding about the outage occurred on the 27th of January, but a media release was not issued until the 29th of January notifying of the outage. And I just wanted to get more detail around that event in regards to the outage being known and then the media release not being issued until the 29th of January, and on notice just an update on the implementation of those various recommendations. I think 8 to 10 recommendations around the outage. And then if I could just indulge, in my travels around Western Australia, I often get asked questions about the Senate Economics Committee and our engagement with the RBA. On notice, could you provide me with some information about the pros and cons of the RBA using a modified version of the CPI that excludes fuel price movements when considering decisions on interest rates? And that's just from some very earnest West Australian constituents, and I gave them a commitment I would ask you directly.
Okay,
so thank you very much.
There might be a bit of an issue of misunderstanding about how we think about inflation, but we can provide something.
That might be better coming from you than myself. Absolutely.
Yeah, no, that's fine. We can do that.
Thanks very much. Thank you, Chair.
Thanks so much, colleagues, and thank you to representatives from the RBA for joining us. That concludes this session. The committee will now suspend for a short break, and we will resume at 5:03. Thank you.
Thank you, Chair. Thank you, members.
Thank you.
Thank you.
Great. Okay, welcome back to the officers from the Department of Treasury Markets Group. So we will continue and we will start with Senator Smith.
Thank you very much and good afternoon. I understand that things are progressing well with the CDR, so congratulations to officials, but that's not my line of questioning this afternoon. I do want to turn to the matter of e-conveyancing and prospect of improvements to competition. I understand, I was hoping you can confirm that the Treasurer, and so I'm assuming the Treasury as well, is in receipt of a letter signed by states and territories requesting Commonwealth support in advancing interoperability and competition reform in electronic property transfer systems. Is my understanding correct?
Thank you, Senator. Your understanding is correct. As you know, states and territories have responsibility for regulating e-conveyancing, and the government supports a dynamic and resilient e-conveyancing market that delivers benefits for consumers, practitioners and the broader economy. As you know, there's been a lot of work being undertaken by the Australian Register's National Electronic Conveyancing Council, or ARNEC, trying to find a way through with e-conveyancing in the last few years. They undertook most recently the cost-benefit analysis and functional requirements review, and released a statement acknowledging that interoperability would be time-consuming, costly and complex to implement under any model. So you're quite right. The states have written to the Commonwealth on the basis of that, and we have that in receipt at the moment. We're currently undertaking consultation across relevant portfolios to provide advice on any potential role of the Commonwealth in e-conveyancing regulation, to inform that advice up to ministers, and we'll respond to the letter in due course.
Okay, so I've not seen the letter, just for clarity. What date was that letter sent? Or what date is on the letter, appears on the letter?
The letter was sent on the 13th of April 2026.
And it is addressed to the Treasurer, like I suspected?
Yes.
Yep, great.
Yes. It was to Treasury portfolio.
Okay. What course of action do the states and territories propose a specific course of action and are seeking the Commonwealth's involvement or comment on that course of action, or is it a general request for assistance?
Yeah, I don't have the letter right here, but I think it was more general, and ARNEC has advised publicly that it's not continuing interoperability work without the Commonwealth assistance, and will instead focus on the existing regulatory framework. And so I think it's in the context of that that it's come to the Commonwealth to see what the Commonwealth can do to support.
And of course the importance of interoperability, because that's effectively the mechanism by which competition is progressed. So
that was certainly one mechanism that has been looked into, and the latest ARNEC review is about. The cost-benefit analysis for that, it looked at full interoperability option and forecasted a total net benefit of between 11 and 16 million over the next 20 years, so quite a small net benefit. And they also highlighted that interoperability models have significantly higher implementation costs compared to other models.
The other model being?
Including monopoly regulation. Yeah, so I think there's still a few different options on the table. And I think they also identified a lot of potential risks from interoperability, which is why, of course, ARNEC is not continuing that work on interoperability.
So in responding to the letter from states and territories, is the Commonwealth taking a narrow view in responding, or is it, because you've alluded to the fact that you're going out across government to seek input, or is the possibility that the Commonwealth might respond with its own ideas and pathway for improving competition?
I think we're taking quite a broad look into potential options.
Oh, great. Yeah. Okay, that's well, I don't want to get ahead of myself. It's a good first step. On notice, can you make a copy of that letter available to me?
Yes.
And just for completeness, in the government's response to the Senate Economics References Committee report into micro-competition issues in the Australian economy, and its first report was e-conveyancing. Its second report might be postal delivery services, just putting that out there. In the government's response, it said the government supports progress towards a more competitive, dynamic and resilient electronic conveyancing market that benefits consumers, practitioners, industry participants and the broader economy. That's still the government's position?
Yeah, I think I've made that point just before.
Does the government believe that competition improvements are necessary?
I wouldn't be in a position to say what the government position is on whether there's necessary.
Would the Treasury characterise the e-conveyancing market as being a monopoly?
Yeah, I think most people would agree it's a monopoly. That's
right. Great. I think I might just leave it there and eagerly await a copy of that letter, perhaps, and the response from the. Oh, who will respond to the states? And you said that the letter was addressed to the Treasury, but who will respond to the states and territories? Will it be the Treasurer himself or the Assistant Minister?
I think I'd have to take that on notice. I'm not sure whether it's even been determined yet.
Okay, great. Okay, excellent. Thanks very much. Thank you.
All right, I might continue the block with you, Senator Hume.
Thanks, Chair. I want to ask some questions about the. There's a fact sheet called Whole of Government Regulatory Reform Agenda. What's Markets Group's role in coming up with there's $780 million per year in reduced regulatory burdens on the financial sector? What role do you guys play in that process?
I will start, Senator, and I may have other colleagues join. So generally, Markets Group took the lead within Treasury in assisting the government working closely with finance, assisting the government to prepare the fact sheet and kind of think about what the whole of government regulatory agenda is, including some of the things included in that fact sheet. In respect to the financial system, as has been kind of discussed at previous estimates, following the roundtable, the Treasurer wrote to the Council of Financial Regulators and asked them to set up a kind of a few streams of work, and so the kind of where the kind of Council of Financial Regulators landed was to set out a roadmap about the implementation of the initiatives that the CFR regulators had flagged to the Treasurer ahead of the roundtable. That's public on the CFR website. It also set in motion kind of working with stakeholders in the sector, thinking about how the regulators could reduce inconsistent or duplicative or inefficient data requests. And so again, that body of work has happened. There were kind of a number of deep dives led by ASIC and APRA with various sectors. And again, the outcomes of that and some of the commitments from those two regulators are on the CFR website. And then there was a set of, then there was CFR, but primarily led by Treasury, was thinking about regulatory law reform options. Again, they kind of link to things or matters raised in the context of the Economic Reform Roundtable. And that's been considered by government, and some of the outcomes of that are being flagged in that document that you refer to. So the combination of, so they I think they're the ones that give you the number you mentioned. Mm-hmm. There's also some benefits we've been able to count with respect to the work of the regulators to date, which gives us a slightly different number.
Okay. There was, we had this conversation in PM&C or Finance last week about the regulators feeding back a list of deregulation ideas, yes. Agencies doing that. And there was about 400 of them or so. But so these are the ones that came from the financial services sector or the financial services regulators? Yeah, so from the CFR kind of agencies, right. We identified over 50, and I think a few other regulators were in that list as well. And okay. That set of slightly over 50 is actually on the CFR website, so including with the kind of implementation plan for them. Fair. So do markets do all of the other regulators, or do you just do the CFR ones?
In that list, it's just the kind of ones that fell within the aegis of the CFR work.
Okay. Was the Office of Impact Analysis, you said they were involved, how do you work with them?
In general or in respect to this?
Well, how about we start with in
exercise?
general and then let's go into specifics about this.
So probably in general is a pretty broad, probably a number of aspects. So they set various requirements and there's a process we go through and things that we're taking forward that we have to meet. So that's kind of a normal way people would engage with them. In the regulatory reform agenda package that the government announced, part of what it announced was improvements around the regulatory processes within the Commonwealth, including flagging improvements in the way the impact analysis work is done. That was led by the OIA in PMC, but we closely engaged with them about how that was looking and what made sense in the context of the broader regulatory reform agenda. And then we have kind of general dealings with them and understandings about the things that they're doing and working on and working collaboratively with them. Just going to check if anybody wants to add materially.
Dr. Owen Freestone, Assistant Secretary, Competition Reform Branch. I think that's a similar response to what Mr. Kelly said. OIA have an important role in terms of setting the overall analytical framework. So those numbers I think you've been referring to around regulatory burden reduction are done in a consistent way with that framework, and it was a Department of Finance-led product, but we worked closely with them and with OIA in making sure that it was consistent with that framework.
So, sorry, Dr. Freestone, can I ask, when you said regulatory reform branch, that obviously in this context is about regulatory savings. Do you also do regulatory...
Sorry, the name of my branch is Competition Reform Branch.
Competition Reform, sorry,
yeah.
I thought I heard regulatory reform. So does Markets Group then do the regulatory burden as well as the regulatory reforms or saves?
So the way that it works across government is that regulatory burden measures are done in a decentralised way. So if you put forward a policy from a particular agency, that agency is responsible for coming up with the number. So really the work that Department of Finance led and we fed into was really, a coordinated approach to make sure all those numbers were consistent and done on a consistent basis.
Right.
And that's the approach that's usually adopted in these situations.
Okay, so claims of regulatory cuts go through exactly the same process as claims of regulatory saves?
It's the same framework.
Regulatory saves,
yes.
regulatory imposts as well as regulatory saves?
Yeah, effectively, yes.
Okay. I'm still just scratching my head wondering how it is entirely possible that the government's capital gains tax and negative gearing reforms only increase the regulatory burden by around $84 million a year. This seems incredibly low considering that many businesses were going to have their assets revalued, they're going to have to get tax advice, they're going to have to get accountants and lawyers and everything else. How is that calculated?
Senator, that's the question you're going to have to ask the Revenue Group when they appear later tonight.
So it's not something that markets would consider when it's doing regulatory reform saves?
I think through the budget process, our focus is very much on the regulatory measures relating to the Economic Reform Roundtable and understanding the regulatory impacts of those and helping government present those through the budget.
Okay. The $780 million, is that gross or is it net? Does it include, are there any increased burdens on the financial services sector?
For those 14 legislative reforms, that's a gross, yeah.
They're all, so it's gross?
Sorry, of those 14, for that, the $780 million refers to that package of 14 measures.
Are there any regulatory burdens that are being imposed?
Of those 14 measures, they all would likely reduce the burden.
Yeah.
So I think if you look at the 14 by themselves, it's a gross and a net measure all at the same time.
So which ones impose more regulatory burden?
So I think that we would characterise them all as reducing regulatory burden.
Right, so it's gross.
So that's why I'm saying they both are gross and a net measure all at the same time.
Right, so there is nothing in the budget that imposes more regulatory burden on the financial services
For those 14, I'm just talking about those 14 measures for which that number relates.
Right. So is there anything in the budget that imposes more regulatory burden on the financial services sector?
There are some reforms announced in relation to the managed investment scheme as a first part of the response to the Shield First Guardian, and so part of that is around looking at ASIC's ability to get data on the MIS sector, and so there will be some regulatory burden that will be imposed as a consequence of that.
Right.
And so part of the way that we will consult, and ASIC will consult on that, is how you get the right data in the most effective and efficient way to minimise the regulatory burden. So we will consult on that going forward.
So, but that will impose a cost, but that cost hasn't been determined yet?
No. The kind of data and the way that we will collect it is still to be consulted on.
Okay, but these reforms, the 14, have been consulted on, so we know how much the regulatory burden will be alleviated.
As an example of the 14, and a number of them relate to the banking sector, and they were part of the CFR and ACCC's review of small and medium banks. So that has been quantified, and they are all...
So they quantified it, not you quantifying it?
Well, the CFR made the recommendations, and as part of this process we looked at it, but they were all around regulatory relief rather than imposition.
Right. So if the CFR comes back and says, we'd like you to do this and this is what we think it's going to alleviate in terms of regulatory burden, is there a verification process that goes into that?
So as Mr Kelly said, we have gone to the CFR as part of the Economic Reform Roundtable to get a whole bunch of ideas around where regulatory burden could be relieved. And that's been road tested with the industry through a series of deep dives that ASIC and APRA have jointly led, how to make sure that where they're focusing their regulatory relief actually meets the need of industry.
Yep.
So it's been a very consultative process, and that's the information that we referred to on the CFR roadmap, which is available on the website.
Okay. Look, you can probably see where I'm going with this. I'm absolutely all in favour of deregulation and reducing the amount of red tape on all sorts of industries, not just the financial services sector, but the amounts and the idea of the cost alleviation does seem to be very different from the... We're talking about how much cost is being alleviated, but we're not talking about how much cost is being imposed at the same time. And it does seem like there's like a piece of the puzzle that's missing a bit. So at what point in time will we see the costs, the estimated costs in the budget from the imposition of more regulatory burden around the managed investment schemes?
So once we go through the process around consulting around what it will look like, we will then have to look at what that means for industry. But it's too preliminary to be able to quantify that because we don't know the right relevant information and what parts. And this sector is such a broad church, so we really need to focus it on where we've seen the consumer harm. So that's more on the retail sector than, say, the wholesale. So it's just a bit too premature.
Where will it be reported, do you think?
We're going to have to rotate the quarterly.
Yes, yeah, absolutely. When you've done that, where will we see that reported?
It depends on the way in which it's done. For instance, if it's about how APRA and ASIC simplify the way they request data and make sure there's no duplication, then that's something that we will look to quantify through our CFR process. But if it's done in relation to some law change, then we do the impact analysis process. So it just depends on the method in which it's delivered is the way that we would have to report any regulatory change.
Okay. Thanks, Chair.
Thank you. Senator Roberts.
Thanks, Chair. And thanks for appearing again in this session. I'd like to find out some impacts on markets of two measures I'm going to be mentioning. And the first step is in assessing impacts is to understand the costs and the direct costs, and then the impacts, indirect costs, if you like. The two biggest aspects of government, the two biggest opportunities for the improvement of government, as I see it, and especially the cost of government, is energy and duplication, waste. Businesses regularly analyse opportunities and identify opportunities to improve. So that's what I'm after. What are the full costs across the breadth of the Albanese Labor government of net zero measures, including departmental costs, co-investments and grants. Also include a figure, please, for contingent liabilities, including off-the-books matters, which I have seen referenced in mainstream media as potentially a $1 trillion liability. Could you please include spending to date as well as projections across forward estimates?
Senator, I think in the questions you've raised go to other groups in the department rather than markets group. So if you...
Which groups?
So if we're talking about kind of net zero and that sort of world, then it's the macroeconomic group that's already appeared today. Some of your other questions may go to a fiscal group.
So they're the only group?
I think you asked a pretty broad question, so I don't want to say
it is very broad, but I've never seen a figure that answers the question. And we have to know what it's arguably the biggest direct cost and the biggest indirect cost or opportunity, depending upon your point of view, of what the government's doing in Australia.
Yeah, as I understood your question, Senator, the core part of it goes to the macroeconomic group, which appeared earlier today, which deals with those sorts of issues in Treasury. And of course, there are other departments, primary responsibility for some of those belongs outside of Treasury.
Okay, thank you. Could you please provide the cost since 1st of July 2022 of any Commonwealth department or agency which duplicates agencies existing in the territories and states and for which the constitutional mandate for that power vests with the states, not the Commonwealth? Could you please include data through forward estimates?
Senator, I certainly don't have an answer to that question at hand. As a general matter, that would be the responsibility of fiscal group, which appearing, I think, shortly after us. They deal with Commonwealth state issues and so on. I don't think you'll find that they can give you a ready answer to that. It seems like it's a very major piece of work to even begin to construct such an answer.
Could you please provide the effects of this spending and this duplication of waste on Australia's productivity, employment, private sector investment, national debt and budget revenue?
Senator, without being able to quantify it in the first instance, it's not possible to kind of set out its implications.
Thank you. Thank you, Chair.
Thank you. Senator Pocock.
Thank you, Chair, and thanks again for being here. I just want to clarify some of the earlier evidence. I think it was you, Mr Quinlivan, that this report was met with an options paper, that it was prepared, but that options paper did not get past the desk of the Assistant Minister. Have I understood that correctly?
So, Senator, we ran that. There was a process around that consultation paper. We received a range of feedback, quite extensive, as you saw in the.
My question's not about the paper itself.
I understand.
Yeah.
A range of feedback in the that was kind of set out in the FOI that was released, you've seen, and I guess there was a range of views in that feedback as well, not all consistent, and so that FOI they released kind of went to what could be a process that might seek further information on what those options could look like, and that. Subsequent to that, there was a paper prepared that kind of would have fleshed out what more of those options could look like. That wasn't released, but subsequent to that, we've done a range of work on how we could refine those options, taking into account the range of complex issues that kind of dealing with there and how you might implement those, and how do we look to make sure we've got a framework. If we are going to address the gap, how do we make sure we've got a framework that would actually work to regulate the firms? As you kind of have discussed it previously, the kind of regulation is kind of limited to the individual level and not the firm level.
So just to make sure I understand the nature of the reports, after this an options paper was developed and then subsequently a further paper, neither of them released, which canvassed what the next steps might be around those options. Is that correct?
So we've continued to do work on what options could look like in a more detailed way. That hasn't that more detailed work hasn't fed into a paper.
And is there a plan to release that more detailed work? Can you take on notice providing that material to us?
I can take that on notice.
Great, thank you. I wanted to go to tax issues. A large corporation is taxed at around 30% around our country. However, income tax arrangements for the Big Four are very, very different, usually paid out as income to partners. Income splitting often a feature of the way partners handle their income, splitting it with partners, and the use of Everett assignments and service trusts to minimise tax. I've seen an estimate, so very different tax regimes for a corporation versus a partnership. I've seen an estimate that in 2023, if the Big Four were corporations, they would have contributed around $1 billion in additional tax to the Commonwealth and states in that year alone. That is in the form of corporate tax and, for example, payroll tax. What's the public interest in leaving these large commercial enterprises as partnerships when we pay such a price in terms of tax receipts?
Senator, notwithstanding the way you phrased the last end of that question, it's very much a question about tax settings for these firms and large partnerships. So direct you to a revenue group that appears scheduled to appear at 8 tonight.
The revenue group you think that belongs to? Okay, I will do that. I'm sure you're aware that the Big Four operate with the benefit of limited liability via the Professional Standards Act, which provides firm-wide liability caps and insurance, reducing damages to around the maximum of around $1,000 a partner by the time it's all boiled down across a partnership. That is, they are doing millions of dollars of consulting work and, of course, audit as well, mostly consulting work, with the possibility of only a damage liability of $1,000, the price of an iPhone, basically. Are you concerned in Treasury and in this division that the combination of the Big Four's avoidance and exclusion from the 20-partner cap in corporations law and their limited liability via that Professional Standards Act lets them operate as de facto corporations that are untaxed and unaccountable and very difficult to sue when they go off the rails?
Senator, I mean, as the Minister and other people have said today, we're very concerned about some of the behaviour of these firms. Whether I would have to take it on notice whether we've done any specific work on the Professional Standards Council. That's a good question, so we'll take that on notice.
Thank you. Yeah. I mean, for me, it's a competition question. Many, many small consultancy firms do not have the protection of that form of liability protection. They have no capped liability, and that liability protection flows well beyond the 20% of the audit business to all of the consultancy work. And that is an extremely unfair way of treating the system. So I'd really like to hear your opinion on that. And you say you don't have any work on that underway at present?
Is it something?
Yeah, I think we have to take on notice.
Okay, thank you. Finally, I want to come to whistleblower protections. The FOI revealed a table in relation to the main provisions in this report and the way in which the consulting opinions varied across a range of diverse organisations. I'm sure you know it well. The one area on which there was absolutely no disagreement was around whistleblower protection. Now, we're talking about something which is 2 years old. There was widespread agreement that the fact that partnerships are not required to have any whistleblower protections at the level, say, of corporations, imperfect as they are as well, and the Parliamentary Committee that sat through 2 inquiries agreed across all parties that there should be whistleblower protections to large applied and required compulsorily of large audit, accounting and consulting firms. Given the incredible amount of evidence, and this is, we're talking 2 years ago, why hasn't the government acted on this? And especially in light of, we've seen in the recent weeks the very high price paid again. We know the story of Tahi in New South Wales, where Brendan Lyon paid a huge price for calling out the appalling behaviour that he's witnessed then. And we've now seen another whistleblower suffer the same price personally and professionally. Why has the government not done anything about improving whistleblower protections in consulting firms? And I note the recent paper this week, which makes almost no reference to the big consulting firms, just says, give us your evidence again, you know, another round of consultation. Why no action, Minister? Or whoever wants to answer.
So the Treasury's been undertaking a statutory review of the tax and corporate whistleblowing frameworks. We've been doing that for some time. And we've released a consultation paper this week.
Yeah, I just waived it. Yep. I've read it.
Appreciate that, Senator. And we are, so we've opened consultation for 8 weeks till towards the end of July. And we are seeking feedback on a range of these issues. The paper does describe the gap that we have with partnerships, and there's different framework, so different entities are covered between the tax framework, which is based on the topic of tax, and the corporate whistleblowing framework, which only covers entities covered by the Corporations Act. And we appreciate that there's a gap there for partnerships on the kind of issues that might come up in the corporate framework, and we expect the review will flesh those out and go to those.
You're at 8 minutes.
I guess I'm just saying, expressing real frustration that we already have all of the evidence relating to whistleblowing in these large consulting firms. We already have wide support for action on this. This is a review of the broader application of whistleblowing provisions well beyond consulting, and you invite anyone who put in a submission earlier in this document to the consulting inquiry into changes of behaviour in consulting. You invite them just to resubmit. So why are we going, why hasn't there been no action in relation to these big four? Because we know that behaviour needs to be pursued, and it takes incredible effort by individuals to call out things which are really serious.
Understand. I think the paper goes to invites people to submit, or we'll take that previous information that they've provided. The review's kind of looking at it in a holistic way to try and consider all these issues and come up with a set of views that we might be able to progress in a considered way. The paper draws out this distinction between tax and corporate law, and kind of points to the constitutional issues and how partnerships are currently governed, and that kind of goes to a broader question of that we've kind of discussed before about the partnerships.
So can you tell me what the steps are next? Here's the paper. When do we expect there to be a subsequent set of options, for example?
So the review there's a consultation process as part of the review. We expect to then provide a review to government on, and then matter for government as to taking those recommendations.
How long is this period open for?
The consultation paper is open for... the consultation paper process is open for 8 weeks.
And Minister, can you give us an indication? We're still waiting 2 years down the track for anything in relation to the previous review. Are we going to see something a bit sooner than that, do you think?
Well, I'll see if there's anything further I can provide, Senator.
Right.
On
Thanks
notice.
very much, yeah. And thanks for all your answers, and thanks, Chair.
Thank you. Senator Sharma.
Thank you. Good afternoon. Just got some questions about the consultation that Treasury conducted about price parity clauses in the accommodation industry. That's part of Markets Group, is that right?
That frown's not looking positive.
Competition issue.
Sorry, Senator, I'm actually not aware of the consultation.
Okay, so apparently Treasury ran a consultation process from the 25th of November 2022, the 6th of January 2023, and received 27 written submissions, including 9 confidential submissions. This is in response to a question on notice I asked last year. The context is that, Minister, your government promised to ban price parity clauses in the accommodation sector in opposition, and this consultation was in furtherance of that election commitment. Now, the consultation closed on the 6th of January 2023, so almost 3.5 years ago now. The submissions have not been published. The government's response to that consultation has not been forthcoming. I'm just wondering, what are we meant to be telling accommodation providers about this promise to ban price parity clauses?
Yes, Senator, I do remember the consultation now.
I'm glad someone
to Markets Group. I think we just have to take it on notice to come back to you on where it currently is.
Okay, no one knows anything. No one in this room knows anything about this because it was asked as a question on notice. You did provide a response. I was expecting I'd be able to get a further update this evening, but no one's aware of.
I'm just seeing if there's anything I can update you. Sorry, it's not in my portfolio.
I'm very much aware of it, Senator. It's not been something that's been an immediate focus on our work, given the range of other things government's asking us to do. We haven't come prepared to answer questions on that today. We're just better off taking them on notice, and next time we will come prepared and willing to answer those questions.
Okay, well, look, if you could take on notice, when will the submissions be published, and why haven't they been published yet? When will the government provide a response to that consultation, and is this commitment to outlaw price parity clauses still the intent of government?
We'll provide you with an update, Senator Sharma.
Okay, thank you. That was all for me, Chair. Thank you.
That concludes our questions for Treasury Markets Group. Thank you very much. We will now invite officers from the Department of Treasury Fiscal Group to join us at the table. And we'll take a short break until we get the people shuffling around.
Thank you.
All right, we'll kick off again. The committee welcomes officers from the Department of Treasury Fiscal Group. We'll kick off with questions. We are going to Senator Chandler first.
Thank you very much, Chair. Thanks to the officials from Fiscal Group for coming in this evening. I just have some questions around savings measures in the budget. The budget reflects specifically an NDIS-related savings measure. Could officials confirm the total net impact of all NDIS-related decisions in this budget across the forward estimates?
Thanks. Felix, I'm the Acting Assistant Secretary of Social Policy Division. Senator, those figures can be found on page 35 of Budget Paper 1. Where it says the reforms are expected to reduce growth in NDIS payments by $37.8 billion. So that's the gross save figure. There's further information about that save in budget paper number 2 on page 106.
Yes.
Where it details that measure and also goes through a $1.7 billion over 5 years spend in order to implement that measure.
Yep. And so, sorry, I was jumping around the budget papers while you were saying that. That headline figure for the NDIS-related saves is?
$37.8 billion.
Wonderful. In the 24-25 budget, the government also booked a very large NDIS save. I think it was about $14 billion over the forward estimates. With the assertion being in that budget that it would take steps to reduce the growth rate of NDIS spending to 8% per annum. What was NDIS actual spending growth in 24-25, and is the government on track to achieve that 8% growth or less this financial year?
I think we did go through this a bit last week. We brought spending on the NDIS growth rate down from about 22%, I think it was, to just over 10%. and the latest actuarial assessment has required us to have an upwards variation of that because the changes that we had sought have not been implemented in a way that has delivered the expected growth, getting that growth down below, 8 and then below. And that's why we've taken further decisions in this budget, including the need to provide legislative powers for the changes that we need to bring in to bring that scheme back, going down towards 5%. But I'm sure we can provide some more details on that. I think we did traverse this quite extensively in finance, so
we did,
I don't think it'll be any...
I promise not to be so extensive.
Well, it won't be any different to the evidence you heard.
Mr Donovan, did you have some further details on that question for me?
Just to confirm what the Finance Minister said, which was that in 24-25 the growth rate in the NDIS was just north of 10%, so I have it at 10.8% in that year, tracking down from 22.9% in 2022-23.
So it's fair to say, prior to the latest new savings measure as part of this budget, the government wasn't on track to achieve the $14 billion saves it had previously booked.
Well, we have achieved slowing the growth, and that has had some positive impact on the budget in previous budget years. The problem now is the actuary, so some of the ongoing reductions in growth were about getting plan inflation and plan reassessments reduced from, at the moment, I think on average plan inflation is around 20%, and so it was driving that growth down, and the latest actuarial assessment has provided to the government shows that was not on track to be met for a range of reasons, including some decisions of the federal court, and so we have had to make this budget outlines further adjustments to the NDIS scheme, backed up by legislative powers to actually change, to require it by legislation to help us drive down the costs. This is in the first legislation. Obviously, there'll be a second piece of legislation that goes to deal with some of the other matters around eligibility for the scheme in an ongoing sense.
So the saves weren't on track to be achieved previously. Thank you for confirming.
Well, we can go back and show you, because it wasn't just 14 billion. I think over time there has been other adjustments. So we can go back in time. But essentially we've got it down from 22% to 10%. So that has been a very significant reduction in expected expenditure. Yes. Yeah. But to get to 8 from 22, you have to pass through 10, right? Yes. So that's what we're doing, and now we're based on the new information we've got about some of the there's matters, I think, both in the courts and some of the way that the agency hasn't been able to get plan inflation lower to deliver that 8%, and so we're taking further steps.
Okay. I might move on quickly to another topic, and we'll see if we can get this done as effectively as possible. I just want to turn to page 435 of BP1.
Which page, Senator?
435, sorry.
That's right.
I have to say, one of my least favourite pages in the budget papers, because it relates to the government debt bomb. Has the dollar level of gross debt risen each and every year for the past 4 years?
Well, we went through this last week as well, Senator Chandler. It's lower in every year than what we inherited because of the decisions we have taken. You had forecast to reach, I think, $1.2 trillion of debt 2 years earlier than what is currently on the.
I didn't ask about forecast, Minister. I asked what's in black and white here in the budget
well,
papers.
you can see, I mean, you know, again, we're not going to do your work for you. Everything is published, but the point I made on debt last week, and I'll continue to make, is that it's a lot lower under us than what we inherited. We have been paying it down. We've been paying down interest on that debt. We've been managing the budget responsibly, and based on the commitments that you've made, since being returned to opposition, we know that you have no way of delivering on those commitments without increasing debt, increasing deficits and increasing the interest on that debt. It's simply not possible. So if you're concerned about where things are now, I would be very concerned with the number of commitments you've made that would seriously negatively impact on the government's gross debt.
Can the officials assist me here? Is debt going up? Yes or no?
Well, you can see what's published in the documents, Senator Chandler. They are there on the table, in the tables.
So debt is going up then, isn't it, Minister? Because that's what's published.
I
in
mean,
the
we
table.
can go around and we can do this again. Debt is lower in every year compared to what we inherited when we came to government, where under your forecasts, you had forecasts to hit $1 trillion of debt in 23-24. Under us, debt remains below that level, and the interest payments on that debt, because of the decisions we've taken, $176 billion less debt. The interest, we have saved around $70 billion in interest costs over the medium term because of that. So, I mean, the point I'm trying to make here is if you are concerned about gross debt now, you must have been absolutely beside yourself in 22-23, you know, because the position now is much better than the one we inherited.
Public debt interest is the fastest growing payments item in this budget. Is that correct?
Well, I don't think we've made any secret that it's one of the areas of growing pressure in the budget.
It's faster than schools,
the Treasurer and I,
aged care.
The Treasurer and I have always outlined that, and that is why we return upward revision to revenue. We've lowered gross debt, and we're saving on the interest bill. But it will need continual management. And that is what we've committed to since coming to government, and you'll continue to see it in future budgets as well.
Sorry, I'm just looking through my questions, trying to figure out if we can possibly get close to the bottom of this, Minister. Is net debt as a share of the economy higher at the end of the forwards than it is at the start?
Well, net debt, when we came to government, net debt
That wasn't the question, Minister.
Well, no, but you've got to have, what you would like is to just completely erase anything that happened under your government and
COVID.
only come in.
Like the pandemic.
Well, if you want to talk, let's talk about debt. You had doubled the debt before the pandemic. And I know that's an inconvenient truth, but it is the truth. And when you look at net debt, what you had forecast in 22-23, 23-24, in 23-24 you'd forecast net debt to be $772 billion. In actuals, net debt, I think in 26-27 is significantly lower than that. 2.5 years on.
Thank you, Minister. My question was specifically whether net debt as a share of the economy was higher at the end of the forwards than at the start.
Well, we're going to have to continue to manage the debt, as any government would have to, particularly when they've inherited debt forecasts in the order of $1 trillion of debt, which is what we inherited from you. And we're going to have to continue to manage it, and we will. you look at all of the decisions we've taken, every budget where we can, we return upward revisions of revenue back to the budget, we lower debt and we lower interest on that debt. And that's partly why some of these the biggest thing you could do if you want to manage the risks on that side of the budget is support the changes to the NDIS. Because you can see that from the budget papers that the single biggest thing that we can do to manage the pressure on that side of the budget is to rein in the growth in the NDIS.
You are... Thank you. Just one more question, Chair. You are borrowing more than $30 billion a year, pushing government debt past $1 trillion, and at the same time you are now hitting Australians' savings, investments, their family businesses and their homes with new taxes. Isn't the truth of this that you have spending completely out of control and it's working Australians and the next generation of Australians who are going to have to pay for it through your higher taxes?
No, that is not true. And if you read the budget papers and you see over the...
You haven't wanted to talk about the budget papers, Minister. You want to talk about an alternative form of history.
Over the medium term, the savings that we have put forward in this budget in terms of recovery of the budget contribute twice as much in that effort. So, no, I don't accept that. And you, again, I would say, you try to erase all of the debt that had been incurred under the former government, and we are now managing it. And what I continue to say to you, gross debt is below what was forecast at MyEFO. It's $173 billion below 22 PFO. It's now forecast to peak within the forward estimates at 35.8%, 1.2 percentage points lower and 2 years earlier than MyEFO. And gross debt is lower in every year of the forward estimates and the medium term because of the decisions in this budget. And if you are so concerned about if you are so concerned about it, then you wouldn't be playing games on the NDIS. You would be backing that save in. Well, you would be backing that save in.
Thank you, Chair.
Thank you.
Chair, I just wanted to just put on the record, I just saw Senator Humes made some comments on national media this afternoon which significantly misrepresent the evidence that I've provided in the committee today, and I'm happy to table the transcript from this morning and then the transcript from Senator Hume. But I think it's pretty serious when somebody who's provided evidence that gets misrepresented on national media in the way that you... No, I didn't. When you go back and I can take you through the transcript, Senator Hume. I said it was a busy budget session like it always is. Senator Hume says, so yes, it was a rushed process. Minister, no, I'm not saying that. I'm not saying that at all. We are a methodical government. We work through things. We go through the standard process to put a budget together. That was followed. It is the same as it has been in previous budgets that I've been involved in.
Well, then why isn't it in legislation rather than delegated legislation?
Well,
you would have done the work. You had done the work, Minister. You had done the work.
Sorry, we can have that.
Pickle you're in.
We can have that argument, Senator Hume. What you then went on national media today and said, we learned in Treasury estimates that the process was rushed, according to Katie Gallagher.
Yes.
And you then went on, well...
It was a busy budget process.
That is a complete
That's why it's in delegated legislation rather than actual legislation, because that's why you haven't done the work, Minister. You haven't done the work, and that's why the crossbench won't support it.
Let's not have people talking over the top of each other.
That is a complete misrepresentation. I've just read out the two separate...
Are you accusing me of lying, Minister?
Well, I'm not using that language.
You're accusing me of lying?
Senator Hume,
do we want to get into this?
Senator Hume, you have completely misrepresented the evidence that I provided to this committee.
Minister, do you want to
I understand you want to talk about something else, but I would just...
No, I want to talk about
like the record corrected by Senator Hume.
I want to talk about tax.
Well, I know you want to talk about Hume.
her point of view, but this is a time to ask ministers questions. There's other times in the Senate that the minister could make her points. It's not really a point of order to debate the accuracy or otherwise of comments made outside this place. Even if we were in this place, it's not a point of order. So I think we need to move on to our business. As I say, there's other opportunities to make her points.
I'm very happy to,
yeah.
Senator Canavan, but I do think it's pretty important that I had the opportunity to make it clear that I did not say in any way, in any form, what Senator Hume alleges I said on national TV today.
Thank you, Minister. Thanks, Senator Hume. We will go to Senator Sharma.
I had some questions about the DeBell review into the Australian Office of Financial Management. I understand that's within your purview, Mr White?
It is, yes.
Great, thank you. And I know the Secretary addressed it briefly in her opening remarks this morning, and I did see a copy of those. Can I ask, when was the completed review handed to Treasury?
Damien White, Deputy Secretary, Fiscal Group. I think it was on the 24th of... Well, we put it on our website on the 24th of April.
That's right.
I think we might have got it the night before. So it was either the night before or the morning of. It's one of those. It's basically as soon as we got it, we put it up.
Okay, because I did want to ask, because it was released, it was on your website, I think, late on that Friday afternoon.
Yes, that's right, yeah.
Before a long weekend.
I think it was lunchtime, Senator.
Okay. So there was no particular reason it was published then before? You know the cynicism of people putting things out on media releases on a Friday before a long weekend?
No, we were keen to put it out as basically as soon as we got it, Senator, and it was late in that week that we got it from Dr DeBell.
Okay. And the terms of reference of the review foreshadow the possibility of a confidential annex to the report. Can I ask, was a confidential annex prepared or provided?
No, Senator, it wasn't.
So
this is the report as
published.
That's all we have.
Okay. As I understand it, workplace issues and cultural matters were not within the ambit of the review. They don't seem to feature as part of the terms of reference, but as you would know, there were significant staff morale and turnover issues as canvassed in the census and through reports, I believe, to you or other officials at Treasury.
Yeah. I'll answer that like this, Senator. So the terms of reference went mainly to the question of whether AOFM is doing its job properly and in a way that manages Commonwealth costs and risks. So that was Treasury's primary concern about, do we have an organisation in our portfolio that is up to doing its job properly? That was our main concern. And so as you can see, the terms of reference went to those issues like how they do their financing operations of government, managing the cash portfolio, liquidity management, frameworks for risk management and compliance, and external reporting between the AOFM and us at Treasury. Now, we did have some things at the bottom of the terms of reference, Senator, that go, in terms of doing that, the report should have regard to organisational structure, business processes and skills and experience of its workforce. But the overarching idea that they're up to doing their job properly, even though we didn't ask directly about those sorts of things and they're not explicit on the face of here, if they were the sorts of things that were causing problems with them operating, we would have expected them to be part of the review.
Okay, I'll accept that. The Secretary said this morning that a more detailed response will be made public in coming weeks. So what is the intention?
So we will put out basically like people who get reports, we will put out a response to the recommendations and I forget what the other name for the other things were in the suggestion. They weren't called suggestions, I forget their exact name. But we will put out a report saying what we're going to do with these things is our intention to say the report said this is how we're dealing with those things and what we're expecting going forward is what I imagine.
And does that report need to be approved by the Treasurer or does that come straight from...
I wouldn't think so, Senator. Treasury, the Secretary commissioned the review. It's a review to Treasury. It'll be, I think it'll be our response. I mean, maybe, but yeah, I expect we'll show the Treasurer, but I don't expect we'll seek his approval or anything.
Okay. One of the big judgments that jumped out at me in the review was this quote: the review also has concerns about AOFM's capacity to respond effectively in a crisis. Now, if I read the Secretary's comments correctly this morning, Treasury largely agrees with, is it Mr de Bell or Dr de Bell?
I think it's Dr de Bell.
It agrees with Dr de Bell's analysis and recommendations. Do you share that concern then that the review identified?
So without preempting what we're going to say in the review, I suspect too that we're going to basically agree with them, right? We're not going to have fundamental disagreements with this, because the reason we did it was to get someone who knew a lot about this topic to come and tell us what they thought.
Okay.
So to answer your question in a general way, Senator, the issues that have been put in the recommendations of the review are ones that we will take seriously and think about how they're addressed.
Okay. Just to, canvass some of the other recommendations, the ability to manage a crisis, the lack of internal challenge and adaptation of debt management strategies, the size of the liquidity buffer that's maintained currently by AOFM and the growing costs of this, underutilisation of the advisory board, the adequacy of channels to express staff grievances. These will all be addressed by Treasury, these recommendations and concerns?
I would have thought so, Senator. Maybe I should say something about... So I think this is a very broad generalisation. I think there are kind of three types of recommendations or improvement opportunities, now that I've found the proper title for them in here. So some of them really go to how AOFM works and does its job as an organisation. Some of them go to how Treasury and AOFM and organisations that we have like the advisory board kind of work together for essentially the assurance processes that we have as Treasury over what AOFM is doing. And then there are some recommendations, a bit like the liquidity buffer and the index bonds ones, which really go to the substance of the debt management program.
Mm-hmm.
And we will look at all of those things, but they all probably have different ways of looking at them. So things that go to AOFM's internal operations will be primarily for AOFM, but because of this report, we will be taking an interest in how they address them and those sorts of things. We will have a very active interest in things like the advisory board's remit and how they work and any of those things between us and AOFM. And then the things that go to the debt management program will probably be done as part of, maybe not the normal course of putting together the borrowing and the liquidity strategies, but in that sort of approach, right? We'll have for the liquidity buffer, we'll go, Dr de Bell has said this, what do we think? We'll probably use the advisory board to think about how we think about that thing, that recommendation. So that's kind of what I expect the general approach will be.
Thank you, Mr White. Have any steps been taken to address some of these concerns yet or implement these recommendations, or is that yet to commence? Either in Treasury or that you're aware of within the AOFM.
So the AOFM are going to come tomorrow and we'll probably talk to you about some of the things they've already done. I've already talked to the advisory board, I think it was last week, I don't quite remember, it was recently, about the idea of an expanded remit and how we might use them better. So we've gone on that path definitely. So we've done a few things. Some of the things like a lower liquidity buffer will probably be for the next advisory board meeting when we think about the liquidity management program for next year and those sorts of things. So some of them are probably a bit down the track. But as we said, we're at the very early stages of thinking about them.
Okay. Who is on the advisory board? I couldn't find this out publicly. I wasn't able to... Do you have maybe it's not published, maybe it is, but...
We might be able to find out for you the list. I don't think I have the list with me at the moment. There's 4 people on the advisory board.
I understand it's the Secretary of the Treasury and the AOFM CEO are sort of ex officio members. And there's 4 other... You're not one of the members, Mr White?
So I go to the meetings, but I don't actually know if I'm a formal member of the board.
We'll get the list.
You'll get this. I think we kind of think of it as, the Secretary and the CEO of AOFM go along... as you said, as ex officio, and then we probably think of the 4 external people as the members of the advisory board in some way, that it's a meeting, but it's, so we'll get the 4 members for you and we'll come back. We can probably do it before we end today.
Okay, that would be helpful, given that they're meant to be playing a more important role.
Yep.
I'm just conscious, it was the current AOFM leadership that made some of the most experienced crisis officials redundant as part of their restructure. And Dr de Bell identifies that as a risk or a vulnerability for the organisation. What confidence do you or Treasury have in the current leadership of the AOFM to manage effectively in a crisis or deal with more challenging debt market conditions, given the loss of experience and given this has happened under a leadership that's, overseen not only a plummeting staff morale, but loss of some of the most experienced members or employees at the AOFM? What is your level of confidence?
So, I'd answer like this, Senator. So, the review points out that the restructure that was put in place and the change in structure and having a deputy CEO and a chief operating officer and those sorts of things were sensible changes in the way that the structure of the organisation was made, and that the organisation as a whole, at least in a BAU situation, can do its job perfectly happily, and that the debt program has been managed well. It then says, as you said, that it could possibly be in better shape to do things in times of financial stress, and possibly it needs some more expertise. And as you said, says that some of that expertise is no longer in the organisation that was there before. So, to me, that seems like we have an organisation, its management, who is thinking sensibly about the way forward. Possibly they've gone down a path that, they've gone in a path that our reviewer has said we should think really carefully about this, and there is probably something to do. But that doesn't mean we don't have confidence in the management of the AOFM to do their job and manage their organisation.
Double negative.
Yeah.
All right, thank you, Mr. White.
Quickly, we've got the names of the people on the board, and it's actually 5, not 4.
Okay.
So there's Steve Knight, Anne Anderson, Bill Whitford, David Bennett, and Kurt Zuber. They're all people who've had pretty extensive experience on financial markets. We try to find people who are not actively in the financial markets anymore because of conflict of interest issues, but they all have long experience in various parts of the financial markets in Australia.
Okay, thank you. Could I ask you to either table that or provide it in response to a question or notice?
Yeah, we could easily provide that. Somehow we'll work it out.
Yeah. Thank you. Thank you, Chair.
Senator Roberts.
Thank you, Chair. Thank you for being here tonight. I asked these questions of the previous group, the markets group. And they recommended that I ask you, could I just check, please, because it seems like you're perfect for it. The fiscal group is a core division within the Australian Treasury. That's definitely correct.
Yes, Senator.
Responsible for delivering government budgets, analysing fiscal policy and ensuring efficient public spending.
Yes, Senator.
Correct. It works to achieve sound fiscal outcomes through structural policy advice, coordinating the federal budget and managing financial transfers to states and territories.
Yes, Senator.
Correct. Key responsibilities, 3 of them: budget production, Commonwealth-state relations, manages the timely and accurate payments and financial arrangements between the federal government and the states or territories. And last one, spending advice, advises portfolio ministers on whole of economy, government spending, regulations and resource allocation across policy areas like health, education, labour market infrastructure and defence. Correct?
Yes, Senator.
I'm used to being in business and companies, small business and large corporations, where we look at our costs, especially our bigger costs, and try to work out ways to improve them. So that's what I'd like to ask you about. There are two big costs. Could you tell me, please, what are the full costs across the breadth of the Albanese Labor government of net zero measures, net zero policies, including departmental costs, co-investments and grants? Also include a figure for contingent liabilities, including off-the-books matters, which I've seen referenced in mainstream media as potentially $1 trillion liability. Could you please include spending to date as well as projections across forward estimates? Are you the people?
That's a very large question, Senator.
It is. It's a very large cost, in fact.
We don't have that in front of us. So budget paper 1, page 121, has an appendix B that goes to this, but not in the way you're asking the question. It has some information about net zero transformation and net zero spending measures, but they're really new measures, not the whole of the government. Answering that question would take quite some time, Senator. Like it would.
Did you take it on notice?
We can. What do you have any?
Philippa Brown, First Assistant Secretary, Budget Policy Division. I might just, Senator, point you towards paragraph 1 on page 124, which provides a similar information that is there for this budget, but gives the figures in previous budgets. So you can sort of have a look at those numbers and see the impact over time.
Yeah, and if we took it on notice, then we'd have to work out what we can do. It might not be an easy thing to pull together in that way, but we could look.
Okay, thank you. Take it on notice. Second one, and you're involved in allocating money to the states. Could you please provide the cost since the 1st of July 2022 of any Commonwealth department or agency which duplicates agencies existing in the territories and the states, and for which the constitutional mandate for that power vests with the states, not the Commonwealth? Could you please include data through forward estimates?
That's possibly an even bigger question than the first one.
I don't know how we would...
It's a huge opportunity.
What are you specifically after, whether there's similar functions being done at the Commonwealth level and at the state level?
The states have got the responsibilities for a certain service, and the Commonwealth is duplicating it.
So, I mean, it's an interesting question, Senator. So, essentially, ever since the Federation started, there's been certain things where Commonwealth and state governments have done things in similar areas, and we have a lot of that now, and we have a whole budget paper number 3, Federal Financial Relations, which has $200 billion odd a year where we give it to the states. The question of duplication versus cooperation and doing things in different areas for the same sorts of things is an interesting question. So, and is us giving money to the states to run hospitals duplication or not? It's kind of a tricky question.
I don't think giving money to the states, part of grants and things like that, is a duplication. That's separate. Okay. But it's where you're doing the same services. There seem to be rife in health, education, environment.
We have slightly different responsibilities though, like in health. States primarily run the hospital system, but we have responsibility in primary care, so GPs, Medicare, that kind of thing, aged care. And in education, it's more universities, early education and care. States have public schools. So there are differences. I'm just not sure how we would provide an answer to that on notice in a way that would not take a lot of effort.
Well, how much is a lot of effort compared to the benefits once we work them out? And Australians are in a cost of living crisis. The government's increasing taxes, and so why not look at cutting the need for taxes?
We're cutting taxes as well. There's tax reform, which includes tax cuts. As well. But I mean, I guess fundamentally, Senator Roberts, we probably have a disagreement that the Commonwealth duplicates functions of the states. I think the Federation and its roles and responsibilities are pretty well, understood, and the architecture of the Commonwealth Public Service reflects that, just as the states reflect theirs.
Well, Minister, I think it's a huge opportunity to at least have a look at it, investigate it.
I mean, we're always looking at ways to streamline. We genuinely are. I mean, I don't think we have no appetite to be in places that the Commonwealth shouldn't be involved, because we have enough in the areas of our responsibilities. But I'll see if there is anything useful that Treasury can provide.
Thank you. Thank you, Chair.
Thank you. Senator Hume.
Thanks, Chair. I've got some questions for the Labour Market, Environment, Industry and Infrastructure Division.
Yes, Senator.
Thanks. And specifically to do with policies in the infrastructure portfolios, I just want to get a better understanding of the policymaking process. Is it your branch provide advice on potential policy or legislative changes? Do departments come to you and while they're working up their proposals, or do they come to you once it's done?
I might start, Senator, and then we'll see if others want to add. So, in general, our role is to be involved in, let's call them policy-making processes in general. I mean, Mostly we're interested in things that have a budget impact rather than other things, but for things like infrastructure, that is most things. So agencies will work up their new policy proposals about things. If they have money implications, they'll go to committees like ERC. Through those processes, we have input into information that goes to ERC. We'll brief the Treasurer on what we think. We will engage with agencies along the way and put our views into them about these things. Do we agree? Do we disagree? Do we have other views? Can they think about other things that aren't in whatever they've been doing so far? So that is generally how we engage in the process.
Right.
And it kind of depends on what the issue is. We have to prioritise and pick and choose. We have we have a team of maybe half a dozen or 8 people who do infrastructure. The infrastructure department is a couple of thousand people. We're not going to give heaps of attention to every single thing there, but we will pick some where we give more.
Right. So the infrastructure people would come to you with a model and you verify it, or do you sort of help them model it along the way through?
So maybe I should also say, for payments, for agencies who do spending, they do their own estimates of how much policies cost and how much their programs cost. The Department of Finance has a role in validating those costs. So to get them into the budget system, Finance has to tick it off and say, yep, we're happy with how you've done that. We don't have that role, but we will have a look along the way. We will care about whether we think the policy's being effective, will it achieve what it wants. We'll have a view on whether we think the cost is reasonable and those sorts of things, but not in a way that we get into the details of those sort of things. Yep. Often we will not get into sort of the modelling detail of issues with portfolio agencies.
Okay. And you don't just model the budget impact, you do whole of economy stuff as well?
Yeah, so we care about when people put up new policies, we care about the budget impact as one thing, but we also care about the general impact of the policy. Like, is it a good policy? Is it achieving good things? Does it have any issues? That we want the policy to be effective and achieve good things for the people of Australia.
Right, okay. So if there's a proposal that's going to increase the cost of federal infrastructure projects, is that something that you would be involved in or would advise the Treasurer of?
So if an agency is doing something where they say, we want to spend more on infrastructure for this purpose, yes, we would be involved in those sorts of things.
So the government has announced this week a bill called the Workplace Relations Legislative Amendment Building Cooperative Workplaces No. 1 bill. Are you familiar with this bill?
I am not. Mr Power? No, we are not, Senator.
Okay, that concerns me greatly because the impact of this particular bill could have an enormous flow-on effect to federal projects, particularly infrastructure projects and the infrastructure budget. So this is not something that Treasury was consulted on.
It's not front of my mind, Senator, but it may have been something that we had dealt with in the division, but not present.
What about the impact on, if you weren't familiar with the bill, you wouldn't potentially know whether it was going to impact defence budgets either. Is that correct? Do you do defence budgets too?
No, Senator, but we know a bit about them. But no, but so I think we're going to struggle to answer any of these questions, Senator, because we're not familiar with the bill.
Okay. So Treasury hasn't been asked to cost the implications of this policy. I find this extraordinary because you're asked to cost and model climate policies, but this is a very significant bill and you haven't been asked to deal with this one yet.
Well, we don't know about the bill, Senator. It's possible that someone else in Treasury has been dealing with this bill. We would have to check.
Okay. This bill would potentially add thousands and thousands of dollars to the cost of infrastructure projects. A similar arrangement was within the Queensland Parliament as part of its best practice industry code. It's better known actually as the CFMEU tax. So is Treasury aware that there is a policy that leads to delays and cost blowouts of potentially up to 30% according to reports of the Queensland version of this bill, that with roughly $17 billion added to their infrastructure costs? if there was a bill out there that replicated the problems that had been experienced in Queensland and added that much to infrastructure, would that not be something that you would expect to come past Treasury's desk before it was introduced?
Well, there's a lot of hypotheticals in that.
No, it's a real live bill in the Parliament now.
No, but you were saying if this happened and if the Queensland thing happened, then what's...
Well, the Queensland thing did happen, Minister.
I know, but you're asking...
And this bill has the capacity to do the same federally, and yet it has already been introduced and Treasury didn't even know about it.
Well, that's not the evidence that's been provided, just as somebody who seems to verbal evidence. Fiscal Group is saying that they were not consulted, but that does not mean...
Who would be in Treasury?
That does not mean that Treasury were not.
If it has,
we would have to take that on notice, Senator Hume.
If a policy has an enormous economy-wide impact on an area like infrastructure, that would normally be something that Fiscal Group would consider.
Which
right?
is this? I'm just trying to find out. Is this the?
This is the CFMEU tax that your government is going to impose.
The workplace relations well, can we deal with the title? I'm trying to understand the legislation you're asking questions of. Is it the workplace relations legislation amendment, building cooperative workplaces number 1 bill, 2026? Okay. And I understood that large parts of that legislation were supported and agreed by everybody.
They're the parts that go to removing the obstacles that are causing a backlog at Fair Work.
Which seems to be the bill.
There was also an additional element that was snuck into this bill. It was snuck into the bill and we didn't get a chance to speak to anybody in the right department about it because the bill was reported to the media, not to the Senate, on the very night that we had, the very night that we had the department in front of us.
I
which was
understood the Minister had offered you a briefing with department officials.
She did. She offered it at 8:30 that night.
Right.
That night. 8:30. But that was after the Fair Work Commission and the department had left.
Right.
So... This bill has an enormous potential for an enormous financial impact. The potential to blow out infrastructure projects by up to 30%. If it does what the same bill did, what the same legislation did in Queensland. Is that something that would interest Treasury?
So is this the bit that would allow, the bit that concerns you, because there's a number of elements to this bill that I understood to be agreed and supported across the board, around enterprise bargaining? Is that the bit that's concerning?
It's a bit that allows the government to be carved out of discrimination laws that would essentially allow you to discriminate in favour of procurement for companies that have an EBA with particular unions. So you can discriminate. It's essentially like the BPIC legislation in Queensland. It's almost a replica. That was a disaster, and it was something that the Minister specifically said she wasn't going to do here, but somehow has managed to sneak it into a piece of legislation that's about something entirely different. That sounds familiar. That sounds familiar. So I'm wondering if Treasury is going to get a chance to analyse the potential impacts of this.
My understanding is it says the bill does not impose any obligation on the Commonwealth to do this in relation to enterprise agreements. Then why is it necessary? How and when it would be appropriate to do so is being considered as part of the work that's being done on the Secure Australian Jobs Code.
An entirely unnecessary piece of legislation.
I'm not sure we're going to be able to provide you with anything more
you can.
In Fiscal Group on
Fiscal
this.
Can. I would like to specifically request that Fiscal Group looks at the impact of equivalent legislation in Queensland and then reports back to this committee about the potential impacts that this legislation could impose on taxpayers for the Commonwealth.
I'm sorry, you're not. I don't know that the committee can task the department to do a
Well, you
piece
asked me
of
what
work.
I hoped to hear from Fiscal.
No,
That's
I said
what
I'm
I
not
hope.
sure there's anything that we're going to be able to assist you with as part of Fiscal Group.
So you don't think that Fiscal Group should have a look at this legislation?
We've taken on notice any involvement that Treasury has had in this legislation, but but I don't think it's reasonable for an opposition senator to be tasking Treasury officials to do a piece of work and report
we
back
expect
to the
government.
committee.
We expect government
Well, no.
ministers to do that.
Well, Senator Hume, it's not your job to task Treasury officials to do work for you. I'm sorry, it's
I'll ask you,
not the
Minister,
case.
will you task Treasury officials to
I've
look at the
already
potential fiscal implications of this legislation?
I've already undertaken on notice to come back to the committee about any involvement Treasury has had in this.
But that's not the question that I asked you.
Well, that is what I've taken on notice.
So you won't commit to this committee that you will task your department or Treasury to look at the potential fiscal implications of industrial relations legislation?
I think the Minister's already answered the question.
And this legislation,
so she said no.
No, this
That's not what she
legislation is
said.
being managed by Minister Rishworth. She's offered you departmental briefings on it.
I understand that, but the
I hope
implications for
you
your
take
budget are enormous and you are ignoring them.
Well, that's
it's your budget.
That's your assertion. I do not accept that.
Well, we'll see when we see the cost of infrastructure blow out, won't we? Thanks, Chair.
Thank you. Senator Canavan had some questions, but he's not here.
Go to revenue.
Yeah, that's it, I think, then. I think we can, revenues here. Okay.
We don't want to just do dinner break now?
No.
Okay.
Oh, no, I don't think so. We've got half an hour, we could get ahead of time. So let's...
Can I just make one point here, Senator, which goes back to questions from Senator Sharma. It's been brought to my attention, we actually got the AOFM review on the 17th of April, 1 week before we put it out, not 1 day. It's possible I got it on the 23rd, but we had it before then.
Thank you.
Thank you. Well, thank you for coming, the representatives of Department of Treasury Fiscal Group. You can go now and enjoy your evening, and we will just suspend for a moment while the Department of Treasury Revenue, Small Business and Law Group and our other witnesses come to the room and the table. All right. The committee welcomes officers from the Department of Treasury, Revenue, Small Business and Law Group. And I think we also should have here representatives from the Australian Charities and Not-for-Profits Commission, the Australian Tax Office and the Tax Practitioners Board. Is that correct?
Officers from the Australian Charities and Not-for-Profits Commission.
Great.
And I think Peter de Cure, the chair of the Tax Practitioners Board, was joining remotely.
Remotely, that's right.
But he might not be expecting it until 8. Sorry.
Okay, well, we can kick off with the people we have.
Great.
Yes.
Excuse me, Chair, if I could.
Yes, I hadn't yet got to the next bit, but thank you. Welcome, Mr. Hefferon, Commissioner of Taxation, ATO. Would you like to make an opening statement?
Well, not a formal statement to table, but I would like to acknowledge the recent appointment of my former Chief Operating Officer, Ms Jackie Curtis, PSM, as the new Australian Public Service Commissioner. Ms Curtis made an outstanding contribution to ATO over 10 years as our Chief Operating Officer, and prior to that as a head of ATO People for 3 years. Strengthening how we operate as an organisation, she lifted our capability and led significant transformation across our systems and workforce. The focus on integrity, stewardship and performance has left a lasting impact on the ATO, and I know she'll bring the same strength to a new role. On behalf of the ATO, I'd like to thank her for a significant legacy she's left and wish her all the best for the future in the role. So again, it's a privilege to appear before the committee with my colleagues and look forward to assisting the committee with its questions.
Thank you very much, and a lovely thing to have on the record. Thank you, Mr. Hefferon. Senator Chandler.
Thank you, Chair. I just want to start off by getting an understanding and stepping out some of the economic rationale behind the CGT changes in the budget. The government has stated that its objective in this budget was to align the tax rates paid on labour and capital income, and I think the Secretary of the department, who obviously appeared this morning, reiterated that in her speech last week. Is that correct, Ms Brown?
So Diane Brown, Deputy Secretary, Revenue, Small Business and Law Group. The tax package measures would have had a range of objectives. There is a more close alignment of the tax rates paid on capital and labour, but it also had the objectives generally of dealing with intergenerational equity, improving housing outcomes, and improving a more efficient tax system by removing distortions.
We'll get to those other objectives later on this evening. I just want to focus on the labour capital issue right now. Now, just to step us back through a bit of history, the Henry Tax Review, which was obviously commissioned by a Labor government and developed by Treasury under former Secretary Henry, that stated on taxing income from savings that comprehensive income taxation, under which all savings income is taxed the same as labour income, is not an appropriate policy goal or benchmark. And that review went on to note that there are reasons beyond inflation to tax the income from savings at a lower rate than labour income. And I think former Secretary Henry has re-endorsed that position recently. There was also a statement in the Mealy's review, which was a major tax review conducted in the UK, that stated that economic theory provides no compelling reason why capital income should be taxed at the same rate as labour income. The capital income tax rate should be well below the top marginal tax rate on labour income, and it then goes on to give various reasons for this beyond inflation, including international mobility of capital and difficulties of enforcing taxes on foreign income, etc. So can I ask, given that there has been significant literature that has examined this issue previously, and I don't think it's crazy economics that I'm referencing here, it's pretty orthodox. Is it appropriate to tax capital income at a substantially lower rate than labour income?
So I might say a few words and then Dr Johnson may say more. So capital and labour are still being taxed at different rates. Labour will be taxed on nominal income, capital on real income. Labour is taxed on receipt and capital gains are taxed on realisation, and that has a deferral benefit. So within the system, there is still a differential between capital and labour income. There are also questions around the relevance of a broad-based tax arrangement to encourage investment in capital. That might be something you're coming to, because the tax system has a range of other concessions that benefit capital and lead to lower rates across the capital tax system. But as to your questions onto literature, I might see whether Dr Johnson has something he'd like to add.
Shane Johnson, First Assistant Secretary, Tax Analysis Division. So the reforms themselves, they don't align the tax rates between labour and capital gains. They do move them closer. Capital gains will still be taxed favourably. As Ms Brown mentioned, the existing CGT discount, it'll be replaced with a discount based on the inflationary component of the return through the indexation of the cost base. This direction is, is consistent with the Henry Tax Review. So the Henry Tax Review suggested moving to a 40% discount, noting that it actually represented a more realistic inflation adjustment than the 50% discount. This actually goes even a step further and actually does apply an appropriate adjustment for inflation. In addition, as Ms Brown mentioned, capital gains, unlike other forms of income, also benefit from deferral. This will actually reduce the real effective tax rate over time. This is because taxpayers can actually choose when they realise the asset and pay their tax, and so they get a benefit. Essentially, it's like an interest-free loan on the tax liability. In contrast, as Ms Brown mentioned, labour income and other forms of savings are taxed on receipt. With capital gains being taxed on realisation, like I said, that will actually reduce the tax rate. So while the rates are moving close together, they're not going towards alignment, and I think they are broadly in line with the principles behind the Henry Tax Review, which did suggest moving to the 40% discount because it was a better approximation of inflation. A better approximation of inflation to a discount would actually be to adjust for inflation directly. In addition, I should also mention that if you look at the arrangements as a whole, there are also still favourable taxation arrangements for small business, because those small business tax concessions remain as well. So you look at the effective tax rates on those types of investments, and again, they're much lower than on labour income.
Would you agree that there are good economic reasons other than inflation to tax savings less than capital income?
So I think the literature is quite, so I think if you have a look through history, through the 1970s, the literature went through and looked at the optimal taxation of savings and suggested that, potentially the optimal rate is, potentially zero. I think since that time, we've, research and literature has evolved and highlighted that there is a reason, there are many good reasons for the taxation of savings. There may be a differential in the rates between labour income and savings income, like we've got in this situation, but certainly there is a good rationale for taxing, having some form of taxation or some level of taxation on savings. Another thing to also be considering when we are looking at the appropriate rates is the ability to substitute income from one form to another. So, for example, the ability to substitute labour income into a capital gain, and to the extent that that is possible and easy to do, then again that would also justify a higher rate on, or a positive rate on savings or on capital gains.
It's a pretty basic tax principle, though, isn't it, that capital income taxes are a form of double taxation. That is, individuals are saving out of post-tax income and then investing in something and then having to pay a capital gain tax when they dispose of that investment, which means you've already paid tax on your saving and therefore any returns generated by your savings. So as a result, shouldn't income from saving be taxed significantly less than labour income? And you've said in testimony here this evening that what the government is doing here is, stated or not, trying to move those two tax rates closer together.
So there might be a number of reasons why you still would like to tax capital income and capital gains at a positive rate. So I gave one before about the ability for substitution. Another one would be if there is a relationship between or a signal that, say, for example, high-income individuals or high-ability individuals are more likely to save. That would be another reason why you might like to tax savings. So I think there are a number of reasons why a positive rate on savings makes sense and is good economic policy. I guess the question here is whether or not a uniform discount is an appropriate way of providing that concession, and I think some of the analysis that we've shown in Budget Statement 4 suggests that that's probably not the case.
I'm at 9 minutes. Okay, thank you, Chair. You did reference that the Henry Review recommended simply reducing the CGT discount to 40%. I was wondering whether there was any consideration of that recommendation by Treasury in relation to these CGT changes. Is there any clear reason why you didn't consider the Henry proposal and you went with something else?
So, Senator, I think the discussion of options is really a matter of budget processes. And so it's not something we can disclose, but we can talk about the advantages of going with indexation. It is an accurate using real gains is an accurate measure of inflation. The BS4, and in particular box 4.2, shows that a discount can be arbitrary, can lead to arbitrary results across assets, which can distort investment decisions. So the government decision to go with the real indexation removes those distortions and supports better investment decisions.
Thanks, Ms Brown. I thought it was worth a shot trying to get out of you what the other considerations might have been. I might leave it there, Chair, for now. Lots of other questions, but happy to pass the call on.
Thank you. Before I go to Senator McKim, I'll just acknowledge that Peter DeCure, AM Chair of the Tax Practitioners Board, I think is now on the line. I did see him. So welcome, Mr DeCure, if you're still there. And I've seen Ms Woodward from the ACNC, who's also just arrived. Mr DeCure, would you like to make an opening statement? That was a no. You were on mute, but we could read your sign there. Ms Woodward, would you like to make an opening statement?
No, we tabled a statement, Senator.
Thantor you. Okay. Senator McKim.
Thanks. Good evening, folks. I want to ask some questions around the fuel excise collection forecasts in the budget. So had a bit of a look at those, and when you look at the forecasts for fuel excise collection and subtract Treasury's inflation assumptions, would it be fair to say that Australia will be importing and therefore burning more fuel in 2030 than we are today?
I don't know whether we can do that calculation on the run.
So gross fuel excise collections, according to the budget, will increase 2.3% above inflation by 2030, and fuel tax credits will increase 8.4% above inflation by 2030. So does that mean we're going to be importing more fuel than we currently are, and therefore are we going to be more vulnerable to fuel price shocks in 2030 than we currently are?
If you like, I can take that. I'll dig that up now if you like. We'll see if we can get some information on the base. I don't have that to hand, sorry, but I'll see if I can get that now if you like.
Okay. All right. Thanks, Mr Johnson. So are you happy to come back to that this evening?
Come back after dinner.
Yep.
Yeah.
Yep. All right. Thank you. I was asking some questions earlier today, and the Secretary referred me a couple of topics I was raising to this output. Firstly, self-managed super funds. There's been a flood of advertising encouraging people to invest in property through self-managed super funds. So there was a flood of advertising post the government's budget announcements around the changed tax treatment of negative gearing and the capital gains. Does Treasury monitor how many residential properties are purchased by self-managed super funds, and if so, does Treasury monitor how many of those are accessed through limited recourse borrowing?
Treasurer, I think Dr Johnson has the numbers, but as a general statement, yes, we do look at self-managed super funds. We do look at the assets that they hold, and one of the asset classes we look at is residential and whether it's subject to a limited recourse borrowing arrangement. But as to your answer from this morning, maybe Dr Johnson.
Thanks, Dr Johnson.
So around 10% of self-managed super funds had investments in residential real property. So that's both through limited recourse borrowing arrangements and also non-limited recourse borrowing arrangements, so owned outright. Around 11% of self-managed super funds had a limited recourse borrowing arrangement. So that could include an arrangement for either residential or commercial property or for another purpose, but most likely through property. In terms of the limited recourse borrowing arrangements, they make up around 7% of the total value of self-managed super fund assets. So this is around $67 billion worth of assets. Of this, we understand about 38 billion is held in residential property assets.
38 million?
38 billion, sorry, billion, yep.
So sorry, just to be clear, $38 billion invested in residential property out of self-managed super funds.
Assets financed through limited recourse borrowing arrangements through self-managed super funds. Yeah. Now,
all right.
I think you also... sorry?
No, please go ahead.
No, I was going to say, I think you also asked for trends, but the trends have been relatively stable over time, maybe some downward trend as a share of total self-managed super fund assets, but relatively stable over time.
All right,
as a share of self-managed super fund assets.
Thanks. And that 38 billion. So sorry, $38 billion invested in residential property through limited recourse borrowing arrangements via self-managed super funds. How many residential properties is that? Do we know?
Sorry, we don't have information on the number of properties, just the values.
All right. So the sort of advertising that has and still is, by the way, out there, been put out there since the budget is SMSF, the budget loophole. Why SMSF is now king. There are spruikers out there right now leveraging the manufactured outrage that we're seeing from News Corp, media outlets around the budgets, around the government's really quite modest proposed changes to negative gearing and the capital gains tax discount. Like you would expect that to stimulate demand for people to create self-managed super funds, for people to utilise limited recourse borrowing arrangements via those self-managed super funds or via existing self-managed super funds. That will increase demand in the housing sector, will it not? And then in the absence of any, all other things being equal, that will mean an increase in prices of residential properties, will it not?
So, Senator, I might invite Ms Pye, who is the First Assistant Secretary of the Retirement Incomes and Super Division, to talk about the work that the government is doing at the moment in a consultation paper on super switching, but also why we think that there will be, while self-managed super fund is attractive, there are features of it that will act to limit its use.
Okay, thank you.
Nina Pye, First Assistant Secretary, Retirement Income and Superannuation Division. Senator, maybe as a starting point, while SMSFs are able to borrow through limited recourse borrowing arrangements, there are a number of reasons why it's not an attractive strategy from a tax perspective. Firstly, losses from negative gearing through an SMSF must be offset against other SMSF income, so they can't offset personal income, which would be subject to marginal tax rates. And superannuation income is also taxed at a flat 15% during accumulation, as opposed to progressive marginal tax rate. So while we are aware that there's some of this spruiking activity underway, it is actually less attractive to use an SMSF and an LRVA for those sort of reasons.
Less attractive than what?
Less attractive than, say, investing outside of superannuation and undertaking negative gearing outside of superannuation.
Even under the new tax arrangements, should they go through?
I have not done that comparison directly.
So we'd have to do that.
We would have to do that.
So that's based on existing.
But that's based on the existing, correct.
Thank you.
But there's other factors also that would limit the use of self-managed super funds.
There's 38 billion invested in property, as we've just heard, through limited recourse borrowing.
And superannuation has always been sort of an attractive savings vehicle because the government is trying to encourage individuals to provide for retirement, balanced against the equity of the sustainability of the system.
It's a wealth maximisation scheme more than a dignified retirement scheme, if you want my personal opinion.
And there are limitations on contributions to the system, I think, precisely so that superannuation is there to fund retirement income rather than other purposes. As Ms Brown said, the Assistant Treasurer has undertaken consultation on a range of proposals following the Shield First Guardian collapses, and some of those proposals will go to whether there should be additional waiting periods or warnings that are issued before people look to sort of switch or establish an SMSF.
Can I just ask, so when you make the comparison under existing tax policy settings, so not the proposed changes, but under existing tax policy settings, it's basically a 10% effective tax rate, isn't it, after the CGT discount is applied?
Well,
that's pretty attractive.
I was going to add to Ms Pye's comments. As you'd be aware, the government has also changed the taxation arrangements of super recently to introduce the Div 296, the better targeted super concessions, which does impose a higher rate of tax for balances above 3 million and a higher rate again for balances above 10 million that need to be paid annually.
All right, so when Dr Johnson was running us through the figures earlier and said that he didn't have the number of properties, and sorry if this is a question for Dr Johnson, I'm happy to ask it after dinner when Dr Johnson's back at the table, but is that because you don't have them here, or Treasury just doesn't have visibility over the number of residential properties? Are you aware, Ms Brown, or anyone else?
We might take it on notice. We may be able to get some data.
And as part of that taking on notice, I wonder if you could just, if your data sets allow, if you could go back, say, 5 years and just run us through the figures that Dr Johnson was able to give us this evening, and so we can have a look at the trends of what quantum of money is invested into which of those particular categories Dr Johnson was referring to, and if you do have the number of dwellings for that period, that'll be helpful as well.
So just to confirm, it's not just the amount of money in properties, but the number of properties held in self-managed super funds, and then any trend information that we've got.
All right, thank
We'll
you.
take that on notice, Senator.
I've got a different topic, so I'm happy to.
All right. We're 4 minutes before a dinner break. Does someone have a short block they want to do before 7, or we can break early? Short 4 minutes?
Yeah.
All right, go.
I was going to take a chance to
Your lucky
say...
day, Senator McKean.
Yeah.
I beg your pardon?
Your lucky day.
It is my lucky day. You never let a chance go by.
Has that ever happened in an Economics Committee?
Yeah, just welcome the folks from the ATO. The budget papers show there are only 2 taxes that are declining over the next few years, tobacco and the abjectly broken gas tax and PRRT, what is structurally wrong with the PRRT that its collections are going down each and every year, despite the fact that the sector's profits are going through the roof? Could you explain that for the
Senator, if I could, I think the design and effectiveness of the PRRT, also noting when you compare it to the company tax, which the company tax is very effective,
That's right.
but that's actually more of a policy issue that our colleagues in the Treasury are best placed to discuss.
All right. Well, can I ask, does the ATO cast forward in terms of what you expect to receive from...
In terms of revenue forecasts, the revenue forecasts
That's
are...
the revenue branch. All right. Well, perhaps...
Can I just on that, without wasting
yes.
the time, the actual baseline on which the forecasts are done, of course done by the tax office, revenue analysis branch, because they're the ones who actually see the tax returns, see the information, look at that trend going backwards. So that forms an important baseline, but the forecasts forward are done by our colleagues in the Treasury.
All right, well, what I might do, I might come to Ms Brown after the break because we're very short on time before the break, but for the ATO, could I ask, these are technical questions. So when a gas project claims a decommissioning deduction, is that a cash refund to the company? I mean, does the ATO hand over cash instead of carry forward credits because it's at the end of its productive life?
Might turn to my colleague, Secretary Commissioner Hirschhorn, to deal with it.
Jeremy Hirschhorn, Second Commissioner, Compliance and Engagement Group.
Thanks.
And yes, indeed, Senator, is a feature of the PRRT system that where there are decommissioning costs at the end of life and the project is still run by the same entity at that time, there is the potential for cash refunds up to the amount of the PRRT that has previously been paid on that project.
So we are in a situation where gas companies pay, you know, either nothing or next to nothing for years, and then when they decommission, we hand them over cash. Is that the situation we find ourselves in?
So, Senator, without commenting on the policy of the provisions, the PRRT is designed to be a super profit tax over the lifetime of a resource, and decommissioning costs are considered to be part of the lifetime profit and potential super profit of a project over the life of the resource.
Mr. The PRRT is only one. Obviously, they do pay other taxes and royalties.
I'm aware of that, but it's completely broken, Minister, and your government, it's completely broken and your government should fix it. Mr. Hirschhorn, are the refunds, the cash refunds that we've just been discussing, are they capped at the amount of PRRT previously paid, or can they exceed the amount of tax that they've actually paid over a project's life?
So, Senator, they are capped at the PRRT that's previously been paid, reflecting the fact that the PRRT is, in a sense, asymmetric in that it taxes super profits, but it does not give refunds for projects which are not in super profit.
All right. Well, I'll come back to Treasury after the break.
Thank you very much. So it's 7 o'clock. The committee will suspend for dinner and resume at 8 p.m. Thanks.